Session. Here are three movers that we are watching for you. One of the busiest days of earnings season. Honeywell, Merck, Shell, Deutsche Bank, and a whole lot more all reporting results. We're going to break it down for you this hour. We're closely watching regional banks after coming off their biggest one-day percentage drop since March of last year. New York Community Bancorp down big again today. Moody's putting it on review for a downgrade after the company posted a surprise loss, cut its dividend. Stock lost more than 30% yesterday, down another 10% right now. And big tech in focus yet again, specifically Apple, Amazon, and Meta. All three mega cap names are higher ahead of their earnings after the bell today. We're going to get you ready for Apple in just a moment.
You can probably see equities reacting to some ISM data. Let's get to Rick Santelli. Hey, Rick.
Yes, boy, there's a lot going on here. First, let's start quickly with construction spending for December, up 0.9%. Just the best since October of last year. Now let's get into it. ISM manufacturing, the headline number, 49.1, which means that is 15 consecutive months below 50. But here's the oddity, 49.1 still is the best level since October of 22 when it was 50. That's how weak it has been in manufacturing. Okay, prices paid. This is not good, and this is what the markets are going to pay attention to. Prices paid for January expected to be 46.9, and that would have been, what, 9 in a row below 50. Some good celebration there, but it popped all the way up to 52.9.
What up? Good morning.
That's the highest prices paid since April of last year, and you want to keep an eye on that one. 52.5 on new orders. That is a big surprise. We had 17 consecutive below 50s. Not anymore. So 52.5, that's the best since May of 2022. And finally, employment. And this is important because we have the big number tomorrow. Jobs, jobs, jobs. 47.1. 47.1. That means the fourth consecutive month under 50. 47.1 is the best, well, just since December when it was 48.1, but that gets downgraded to 47.5, but still 47.1 is comping to that. And it really is something incredible to watch to see that prices paid jump the way it has. I know it's not the favorite inflation indicator, nor is CPI, but there are some metrics outside of PCE that are running a bit warmer than the Fed may like. Sarah,
yeah, so we'll be watching it. Thank you, Rick Santelli. With better numbers there, pretty much across the board on manufacturing and prices paid. The other data we got today, jobless claims, they did tick up last week. 224,000 was the total, so it was about 12K more than expected. We're continuing to watch that. 4-week moving average moves up to 208. Nothing super worrisome there in terms of layoffs or stress, but we watch the trend moving up. Is not exactly what you would want to see in a good economy, but we're still at super low numbers. The only other one I would mention is we got the Challenger Gray and Christmas
I love
numbers,
all of
so
you guys.
This is just a layoff from a private sector report.
Dude,
and
I've been burning the candle like crazy. I went to bed at 6:30 this morning. Woke back up at 8:30 to put the stream up for you. I'll pop in and out throughout the day here.
136% increase from the cuts announced the month prior in December. Obviously, that was during the holiday season. And they also said it was the highest number of job cuts announced in a January since January 2009. As far as the reason, they quote, mostly cost cutting, which is something we've followed from a lot of tech companies.
Any of you guys that followed any of those put spreads, two major prints yesterday to close on any of those spreads, if any of you guys had those out there.
That becomes more widely adopted and potentially fits into the cost-cutting narrative and the productivity narrative as a potential job replacement.
It's surprising to me, given everything we've heard thus far in terms of the impact of AI and productivity, that it would already be replacing jobs.
We actually
would take a little while.
Yeah, I mean, there's a big debate about whether it's just supply chain healing and full employment, or if it's already getting into the mix. We talked to Lisa Su yesterday. She said it's happening.
Yeah.
She goes, it is happening. Even
IBM
at the
has
margin.
said it too, yeah. that it's happening, and they're already starting to replace the back office. They don't think, I mean, companies like IBM and others won't say it's going to be a net job loser. They're going to use that growth and they're going to reskill and train people. But it's something to watch, I think, in the macro data. It's the first time I've seen that in a release like this.
Yeah, no, it's notable.
It's notable. And then there's the Fed, and now we're contemplating what comes next. Obviously, the money line from Powell yesterday came about a half an hour into the news conference, where he talked about March. Listen.
Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do.
How do you like that year-over-year inflation, huh? How do you like them apples?
Would call the base case.
That kind of took March more off the table, at least for the markets. The odds went down to like 30% from 60%.
You've taken March off the table for me months ago.
Yeah, I thought it was too soon. But the economy's good. And they want more evidence.
Just heads up out there, that yellow line that you see, these are auto pivot levels that we are launching here in the next day or so. So that yellow line right there, I want to show you guys something here really quick. I've got these auto pivot levels now for the stream here, and you're going to get access to them. So remember we've been I'll drop something for you. I'll drop something for you this morning. Hold on here. So you guys, some of you guys have been around here since day one, right? There was a time when I was told that people were paying money for pivots every day. $5, $10. It wasn't a grift or a scam or anything, but people on FinTwit would charge. You'd get levels like $5, $10, something like that. And so we decided to put out a handle called @CaptainsAlpha. And every morning we post pivot points for, I think, 7 tickers. And my daughter, my oldest daughter, I taught her how to write gamma models, pivot tables, Excel spreadsheets, pull the data from the CBOE, and you know what she did? The past 2 years, she's been the person that's been pulling and posting those Excel spreadsheets for you guys every morning. And that led her down a route of wanting to go to school for finance. And, this morning, my daughter is at the University of Michigan, still in high school, taking 200 level classes at the University of Michigan, and working towards, still in high school. Like this, she blows my mind. Went through COVID. And now she's gonna be going to school. At this, it's a between public and private. It's like number 2 research school in the United States. Number 3, I think. It's for public institutions. For public-private, number 23, I think, in the United States. So I want to thank you guys for all these years. Look at that, baby! Look at that squeeze! And you know what? All that has culminated in developing a tool, an indicator that is going to give pivots for every ticker in the stock market. So if you've ever been here since the beginning, whatever, it's culminated in that. Now that she's kind of graduating into doing other stuff, she's actually going to help us with this next step in the process as well, get more involved. As she wraps up her high school. And so this is going to be, it's kind of making me sad because
500 extending gains here, so it's currently up around 0.5%. Also just seeing from a statement released now, Petrobras are to cut natural gas prices by 2% against January.
So the idea here, though, is that she's not going to have to do that anymore in the morning. And you guys are going to get expanded everything. And so it's just really like just marking a moment in my daughter getting older. And then I was working on this tool with her last night, and I'm just proud, I guess, so we're on to that next step. See you guys here shortly. Now, the reason I'm telling you this too is because I think I have to move the actual level PT. I think this is crowding everything, so I need to like kick it to the right or something like that. And if you guys want to put their levels on Tesla, I can, but and I'm going to hop back into the stream in maybe an hour or two. I got caught up last night. I had some roadblocks in the middle of the night. Ended up working until 6:30 this morning, I think, to try to bypass those roadblocks. And so this morning I got sidetracked from finishing the Discord. So I still got to get that work done today. But I will try to stop in, talk Tesla, that kind of stuff with you, give you guys some kind of an update into what to expect into the weekend, the launch, and all that kind of stuff. I want you guys to know something. Today, as of today, we are ready to launch something. Now, all the parts are 99% done to launch. I just got to put them all together. I got like Bork's breaking his ass in the background. I got Q breaking his ass. Joe Donut's breaking his butt. So we're gonna try to get it to you guys today, tomorrow. It's done though. We're launching. We have all the pieces that we need to get there. So we will have something for you. It's a matter of it might be a flaming dumpster for a day or two, but there will be some kind of launch coming up here. I love all of you out there that have stuck by. Binky, I love you, man. So any guys out there in the background that are working, I know there are people out there right now that know that I haven't been sleeping. It's hard to explain to some of you guys. I'm literally working right now. I don't know, 20-hour days. Not joking. No cap on that. Like 20-hour days, eating fucking nails and fucking gravel, literally eating nails and gravel to get this thing done, push it through, come home, all that kind of stuff. So expect some cool stuff coming down the road, guys. Really, truly expect some cool ass shit coming down the road. It's going to be badass. I'm so excited. I'm so happy and excited that it's keeping me just running. And some of you out there are seeing me on video and private conferencing. So you guys see how rough I look right now. I'm like frazzled. I'm not normally like that. So I just want to say thank you for bearing with me and holding my hand as we cross that finish line. So I'll see you guys here in just a little bit, okay? It's gonna be hella rad. It's gonna be hella rad. I promise. It's gonna be so dope. It's gonna be so cool. Like, you're gonna get me in the Discord. Like the Discord, you guys are gonna get me in there every day. You're gonna see me start focusing. One of the coolest parts about this is it frees me up. Like, one of the coolest parts I don't talk about, it frees me up. A lot that's going to be launching now is going to free me up, right, to spend more time with you. So, and I don't mean on just SPY, like spending time with you for big tech, spending time with you on other indexes, spending time with you on GME and AMC and all this other stuff. You're going to get more undivided attention from me. You're going to get the hand-holding for how to grow accounts, how to build accounts. You're going to get that time. How do you make your money? All that kind of stuff. How I trade spreads, how I view the market. You're going to get more one-on-one from Captain through this. It's going to be fucking awesome. I'm so excited and stoked. So let's get it on. You guys have a great day. You saw my post, I hope, on Twitter this morning. I told you guys to buy the fucking dip. And then I talked about the expectations. Personally, for today, I expect this squeeze here. We have range expansion. We should be going into contraction, but we had an STX buy at the close yesterday. So that is triggering this upside move into the open this morning. Dealers were basically neutral, though. There's no requirement to go higher or too much higher off this open. I'm not expecting a full-on trend day, though. As we come into the close today for these ER reports, that can trigger that larger expansion to the upside, or possibly if we get some upside targets hit, we'll possibly swing back down to the downside. And you've already seen this week, right? This whole week basically this whole week was, hey, we ran this all the way up. We've got some great events to take the money and run. You've seen that on ER reports. You've seen it with the Fed. We will also, at some point today or over the weekend, review the Fed decision, right? And dude. I was all over that shit. I had that shit all right. We got to talk about that again in depth because we have people that have been here since day one. We have people that have been here a year. We have people that have been here 2 years. We have people that have been here 3 years. We have had people that have known me since Wall Street Bets. There are people that have known me here for a week, right? Or a month. And some of you have more information than others. Some of you know a lot about this stuff. And you guys heard it yesterday, right? Uncertainty. You guys know that people out there say, and it's normal, it's rational, right? The Fed's favorite tool, that short-term rate of inflation. But the facts are that he is messaging us along the way, and he's looking for that stability in inflation and not that velocity in inflation. And he is looking at that year-over-year inflation for when he actually begins to cut rates. So we'll go over that again this morning. We'll talk, I don't know if it's this morning, but between now and the weekend, that kind of stuff. We're probably going to get together. If I can, I would love to get together with you guys over the weekend in the Discord. We have a new Discord rolling out here over the weekend, and I'd love to get together with you guys, spend some time outside of market hours, answer some questions for you, all that kind of stuff. So I'm fucking pumped, okay? I'll see you guys here soon.
Weaker, and that's primarily due to the guidance and concerns that the June quarter will be a little bit worse for smartphones, but Qualcomm blames seasonality. Sarah?
All right, Christina, thank you.
I love you, Bork. We're trying to bring Bork on right now with us. Dude, I tried to pitch Bork the other night. You guys ready for some crazy? I was trying to pitch Bork the other night. I was like, man, I need a partner in crime on live streams. And we get along great, right? So I made a whole entire intro for him and pitched it to him at like 2 o'clock in the morning 2 days ago to get him excited, to get him on board. So if Bork's here this morning, or not Bork, sorry, Trader Podcast. I think I might have said Bork, but Trader Podcast I'm actually speaking about. So he's in the chat right now. So that's all directed towards Trader Podcast. I love you, Trader Podcast. And Bork, dude, I pitched Trader Podcast a intro for a live stream, and then Bork, I've been trying to pitch him to get more involved in the background as well. No, Bork, I'm doing the same thing in the background. Absolutely. And then we're talking to a bunch of other people too. We're trying to roll David AMS in. We're talking to the gentleman over at Black Swan Earnings. We got all. I can't tell you everybody we're talking to. I can't drop all of it public, but it's gonna be badass. Okay, badass. Career Low in the house right now. Good morning, Career Low. It's gonna be badass. All right, let's talk. I gotta go. I'll be right back. Oh yeah, breaking news. If any of you guys know how I feel about Peloton, shares plummet 20% as fitness company gives dismal outlook. Joe Donut, if you are out there right now, what did I say? I will not be happy until it's sitting on a shelf in a Walmart at the checkout counter as seen on TV thing.
On the prior, minus 326 BCF.
Frame the potential for this category. Is it any more important than it was when they launched a watch category?
I think the watch took off really fast. I think the Vision Pro, obviously the price point is much higher. I'm sure they're going to talk about it. They're going to be excited about that category. But I think from a stock standpoint, I would say at this point it's kind of immaterial.
One other note here on the gamma chart for SPX. I'm going to leave this chart right here. See where it says 30-minute gamma? Just above it, this is the gamma flip right here. Okay? You do not, if at any point you see any kind of selling down here and more of this kind of stuff, that triggers CTA selling down there. Okay? You really want to be seeing this get defended. If you're a bull, you need to defend this. All day long, this is where you buy the dip, okay? You buy the dip here, buy the dip. Buy the dip. Whenever you get caught on tops, if you're a bull and you're getting caught on tops, it's because you are not buying these dips here where it feels dangerous. You buy these dips with stops underneath until you're proven wrong and it rejects down here. You get your stops on, then you turn into a bear below, okay? And then this is real bear. Right down here is where you get really bearish down there. You know, all right. I'll say something about Peloton. I loved Peloton. What pissed me off, we were trading. I was trying to short Peloton on the ground. What really pissed me off was that they had many opportunities as the United States reopened to turn that brand into an outdoor brand, like buy a manufacturing, develop a manufacturing plant, anything, partner, collaborate with like a bike company. I was fully expecting after the reopening to be able to like buy a Peloton, a quality, like a Giant type bike or something like that. Didn't have to be the best, but like not a shitty bike, but be able to I mean, it was a no-brainer for Peloton to make that jump into becoming a reopening outdoor type company. And they, in my view, they squandered that. That really rode my ass. That's why, if you want the real reason why I don't like Peloton, I felt like it was a squandered opportunity. It was perfect for the shutdowns, and it was a perfect tie-in to a reopening for biking outside. Yeah, I was mostly upset that I'm sure that there was a C-suite or a C-suite decision to not reinvest all those gains into the jump to reopening the United States. So I've got nothing for him. I got no love for him today. And yeah, the subscription thing, yeah, that's a problem too. I agree with you on that, Bork. All right, I gotta stop reading the chat because I already know it's gonna get freaky. Like I can't. Like I'm gonna be like I'm not even gonna get. I'm just gonna sit here and chat all more with you guys. I will be right back.
Harmony in OPEC Plus.
NBC.
Despite the approval of those much
Matty
anticipated
Phillip, good
ETFs,
morning, brother. How are you?
The first month of the
Good
year,
to see you, my man.
Let's get to Dom Chu, who's been tracking that action. Morning, Dom.
It's like buy the rumor, sell the news kind of situation, right? So remember, at the heights that we saw running into the ETF approval process,
my expectation on Peloton is
around the 11th.
That my expectation truly is that it becomes
that we saw over the course
it
of
really.
the last few
I mean,
weeks
they
here
might
in
be able to
that
save
run-up
themselves, but I
towards the
really do
approval
see
of
them
those spot
becoming
ETFs. We've now
a lower tiered, just a brand, right?
At this point
You're like, oh yeah, that's Peloton over there. We can afford that now. Let's go do it. You know, that kind of stuff. But they had a real opportunity if they had teamed up with some kind of like a cross, like a gravel bike company or a brand that wanted to launch like gravel bikes or something like that. I thought that was a huge missed opportunity when their brand was considered king.
Now, speaking of those spot Bitcoin ETFs.
Yeah, exactly, that shake weight shit. Exactly.
These are right now the three biggest ETFs that track Bitcoin.
Morning, John Haggerty. Good to see you, brother. Stacey F. Good morning, Binky, Brad Armitage.
The Bitcoin Trust for
everybody's out there.
$2.8 billion. And the Fidelity Wise Origin Bitcoin ETF.
Bork said they're in mid-tier apartment complexes and co-work gym spaces
and then
now.
Take a look at just how these ETFs trade compared to the underlying Bitcoin that they hold. According to data from YCharts, who's looking at the premium and discounts
good morning. Good to see you too.
To their underlying Bitcoin holdings. Right now, the Grayscale Bitcoin Trust is just about flat. No premium or discount in the trade. The iShares Bitcoin Trust is trading at a 1.5% discount to what the underlying assets are worth. Same with the Fidelity Bitwise Trust here. So if you take a look at the premium and discount to NAV, these ETFs, they
just
are
a programming note. There's probably a really nice 2-day like fly you could put on here, like right where we are, just a sweet, sexy, wide fly with the Friday expiry. Man, this looks like a great place for something like that.
For that deep dive. Still to come, lawmakers slamming Mark Zuckerberg and other social media CEOs over the potential harm their platforms have on kids leading to a surprise apology from Zuckerberg. Our next guest was an early investor in Facebook. He has a warning for the social media chiefs. Stay with us. Back in a moment.
Yeah, career low. I think the IP is still valuable, but I think it has to be taken out of their hands. I think the brand is suffering all along the way. I think the brand needs to be picked up by someone that you can trust. Yeah, Bork. I was thinking here. I'm like, if you thought about it, let's say if you were to think about a fly here, you could rein in the downside legs of the bottom of the fly. You're likely not going to trade 468, right? Like 478, maybe 475 on the downside, and then upside you could do a whole bunch of upside for any kind of an upside or any kind of a squeeze into Friday's close. That seems like a no-brainer here, like just an easy trade. The Peloton, I saw some breaking news on Peloton. I don't know that it was exactly correlated with their ER release. I have to dig it out and find out what they said. If you have a chance, take a look at my profile this morning and the posts that I made on Twitter if you feel like you don't know where we are in the market right now.
One minute remaining.
There was an alert on CNBC here, but it wasn't about earnings or anything. I don't know exactly what it was. I can't find it now. It's gone. But they had a few words about it.
Welcome back. I'm Silvana Hanau with your CNBC News update. A London judge threw out a lawsuit by former President Donald Trump today that accused a former British spy of harming his reputation. The judge said there was no compelling reason to allow the case to go to trial. Trump filed the case against Christopher Steele's intelligence company, claiming Steele created a dossier in 2016 that contained rumors and uncorroborated allegations that caused a political firestorm right before Trump's inauguration. Farming protests in Paris spilled over into Belgium today outside of the European Union's headquarters. The farmers are blocking traffic with tractors and burning bales of hay to demand leaders take action on rising prices and increasing regulations they say are harming their industry. And Major League Baseball and all 30 of its clubs are coming together to replace a statue of barrier-breaking legend Jackie Robinson. Thieves stole it last week from a youth baseball field in Wichita, Kansas. A city worker later found pieces of it on fire at a local park. Police are still searching for the culprits. Guys, back to you.
Thank you, Silvana. Well, Mark Zuckerberg and other CEOs of social media companies were grilled on Capitol Hill yesterday about the impact that their platforms have on children. Senate lawmakers accusing them of having blood on their hands, which led to an unexpected apology from Mark Zuckerberg.
Let me ask you this. There's families of victims here today. Have you apologized to the victims? Would you like to do so now? Well, they're here. You're on national television. Would you like now to apologize to the victims who have been harmed by your product? Show them the pictures. Would you like to apologize for what you've done to these good people?
I'm sorry for everything that you've all been through. It's terrible. No one should have to go through the things that your families have suffered. And this is why we invested so much and are going to continue doing extremely efforts to make sure that no one has to go through the types of things that your families have had to suffer.
According to the CEO,
Elevation
Shell
Partners
cut
founder Roger
3,000
McNamee joins
jobs
us
in
now.
its
We'll discuss the
contracting
hearing
since
and your
mid-2023.
thoughts about overall policy going forward. First, just give me your reaction to Zuckerberg's decision to turn around and address those parents in that way.
First of all, I admire him for doing that. I think that it's really important to acknowledge responsibility in this case. So I tip my hat to Mark for doing it. I don't think the apology itself helps at all, but I think it was an excellent gesture. I think from an investor point of view, when you look at that hearing, I think the two things that really stand out are, one, the tone of the hearing and the presence of the families and the large numbers of young people in the room gave this particular hearing more gravitas than the ones we've had in the past. And so I think there is some kind of mark it's going to leave. That said, and this is the second point, and I think the key one for investors, there is no reason to believe Congress is going to act on this year. In fact, it's not clear when, if ever, Congress is ever going to act. Facebook, or really Meta, and the other majors each have allies inside Congress. You know, Leader Schumer has been an absolutely reliable defender of Meta's interests in Congress and has the ability to block things from coming to the floor. And so when you look at it, I don't think investors need to worry about that. I think what they need to worry about are the lawsuits that are going on, particularly the ones of the state attorneys general, because I think the cases going after design are a real threat, and it's almost certain that they're going to lose them. And I think the other guys have other legal cases that they're going to lose. And
Roger, why is it certain that they're almost certain that they're going to lose them? Thus far, they have yet to. I mean, they hide, not hide. They use 230. They use 1A. They use as a legal justification. Why is that going to change?
So, David, excellent question. So we've had the first example of a 230 case being won by the plaintiff, which happened just like a month or so ago. The extraordinary Carrie Goldberg, who has been a defender of women who've had their privacy invaded or had their lives turned over, has won a case, and I think it's the first. And here's why I think it's different. 230 was created to protect internet platforms as effectively common carriers, saying they were like a telephone company and they had no control over the content.
Austin says this is a dangerous
cases that are
moment
coming
in the
up
Middle
now
East.
are about design. And design is something over which internet platforms have 100% control. And the cases against Instagram, against Meta's Instagram division, which there are a total of 10 cases. One of them is a group of 33 states in federal court, the other 9 individual states in their own home courts. They all allege that Meta allowed the design of Instagram, that effectively Instagram design was there to addict children and to leave them vulnerable to all kinds of predation. And the problem here is that every time a court rules with Meta, what they're saying is the First Amendment in Section 230 entitle internet companies to knowingly harm their users for profit. And, you know, politically, I just don't think that's going to hold up. And eventually some judge is going to go, wait a minute, these are conscious choices made with full information. And we have in the public record very clear evidence that the executives of Meta knew what they were doing in the design of Instagram. And as a result, I don't think there's going to be any place to hide. They may win a few more cases, but they're eventually going to lose one, just the way that the tobacco guys and the gun guys eventually lost cases. I think the stock market effect, when that happens, will be similar. And if I were an investor today, I'd be at least planning for that.
Doesn't look like that's happening with Meta shares near an all-time high leading into earnings today, Roger.
Totally. That's absolutely correct. And my point here is you don't want to wait until after they crash before you share this insight.
I get it.
Prepare people.
But I
So
think
when it happens-
doesn't Congress get the blame here? Honestly, I mean, Senator Amy Klobuchar, when she compared this to Boeing, and she said nobody questioned the decision to ground 700 planes. So why aren't we taking the same type of decisive action on the danger of these platforms when we know these kids are dying? How many child safety laws has Congress passed in the last few years? Right. So
you guys know this because you first let me raise these issues in August of 2017, and literally nothing has happened. So Congress clearly has blood on its hands also, as does both the Trump administration and the Biden administration. But the reality is that these companies are doing this knowing that the designs they make are leading to harm, that the harm is inevitable. And those are choices they're making. So ultimately, they're the ones who are most responsible for this. But you're absolutely correct that Congress has totally failed in its responsibility to protect its constituents.
Yeah. Do we end up with some sort of a large fund then of some kind, a la tobacco? I mean, I don't know. What ultimately, if you are correct, Roger, what is the impact? What does it look like, a settlement?
Well, to my perspective, the right strategy here, because this is a problem that is continuous, because every year there are new teenagers, you have to change the problem. You have to change the design at the source. You either have to decide that there's going to be a much higher age limit for using social media, and or you're going to prevent the capture and exploitation of data about minors, and you're going to have to sit there and have penalties that are maybe felony penalties as opposed to civil penalties in order to change the incentives to get people to focus on product safety. And that's a lot to imagine Congress doing at any point in time, much less in an election.
Yeah. Roger, we don't have time to debate it, but I know you're going to have an opinion on Musk's pay package, on the judge's decision in Delaware, on his potential move now to reincorporate in Texas. Where do you come down on it?
Look, if I am an investor looking at this thing, the one thing I would observe is that Tesla, at least, is really a phenomenon of Elon Musk. And I think there's an interesting question to ask, whether changing the pay package doesn't actually motivate him. I mean, one would hope that this would get his competitive juices going and that he would try to, really buckle down and do something. Because the problem is he's been all over the place, right? I mean, he exhibits a lot of symptoms of conditions that would normally require medical intervention. And, I don't know the man, but he's created some amazing things, and he's in the process of wrecking them. And so I'm hoping the judge's thing will act as a warning and just say, hey, dude, this is your opportunity to, prove that this was no fluke.
All right. To be continued,
Western
Roger.
Alliance
Always
Bank
appreciate it.
falls
Thanks for your time.
10%, the most since May the 4th.
Still ahead. More on the markets as Fed Chair Powell pours cold water in hopes of a March rate cut. So what comes next? Apollo's chief economist joins us with his predictions. With stocks pushing higher here, the Dow up 113, S&P also rising a little more than 0.5%. We'll be right back. Welcome to Squawk on the Street. Welcome back, I should say. Stocks rebounding nicely a day after Powell said a March rate cut looks unlikely. Our next guest says that uncertainty about the ongoing soft landing will keep volatility elevated. Apollo Global Management Chief Economist Torsten Slok joins us now. Powell was pretty careful not to declare victory on the whole soft landing idea. Torsten, are you still not convinced?
Well, I think he was quite balanced, saying on the one hand that things are moving in the right direction. He expects inflation to continue to move in the right direction. But at the same time, he did just simply say that it's just a little bit too early to come to the conclusion that we can already begin to cut rates in March. So from that perspective, he was really telling us rates are going to stay higher for a little while longer, at least in terms of what markets have been expecting before the FOMC meeting.
I guess one of the questions then out of that is it going to be the 3 cuts that the Fed forecast will happen this year, or is it going to be the 5 that the market is forecasting?
Well, that's a very important debate, Sarah, because if you think about it, what would the economy look like if the Fed were to cut 6 times? I mean, would that be an economy that's really weak, with very weak non-farm payrolls, weak consumer spending, weak GDP? Or can they just normalize interest rates and cut rates 6 times without the risk that this might create a big rally in equities and in credit and in risky assets more broadly? So therefore, I think that they are right, that they will cut rates 3 times this year. I think the market has been getting ahead of itself with pricing in many more rate cuts, because it will be associated with a much weaker economy if they were to cut as many times as the market currently is pricing.
Well, but that's not necessarily what the market's saying. The market's saying that that inflation has been fought and won. And do you not buy the idea that if that's the case, then they have some room to be less restrictive to preserve the soft landing?
True, and if you take their framework, which they have used for decades, namely the Taylor rule, which simply would say that if inflation comes down, nominal rates can also begin to come down, and therefore real rates can stay more steady. Well, then that would certainly suggest that they should begin to cut rates and potentially cut rates a bit more than even what they are saying. The problem with this is that that does not take into account the reality that when they do begin to cut, it does begin to raise the risk of a very significant boom in capital markets activity, in IPO activity, in M&A activity, in issuance in IG and high yield and loans. So if the Fed says green light, you can basically go ahead and take the risk that you want. That will come with the circular effect of creating a boom in housing, in wages, and therefore ultimately maybe even in the labor market. So yes, I understand what you're saying, and I agree that when inflation comes down, nominal rates should also be coming down. But the reason why I think they will proceed cautiously is because of the effects of their actions on risk-taking in financial markets.
Torsten, great chart from you this morning looking at the percentage of household debt that's fixed, almost 90%. You argue that's one reason why the transmission mechanism has been so weak. So are we really at a stage where we're just waiting for the job market to crack? And is that happening?
I mean, it depends on how much weight you want to put on the jobless claims numbers that just came out this morning. And ADP yesterday was also not particularly good. So let's see what we get with non-farm payrolls tomorrow. But if the job market starts cracking, and if we do begin to see a more significant slowdown in the labor market, then it will set off a number of chain reactions, not only with housing beginning to slow down, but certainly also we're already seeing the consumer being vulnerable. Highly levered consumers are seeing delinquency rates at high levels. You're also seeing highly levered companies are seeing default rates at high levels. So the vulnerability, and of course, the main issue is in commercial real estate. If people start losing their jobs and therefore office space also takes another hit, then we could begin to see more of these things that we have talked so much about over the last year, with the banking sector also potentially being in trouble. So it is a more fragile slowdown that we're seeing here as a result of this. Yes, so far so good. But if the labor market does crack, then that would indeed bring along a number of other problems.
But you think that would have to be pretty violent to resuscitate the March argument, yes?
So here the debate, of course, is that, well, if the labor market does begin to weaken more materially tomorrow, then I do think that they will have to put a cut in March back on the table. But the bigger discussion really here is the very important one, that every market at the moment is pricing a soft landing, and it really is almost Goldilocks everywhere. And what I'm basically pointing out is that there are also other scenarios that don't have a zero probability. There's certainly a scenario that if we do get a weaker labor market over the next several months, that will then bring along a number of other things that can increase the risk again of a harder landing. So we're not out of the woods in terms of declaring victory, neither on inflation getting back to 2%, but also not on basically declaring victory that this will be a soft landing. There's still a lot of things that can happen, but also to the upside if they begin to cut too quickly and the economy begins to rebound. So the bottom line is soft landing. It's almost priced with 100% probability, but the two other scenarios, namely reacceleration and hard landing, they certainly do not, in my view, have a 0% likelihood.
Well, while we're talking about potential risks, I mean, I think it's worth pulling up the regional banks and the New York Community Bank Corp, which is not necessarily a systemic issue right now, but it does revive sentiment concerns around regional banks and gives us a little deja vu back to March. Do you worry about a share price that has basically been in free fall here and these problems?
Yeah, so the banking sector holds about $3 trillion in commercial real estate loans. And to your point, Sarah, if you look at what has happened to the price per square foot for office, that's down about 40% from the peak. So you can quickly begin to figure out those who hold office and more broadly commercial real estate that has declined in value. They, of course, are likely facing some challenges, in particular, if the economy does begin to slow down. Note that we have had these banking problems in a relatively strong economy. I mean, page 1 in your IMF textbook would tell you that if you start to see a slowdown, and in particular, if you start to see a recession, it normally comes with more problems in the banking sector. So the fact that we have had problems in the banking sector even before the economy has started to slow down, that does answer your question, and that does tell us that, yes, there are still fairly bumpy roads ahead, in particular when it comes to commercial real estate.
I mean, don't you think it's a little strange that they took out, I don't know why, they took out the U.S. banking system is sound and resilient from the Fed statement? I would assume they just did it because people stopped worrying about regional banks. But that was new in yesterday's statement.
So there were a number of changes in the statement that indeed would lift some eyebrows in terms of, okay, what exactly are they telling us here? And the fact that we now for some time, at least for the last several months, have been saying, okay, now maybe the economy is not going to slow down. Maybe, and to round off this discussion, maybe it really is the debate that, well, we all went into 2023 saying, oh, recession is coming, recession is coming. Now we all went into 2024 and say, oh, there's no recession, it's a soft landing. Maybe we could have the exact opposite scenario of last year where we again, well, everyone assumed there was a soft landing, and maybe the slowdown is finally coming in 2024. So it would be a little bit ironic that the pendulum swung too much in the other direction.
Yeah, consensus rarely right, I guess. Thank you, Torsten. Appreciate it.
Thank you.
Torsten Slok.
Coming up in the next hour, the CEO of one of the world's largest oil companies, Shell, as shares rise on this full-year profit beat, higher buybacks, a div hike. Not the only earnings name to get some notice today. Check out shares of Ferrari, a big outperformer over the last year, adding to some gains today. We're going to talk about why in just a moment.
And New York Community Bank Corp extends losses down 12.07%.
Healthy life.
Look at shares of Ferrari racing
Treasury
higher this
5-year
morning after
yield
strong
falls to
numbers, pretty positive outlook,
3.792%,
and
the
some
lowest
big news
since
in the world of
December.
Formula One. Let's get to Robert Frank with the breakdown. Morning, Robert.
Sarah, Ferrari reporting a beat on sales and meeting those earnings targets. It was the 2024 outlook, though, that analysts really liked. Ferrari reaffirming that 2024 guidance for 7% earnings growth to $2.6 billion. CEO Benedetto Vigna saying there is no sign that the wealthy are slowing down on buying Ferraris. He said, quote, demand is very strong into 2025 and 26. Quote, there is not an impact of any kind on our clients that he could see. Interestingly, hybrid cars now account for 44% of all Ferraris sold. That has doubled over the past year. They will launch their first ever EV in 2025. Now, a lot of their profit growth right now is coming from personalization. That's buyers customizing their cars and selling a lot more expensive models. There was no mention, by the way, of Lewis Hamilton joining the Formula One team. Reports say that he could join in 2025. But if you look at commercial activities, that includes sales of clothing, merchandise, brand partnerships, and racing. They're about 10% of sales right now. Vinny is saying F1 could actually be lower this year due to higher costs and spending. Now, Ferrari's win at Le Mans, that's the first time they competed there in 50 years. That was celebrated. Very important for the company's racing DNA. So, Sarah, if you look at their market cap, Ferrari now, it is 50% higher than Ford or GM at over $72 billion.
It is truly unbelievable for an auto company. I would say that Lewis Hamilton news, Robert, is having a big impact today. You know, Lewis is the biggest star in Formula One. He's an international superstar, 7-time champ. He's expanded the tent as far as the audience. And remember, there was all this drama with Toto Wolff, the head of the Mercedes team, last year about Lewis resigning, and we interviewed him on this show about it. Just take a listen.
Well, we're still talking. You know, we get this question basically every race weekend, and we have such a good relationship that we dread the moment we need to talk about money. So it's going to happen soon.
We need to make some news here. Soon? Do you have a time frame of when that's going to happen?
I think we're talking more days than weeks.
More days than weeks.
Yeah, but if I commit to a date now, then everybody's going to ask in Montreal on the weekend, so what's happened to the days?
You should get it done before then, it sounds like.
Yeah, we're trying hard, but at least I get to see him today. Maybe we can talk about it.
So that was last June. Turns out they did sign. They signed Lewis for this season, 24, and then I guess an option for 25. And it sounds like he took the option to go with Ferrari, which is only going to make for a bit of an awkward start to the season this year, where he'll be racing for Mercedes. It's a huge deal, Robert. And if there's one thing I learned in making the documentary about F1, the brand halo that these Formula One teams get when it comes to selling, you know, the big picture, what you're reporting on, the earnings, it's there. I mean, it's win on Sunday, sell on Monday, and there's a serious correlation. And I think just Lewis's star power to Ferrari is a big deal.
The one thing I'd say is Ferrari hasn't won a constructor's title in 15 years, but the sales of cars have more than doubled. So this would be icing on the cake if they can get him and expose that brand even further.
Yeah, good point. Well, people are certainly excited about it. Stock's up another 9.5% on all that good news. Robert, thank you.
Yeah, always a marvel at the market cap, as Robert pointed out, approaching $100 billion for Ferrari. All right, don't miss the CEOs of Shell and Royal Caribbean. They're going to be in the next hour. Of course, our live market coverage also continues right after this.
Treasury 5-year yield falls to 3.78%, the lowest since June. New York Community shares down.
Guests.
Strengthening these dailies with UK cases inflation risk at home and abroad. The Red Sea conflict and wage pressures.
Good Thursday
may
morning.
boost
Welcome to
prices.
Money Movers. I'm
UK
Sarah Eisen with Carl
economy
Quintanilla live from
activity is
Post 9
beginning to
of the
pick
New York
up.
Stock Exchange. Huge hour ahead for us today. The CEOs of Shell, Novartis, and Royal Caribbean all joining us on earnings this morning. Plus, we will talk to the CEO of Amer Sports going public here today. A debut investors are hoping will turn around a muted IPO market.
Let's begin with the market. Stocks have lost some ground here. Dow's gone red as the street digests what we learned from the Fed yesterday. Powell, of course, taking a March cut off the table. BNY Mellon's head of U.S. macro, Sonia Meskin's here with us at Post 9. It's good to have you back, Sonia. Thank you for coming in. Today's a day where people are watching the bank weakness, some soft labor data, and wondering if that was a mistake, if they're doing a transitory all over again. What's your view?
Well, you know what? I think to some extent the Fed doesn't, in fact, know when they're going to go. And they are not necessarily averse to keeping the market in the dark as well, because it is unclear how the data will evolve on the inflation side and on the labor market side. It does look like the labor market is somewhat back to the conditions where we were in 2019, but it is still quite tight. And on the services side, inflation is still strong. So to us, it's actually quite understandable that they took March off the table.
I know you're not a bank analyst, but were your eyebrows raised when they took soundness off the statement?
They did an excellent job rolling out a very effective facility very quickly. That said, smaller regional banks are obviously still suffering. I don't think they're not acknowledging that. I think they're just saying the industry overall is fairly sound, and credit provision and reserves haven't been as adversely affected as was feared in March 2023.
Does the number of cuts and when they happen affect your market outlook for this year?
Yes, of course. But really, growth is also very important, right? If the employment and growth components hold up, then if they do fewer cuts against that background, risk assets might still hold up well.
Is that your view, that that's going to happen?
It's our central expectation, but of course there are risks around that.
And how many cuts should we expect?
We do think the market got maybe a little.
All right, let's have a little chat really quick. I wasn't here for a minute. I was taking a shower, but let's talk about something this morning. So we said, don't expect too much upside, right, on the day here. We are on the first of the month. So we should expect on first of the month some sort of consolidationary phase over 1 to 2 weeks. But this is more important, more importantly, what I want to say to you is, any of you that have been this stream for a long time know that as we approach resistance levels on triggers, that's right here, right? You take the money and run as we approach major triggers. That could be an hourly trigger. You guys out there watching right now? Daily, it could be an hourly trigger. Can be a daily trigger. Right? It could be an hourly trigger, daily trigger, weekly trigger. Doesn't really matter. Major triggers, okay? Weekly trigger. So on and so forth. Now, the reason we take the money before we get, the possible outcomes here are that we sell early, which this is what that is, or we break above. We normally come back down, though, right, and consolidate, or consolidate and even roll down to the downside, okay? There is the potential for us to break above, consolidate, and then move higher. But the reason for these triggers is for you to know where those take profit places are, right? So you try to take the trade early, then you take your profit here before you reach, and then you re-enter the trade again if you're still bullish once we break above, consolidate, and get above the previous high on a break above, right? So let's take a look at this really quick, even closer here. So you should have taken the well. At least you guys know that if I'm trading my own rules, you know that I exit the trade before we ever get to a trigger. Some of you out there I know will take some of it and leave some runners on for that last little bit so you don't get torched, just in case we do break above. Let me turn that down a little bit here. But generally speaking, you're zone-to-zone trading on these triggers, right? So let's say you're buying the dip down here. As we come up here, you take your trade off, right? Now we're not talking condors or flies or that kind of stuff. We're talking, taking a trade up here, right? The price target right now of the hourly trigger, right? So you take your trade off right here, and if let's say we did break above, right? Sometimes I'll see some of you guys be like, oh, I should have left it on for that last little bit. And truthfully, this is the trade right here. This is the high probability winner, right? Now, let's say you're like, I should have stayed for that last one right there. You're still waiting for that consolidation and that new high to break above the previous high. You'll get the pullback right here. You'll get the 1 and 5 minute trigger following to the upside. You get that 1 minute coming up. You'll get that. You get the 1 minute coming up right there. You'll get the 5 minute coming up as well, right? Coming up here, and then to re-enter the trade once again. Sorry about that. Right in there. Does that make sense? You'll like all this action in here. You don't get involved in. You don't get torn up in. You jump back into the trade once it's confirmed that we're going higher. Now, we just rolled on this trade, right? So if you're the smart trader not pulling a CaptainJimJames and you came in here, you took your money and you didn't get caught. You're like, oh, hell yeah, Cappy, I didn't get caught, right? Let's say you did get caught. Let's say you're like, hey, Cap, I was long, man, and we got rejected here. Where is your stop, right? The big next question becomes, where is your stop? And it's down here somewhere. You have the cross happening on the 1 and 5 minute trigger. This should stop you out from this run to the upside, right? At minimum. So you're managing either being flat or whatever losses you had, or taking whatever profit you made on some kind of a cross right here. And what do we have that happened here? We have a failure to get above the hourly trigger, right? We have a 1 and 5 minute bear plane right here. That's a bear plane is when you get a cross of the 1 and 5 minute trigger. That's right here. Whoop. Right? So you get that cross right there. And what has to happen now? We know what has to happen, right? We have to come back and back test this bear plane. You don't just like blast down and never come back up again. So that's what's going to happen. It's going to come back up right now. Price will come back up and test first the 1 minute and continue to its downside, or it's going to break above the 1 minute and then test the 5 minute right here and then continue down to the downside. And when these tests, if they're successful or they fail, you'll go down. If they come back up and we reverse to the upside, you'll then get a bull plane up here and we'll start heading to the upside and try to get above this hourly trigger. So this is all supply, demand, strength of buyers and sellers. Another thing that you should be noticing here is what? And that is we have some coiling action here. You can see it, right? We have range expansion that's building as the day progresses, right? So on Twitter this morning, I talked to you about how we're opening this morning, and I'm not expecting that range expansion on the opening bell, but I'm expecting it as we get towards the end of the day into earnings, where we get a huge move to the upside or a huge move to the downside. Now, downside potential, we know there's a support level here somewhere. We know that the daily trigger, sorry, show this down. Daily trigger is down below here at 477.88. So right down here. We know there's some kind of a floor down here currently, or we expect there to be some kind of a floor down here. So as this range expansion takes place today, right, when I was saying to you earlier, you open yourself a nice fly, open a fly down below the daily trigger, and you know that you can probably have a nice, really, really wide upside previous high from yesterday as the other side of that leg, right? So you put your legs down here. You put your other legs all the way to the top, and you don't really care what happens in here, and you really don't care what the result is into the end of the day today for Thursday. We also know something else here, and that would be that, let's see if I got that right there. Let me mute this right here. Mute that and mute that right there. We'll make this a little bit bigger here. That a little bit bigger right there. Down there, that's better. That's better. We have the previous highs up here. Look at all that range up here. You have all that space for price to go higher, right? Price. We see that also in the triggers that we've got range expansion today. You can see it. This is the expected downside move. This is the expected upside move right here. And so you can make some, and if you ever want to do some legs, I got some STX buy and sells, or sells and buys lower and higher to set up these butterflies. And you've got this one more down move right here. You see that one here? This is S3 down here, right? So as we come into this close today, we've got two major reports coming out, right? It looks like doom and gloom as well, doesn't it? When you're on a 1 minute, that's all squished over. But in reality, you just have some range expansion that's starting into the end of the day today. Now, what's another thing we can extrapolate here? And that is on a weekly basis, are we bullish or bearish? And as we come into Thursday, you tend to get monetization. If we're heading down, you get monetization to the downside. If we're heading up into the end of the week into Thursdays, you tend to get monetization to the upside on Thursdays, right? Whenever we're like running as a bull and I'm like, we've been manipulating all week long, where everybody's scared that we're going to crash, we're going to roll over, but we're actually heading up into Thursday, you'll see that monetization into Thursday. So my expectation today would be some of this kind of stuff, right? And into the end of the day, looking for some kind of a monetization to the downside. So am I bullish into the close today? Not necessarily. It would not shock me to see this range expansion continue into the end of the day, into 4 p.m., right? Somewhere in here. Whoop. All right. And then this is the 4 p.m. hour right here. Would not shock me to see the end of the day doing this kind of stupid shit right here. And then in the day, whoop, right down here. And we close at 4 o'clock, 4:15 down here. You tag in that support down below here. They're setting you up underneath the two gamma levels. They'd be setting us up underneath the gamma flip and the CTA sell signal. And what would that leave us for Friday? Maybe with some more downside to come into Friday, okay? Maybe not, or maybe setting it up for next week. Maybe not Friday, but next week coming up, okay? So what happens, right? You get a little bit more blood on Friday, then we bounce up at the end of the day on Friday, and then boom, you get the real move down into next week. So we might have some corrective behavior into next week coming up. It looks like it's setting up right now, some corrective behavior next week. We'll look at the seasonality calendar at some point, but watch how this is coiling right here, right? Coiling. Would not shock me to see us trade back up here and keep bouncing off and kind of fade slowly to the downside with this hourly trigger. You can actually see some other insights here as well. Price is underneath the hourly trigger. Hourly trigger is still heading lower right now. Let's take a look on a 30-minute basis on SPOOs. Take a look at on a 30-minute basis on SPOOs down here. And let's look at the hourly and the half an hour velocity. So when you see this velocity down here on a half-hour basis and you're intraday trading, you're looking for some kind of a bottom for a dip to buy. Now, one really bad thing here is that daily velocity is we're experiencing lower highs. This is predicting some more consolidating and corrective behavior into next week. But on a daily basis, the half-hour and hourly velocity is predicting some kind of a bottoming action taking place up here. I want to show you that in previous examples here on a half-hour basis. I want to show you one right here. Whoop, right down there, right? You see this right here? Coming down here for a turn. We got another little one down here, and whoop, you got another turn right there. And we're a little bit long in the tooth here in this hourly bearishness down here on this expansion, this coiling and expansion down here. So I'm going to expect a dip buy still today at some point. So we're going to look at this back now on a 1 minute basis. We should be looking for some kind of a bottom. We're going to go to a 1 minute basis here. And what are we going to be looking for here? For some sign of a dip to buy for the next trip higher is a flattening of the white and the red, the 1 minute and 5 minute trigger. 5 minutes still not chasing yet. 1 minute, though, is still vertical. I'd really like to see this 1 minute begin to flatten a little bit. So see how it's vertical right now? I'd really like to see some flattening action and price trying to recover here, and then watch this move to the upside here, okay? And we already know that velocity is bottoming on the 30-minute basis, so I'd be expecting another dip buy. So like buy the dip, sell the rip, buy the dip, sell the rip, buy the dip, sell the rip, kind of a situation setting up right now. And we'll take a peek here on, we'll take a peek right over here. We're just going to keep our eyes on some of that supply to the downside. Yeah, see it right down here. There's a stink bid down here. There's some demand right over here, so it wouldn't shock me to see us bounce really soon and head back to the upside. It's kind of why I like the fly here I like the butterfly into Friday right now, because I'm expecting that range expansion, but this bouncing back and forth consolidation in the marketplace here coming up. So I'm going to open that one back up for you. Remember that downside target. That expectation is 478 sometime today or into Friday. And then upside, we know right now that sellers are stepping in every time we slam into this hourly trigger, right? We've got examples of it here, 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 and right up in here as well. Matter of fact, I think yesterday I said nice selling off the hourly trigger, and they're doing it again. So if I was a seller, has this been working? Fuck yeah, it has. Every time we hit that hourly trigger, they're just teeing off on it. So whatever bouncing we have here, I would not be shocked to see us come back up here, whoop, and then trying to step back in and sell this again, or even down here and try to sell this again and staircase us down into the close today. Oh, yeah. Oh, yeah. Game changer. Game changer with the pivots. And you want to see, I got some, you want to see some cool shit? Hold on here. I got some cool shit. You guys want to see some cool shit? Here, I got some cool shit for you. I got to show you guys some cool shit. You know, it's kind of messy right now, right? We've got the zigzag channels and all that kind of stuff. You know what I'll do is I'm going to get rid of the channels, okay? What is I'm going to do here? I'm going to get rid of the triggers here, right? So when you guys are going to get access to this, right? I'm going to remove this right here, right? And I'm going to go to my indicators. I'm going to go to my invite-only scripts, and I'm going to go with triggers without channels. I'm going to close this up right here, right? So we can clean up the screener, okay? So we've got the triggers now with no channels. Nice clean screen, right? We're on a 1 minute basis here. We've got our levels as well in here, right? Our pivot points. But here, let's do something cool, okay? So follow my cursor, as the GOAT would say, right? Mr. Yen, right? We're gonna go over here and check this out over here. So we're gonna turn that off, right? And we're gonna go to the pivots. Yeah, let me see here. Pivots right here. We're going to click on that bad boy right there. And we're going to switch the pivot type. We're going to go from traditional pivots points, right? We're going to go to Fibonacci's, baby. Whew. We'll go there right there. We'll do some Fibonacci's. And now you've got Fibonacci pivot levels instead of daily support. I know a lot of you guys like to follow EW and all that kind of stuff. And this shows you your actual Fibonacci levels here, okay? On an intraday basis, you can look at it on a 30-minute basis. You can look at it on a daily basis. So there's a 30-minute Fibonacci levels. There's a daily Fibonacci levels. So if you want to check this stuff out on a daily basis. Whoop. Let's see if we can run these. I think I might have to switch something in here on these pivots when I do the daily to calculate. Yeah, it's like 1 day. I think I got to go with like a week or something like that. Let's see if that works. See if that pumps them out. Hang tight 1 second, really quick. Come on, baby, calculate. Still not calculating. Hold on a second here. Well, I may be lying to you. Some of this might not work. Let's check this one right here. See if this works. Yeah, I'm gonna have to look at this and write some rules for this. This one's not working right now, like I promised for you. I don't know why. Now, okay, but still saying that, we're gonna do something else. We're gonna go back to traditional, right? And we're gonna show you something else here. So on the pivot points, on the 1 minute basis right here, right? We're going back to the 1 minute basis on the, I don't know why it's not calculating right now. Now I'm all pissy about this. I'm going to have to go back in and look. I had a couple warnings earlier this morning telling me get fucked or something, but why aren't these pivots showing right now? Tight here. Oh yeah, I got to put that back to the 1 day. For here we go. Give me one quick second here. 1 day? Did I have that right? There we go. So on these pivots right here, right? If you are looking for an STX buy or sell, can I clear off all of this stuff over here? All that stuff. Clean this up. If you wanted to, on your pivots, you can add in R3 and R4 and R5. And these R4 and R5s and S4 and S5 are going to be green and red. And as a matter of fact, we hit this green section yesterday. It's an auto buy, and it's actually an auto sell on puts. If we ever trade this range on an intraday basis. And the same thing would be on the upside. If we trade a huge upside move in an intraday basis, I don't know if you can see this on your screen, but there's 2 red lines up here. And this is more of a zone, not a line target. As soon as we get into this zone here, it's more of a zone trade. This is where algorithmic selling comes into play on this red. Let me make this red. Algorithmic selling comes into play up here, and I would make this a green box on the downside. So if price were to come up here, you would auto sell any position you were in, like a weekly basis, something like that. If you're in a swing trade and we traded up there, you would automatically sell and expect a downside to come. And the same thing would on the inverse to the downside. Now, I'm not putting these on the chart right now because we're not trading into that range. So I'm going to uncheck these. Now, let's say, press OK here. Now, let's say price were to go up here, okay? We're going to trade up here, and we actually sit on R3. I would then go over here and turn on the upper zone in case we do trade up there, so I know I could take my money and run, right? But until we get up there, I leave them. I don't want to clutter up the screen or any of that kind of stuff. Let me see here. Here we go back to the main screen here. A little bit cleaner without the channels. At least on an intraday trading kind of stuff here on the show. If I was at home with my own big screen showing in front of me, I'd probably leave the channels on, or with a more comfortable I become, I would leave the channels on. But for right now, we're just going to leave this just like that. Just parked here. Let's see if they can trade this up here. And keep your eyes again on the down on this screen on the bottom side here, and see how we're kind of parked right now. I'm going to move this over, but this is where that gamma flip is. So right here is the gamma flip. You can actually see it right here. Notice how we still have demand in the marketplace, right? We got buyers still coming in on this gamma flip. If you were really cheap, you'd be waiting down here to buy this as a bull. This is more risk on. This is more conservative, right? And this is where bulls actually buy. Bulls actually buy way up here, and they lose all their money because they're buying tops. Bulls feel comfortable buying up here. They hate buying right here, and they really hate buying down here. This is the inverse your emotion trade right here. You're buying this dip and this dip. You buy the dip here, buy the fucking dip here, and you hate it. I already know you hate buying the dip here. I already know you hate buying the dip even more down here. Now, let's say we fail here. You buy the dip, you buy the fucking dip, and it rolls down on you down here. Starts to head down. That's okay. You just manage your trade. So you get rolled down here, right? You trigger your stops. You took you licking your wounds down here. But this truly is where you're buying the dip. You want to put a weekly on, a monthly on, anything like that. This is where you put the risk on. You're the guy buying the dip down here, right? So you're like, oh, Cap, I'm so scared. I bought the dip right here, bro. I bought the dip right here, Cap, like you told me, and then it rolled down on me. I bought the dip again, Cap, And I'm really scared here, right? Now, there's some other things that are involved in this. There are other reasons you would not buy the dip down here, but right now, the current place or where we currently are in the market, you should be buying the dip down here. So let's say like I put some call spreads on Cap, right? You're going to be the guy that when this thing rocket ships, you're going to hear the cacophony of bulls telling you to now buy the market. They're going to be saying to you, noise everywhere. Are you going to join in and buy with us? You're like, bro, I'm exiting here. You know what I'm saying? I have some runners on, man. You want to buy some more? There's enough room left in the bag. The truth is, you were the guy that had the bag when it was empty. Does that make sense? You have a higher rate or win rate down below, higher win rate down below than you do on the top side. I know this sounds counterintuitive, and there are other mechanics that matter here that I don't talk about often. Well, we talk about it often, but right now where the market is, we have no sign of CTAs selling. We're not in negative gamma. We're not. We don't have any catalyst in the outside of the market. Any kind of economic news catalysts, any of that kind of stuff. We're still in earnings season. We haven't rejected the gamma flip meaningfully 2 or 3 times. Any of that kind of stuff. So there's nothing here saying why we should crash at this moment right now, right here. So this is a risk-on environment for bulls here, by the way. All right, that's all I got for you at the moment. I'll be back with you in just a moment. Oh, let's talk Tesla really quick. Let's take 5 minutes to talk about Tesla. I'm gonna give you guys something here. I want to be very clear here about Tesla because I see a lot of people on Twitter that don't know what the fuck they're talking about, and it really bothers me. It does, and it really bothers me because a lot of that noise comes from people that either they're fucking trading $1,000 account that they blow up every week, or they have a dollar cost basis of $5 from 10 years ago, and they want you to always buy. They want to sell calls to you, all kinds of nefarious shit. Some people feel peer pressure to say always buy the dip, whatever, all that kind of stuff. Some people are just feeding into the emotions of bulls and that kind of stuff. So we're going to talk about Tesla really quick. And I made some commentary past few weeks. I've been making commentary. And then I made some other commentary saying bad news is coming. And you expect it. I even said I didn't want to say that a few days ago. I'm going to say it today on stream. This was about a week ago. And then, of course, bad news came. And then, of course, I see talking mouths and faces on FinTwit saying that we're burning because of that news. If that was the case, then why the fuck did I know the bad news was coming? And that's because the market trades not to news. Some of it is to the news, but it always reverts back. That's mostly an unknown news to anybody. And even when it's really unknown, we tend to revert that trade because the powers that be are actually in a long or short position. They didn't already know the outcome or the event that was taking place. So anyways, my point here is this. This is what I want to talk to you guys about. Important thing that I want to talk to you guys about right now here, okay? And we're gonna do a little chat here. And we're going to talk Tesla here. Now, normally, under normal circumstances, I would be auto buying this bottom here on Daily Trigger. Normally, I would be a buyer down here with some spreads. Like shares, spreads, don't care. And it hits 95% of the time buying this dip down here, okay? Even with all the bullshit and the bleeding and all this kind of stuff, it doesn't really matter. You just you auto fucking buy this dip, and it prints. Okay, it's under normal circumstances, I would say that is true. But there's some more information that I'm looking for here, and that big information that I'm looking for here is this right here. I did not see, like over here, did not see the daily trigger cross the monthly. Okay? It's a big one down here, okay? Did not cross the monthly down here. I have real concern with the daily trigger crossing the weekly back here, crossing the monthly trigger right here. In this setup specifically, notice the difference in this and the violence in the swing lower with the daily trigger, okay? This whole cluster right here is extremely bearish. As a matter of fact, weeks ago, I was on FinTwit and said, I'm hoping for at least a back test of 232 before we enter a bear market for Tesla. We didn't quite get there, did we? It auto-sold and just started raining hell down. Then we got a bunch of really bad news, all kinds of crap and shit like that. And it was a hot fucking mess, right? Then we get all kinds of shit, right? Just bad. Now, why do I not like this? Why did I think bad news is coming? Because this is predicting it before it ever happens. I was actually predicting it even before. Predicting it back here on the 18th. Predicting it right there. There was actually a hint of it back here too, because we had a rejection below daily trigger here, okay? So you had like a pre-warning, major warning, guaranteed it's going to happen right here, and I guarantee bad news is coming, and then fucking bam, okay? So, you're getting some predictive behavior from this stuff, right? Now what am I looking? Now, once this happens and we're down here, and I see that we're at the bottom of negative velocity on the daily basis, and there's a rule here to buy this dip. I want to just check back because of how bad this looks right here. This looks terrible right here. That daily cross of the monthly, whenever price is below the monthly, that stock is in a bear market technically. And whenever that daily crosses down with that violence and the violence in that move, right? The violence of the move, it's not slowly going down. It's going down almost in a vertical line. Look at that daily trigger. It's like it's violently moving down right now. See that? The violence in this move right now? It's rolling. It's not turning up, is it? See this violence and move? It's not coming down and flattening out. It's not like prices coming down and the daily trigger didn't follow, right? So I'm going to look back in some history here and see if there's any prior examples of this. And what I found was that there are some prior examples of that. So in your brain, see the violence here of that cross? See how you, like, I'm on a daily basis right now, right? Do you see how this daily trigger never crossed, did it? It didn't follow price down, and it bounced before ever breaching this monthly trigger. But what's different here, right? We've got violence and move and a cross of the monthly trigger. That's telling me not to buy the dip right now. And I'm going to be looking for something here as well. So right now we've got a cross of the daily trigger. We have the weekly about to cross. This is considered a major bearish crossover. We've got a 3 trigger monthly, weekly, and daily cross to the downside here, okay? That's shaping up. So I want to look at a prior example of that and what happened. We have a couple. We've got one right here. That sent us to $1.02, I believe, $1.03. Let's look back at another example. In your brain, remember something, okay? Weekly, daily cross of the monthly trigger. Weekly, daily cross of monthly trigger. It's another last time we had that happen. Weekly, monthly cross of that trigger. Here's another one, example right here. This is back in 2019. It was ugly. Here's one right here. I remember this. I was trading this back then. Okay, when Tesla price was low. Here's another example of it right here. We get another cross down here. Really violent moves, right? Our daily crosses down here. The weekly didn't, but we still had another major down move. So right now, this one actually could get this squeeze right here, right? To the upside. But look at the violence in just the daily move to the downside. It was huge. This price right here is $9.51, right? This is the high right here. This was 1915. That's a 50% drawdown without even getting the cross of the weekly trigger right here. 50% drawdown in price. 50% on its previous high drawdown in price. So let's take a look right here. Our previous high was right here, $295. That puts us at minimum at $150. Minimum $150. This quarterly triggers at 162. Would not be shocked for a minute to see Tesla price hit that 50% mark down here at minimum. And if you get the cross of the weekly right here, that's just the daily cross. If we get the cross of the weekly, would not be shocked at all to see that major move down for a yearly low in the S&P 500 and NASDAQ down here in the quarterly trigger. And that closes a bunch of gaps. Currently, that's sitting at $68 down here. So I made a post just the other day, yesterday, I think. Can't recall exactly, but it might have been yesterday, where I said, normally, I would be a Tesla buyer here. But I would really like to see us above 232. We are currently trading $197. So I would literally want to see price first get above 232 right here. And then we'll talk bullishness. That would mean we come back, believe it or not, consolidate here and wait for the hourly trigger to come up, the daily trigger to come up, and even then back test this stuff successfully, beat this prior high at 232, and then we'll start talking about Tesla being a buy again. So there's some real bad shit going on down here with Tesla right now. And I'm promising you that as a Tesla bull, you putting risk on right here, I would say to you here, yeah, I get buying the dip down here, and it will come back. But just note that this is one of those places specifically on Tesla. And look at that, we're coming back already on SPY. What do you know? So what I would say to you about Tesla here is it's not that you can't buy the dip here. It's that you're buying the dip on Tesla must account for a trip lower. And there's a high probability of it happening. So that would mean what? If you're going to buy shares, that you don't sell your shares, that you actually diamond hand them for when we come back up to where you bought them when we went down from here, okay? If you bought spreads, that you put enough time on them to account for a trip lower, that you have the ability to withstand that downside move. I'm all for buying dips on Tesla lows, but just know what you're getting into is my point here. Thinking you're gonna buy like a weekly or a monthly Tesla fucking calls way outside the money for $1, and they're gonna guarantee to print. This time, not so much with the momentum coming down on the daily and weekly basis, price being underneath the monthly. If price was above those things and we were at the bottoming out of daily velocity on Tesla, I'd be like fucking full port. Cappy's going to go full port with month out calls outside the money, and I'm going to make a 10,000% banger here, guaranteed. Does that make sense? So you can buy the dip here in Tesla. You know, you got some consolidation next couple weeks. Another thing to consider here with Tesla, too, that's another negative for Tesla, is we are coming into a seasonal market weakness. Now, I'm not going to go into the rest of this right now. I'm talking too long. Different concepts, but I want to talk to you about something here. And that is that the QRA announcement that came out yesterday, okay? The issuance announcement that came out yesterday was not extremely bullish. That's where we go straight vertical for the rest of the year. It was not bearish or hawkish. It was neutral. It was a nothing burger. Okay, that's what it was, a nothing burger. what does that mean we should expect this year? So I'm going to show you guys something here really quick. Do one quick. Oh, no, we're going to do it just like this. And you know who can speak to this with me would be likely Trader Podcast. Probably has some insight on this as well. So I will defer to him to some extent on this because he is doing some great work here, okay? But we're gonna go to Cappy's screen here, and we're gonna talk about what's needed. What is actually needed is you wanted that announcement yesterday. So this is the path that I believe we are going to follow this year. Okay. Now, if that quarterly announcement that came out yesterday, we would likely have traded like this, like vertical, no stops. And even if we did have a stop, it would be something like violence and straight back up. We're talking like a week or two correction and then violence straight up into the end of the year. Now that we know it's more neutral, it's not bearish either or hawkish, I expect us to follow this track more closely. We're coming back into following into line with this expectation for the year, at least my perspective, my thesis, okay? So if that's the case, what do we expect for this seasonal chart for this year? We know that we're going to probably have a massive bull run that lasts into the end of the year and into March of next year. This shit should go off the chart into next year, okay? And the other thing that we have to know right now is that we're going to expect a seasonal low. A seasonal low. We're not there yet, right? But we're getting close to it, right? We do some jaggedness, then we roll down for an expected seasonal roll coming down into when? We got the 57th trading day, right? I got to turn my camera on. Hold on here. God damn it. Hold on a second here. I got to turn my camera on here. I guess we are going to get into it for a little bit today. Hold on. Let's break out our calendars, right? Come on, man. Turn this thing on. Turn this fucking camera on. I apologize for my parents. I just got out of the shower here. But hold on. Come on now. Let's see if we can do it. All right. Let's see if we can do this here. Talking directly to viewers. No memory card. That's because we got a Sony. All right. Here we go. All right. So we're going to look here. This is my men's calendar, okay? We're going to look for the 57th trading day. Sorry for my hair. I'd usually brush it and all that. But we've got our sexy hot men calendar here. Sexy hot men of March, baby, right there. He kind of looks like David AMS. David AMS is a handsome guy in real life. I don't know if you guys know that, but where's the 57th trading day? I don't know if you can see that right there. There you go. It's March 22nd. March 22nd, right? So let's go back to the trigger screen. I'm over here calling guys sexy and stuff. You know, shouldn't be doing that. It's like harassment. I'm comfortable. I'm comfortable in my sexuality. So if we're gonna look at that season, let me go back to that seasonality chart really quick. So if we're looking at that seasonality chart, right, you're gonna expect some kind of a roll or zone trading, right? And then an eventual roll down into March 22nd. We always talk about seasonality calendars, how we can trade outside of them. We have years where we blast up and outside of the range. We have years where we have a bear market and we trade all the way down. But right now we're still following. We have moments, a day or a week, where we trade outside of that range. But look at what's happening right now. Went a little bit lower down here, right? Came back in line, right? A little bit lower. This was in line. And then we traded outside the range. But look what we're doing. We're pulling right back down into that range, right? So just like look at this right here. So far this year, kind of kind of on track, aren't we? Kind of still on track. Does that make sense? So there's going to be some kind of an expectation still of a roll down into March 22nd. Now, can we squeeze up here and go down there? Sure. Can we roll down early? Sure. But you need to be prepared for that. So I'm trying to circle back here to Tesla. You're talking about buying a dip on Tesla, right? You might get that dip buy here. You got a bunch of bulls down here saying, no, this is SPX, but, you know, Tesla bulls going, yeah, buy that fucking dip, right? So you're fucking out there buying this dip, and you're thinking, yeah, correction over, everything's fucking awesome. Woo, everything's fucking great. And in reality, your Tesla dip buy was down here on March 22nd. Okay? So be aware of market awareness. And that dip buy you're talking about, when you're like, hey, I'm going to buy the dip here. It is low. I'm going to buy it. But then all of a sudden you see Tesla at fucking trading $78 down here. And don't disappear from my stream. I want you to come back and say, hey, Cap, you were right. Okay? You guys get what I'm saying? So your actual dip buy may have been down here. The other thing would be, if you're like, well, Cap, if I don't put any risk on, what if we don't have that deep of it? What if it's like, what if Tesla just does this while the market goes down? I should have bought that fucking dip buy. Well, put enough time on that trade. Make it a spread that ends in the height of summer. Make it a spread that ends at the end of the year. Make it make sense? Maybe you're buying the dip with the underlying stock on Tesla down here on weakness, and then you just DCA down here. You don't go 100% buy here. You spend 20%, 30%. You guys remember this from when we're at 34.50, right? Any of you longtime watchers know that I was telling you in summertime, in May and June, buy this dip. October, buy this dip. Right? Do 30% of the market buy here, 30% of the market buy here. Leave some ammunition. The chances of us rolling down even farther are 5%. Right? So if you do want to buy a Tesla buy here, and this isn't going to be as deep, sure. But buy some here and then DCA this here, and boom, you're off and running for the rest of the year. You know you're going to take the money and run over here, or I'm going to have another conversation with you and say, exit your fucking Tesla longs, and we'll jump in again and go up here. Make sense? In the chat, the stream? Oh, yeah, baby. I know none of you guys get any love at home from your wives, by the way. I'll give you love here in the stream, okay? I know women don't love you. Some of you are all creepy, so I'll show you love. No, what do you say? Like, no sex, next, no sexuality or anything, but I'll show you love. So you feel like I care about you. I'll hold you, jukebox. Jukebox, come on, poke the jukebox. Come on over here. I love you too, Mr. Talking Monkey. Dean, I love you too. Outhouse, I love you. So just remember, no, well, what happens on that March OPEX, right? If you look back on a seasonality or on a JPM, if you look at a JPM, I have the JPM, I have it here. I will post it today. If you watch the JPM caller, we tend to hit our target, and then like a week or two before, we roll the other way. Does that make sense? So let's say you get the caller trade. Let's say you get the caller trade. Hold on. We'll just do it right now. Anyway, no, we don't do. Hold on, I'll switch back to this cap screener. So if you track, I'll post this. I'll post the JPM caller results for the past 9 or 10 or 12 whatevers. But let's say we go down here and we hit the bottom of the collar on the 22nd, right? That's that 3,800 or whatever. Or I think I forget what the next strike is. I don't care if it's the 38 or the middle strike. But the last 2 weeks we normally bounce, we ricochet off. So this is normal for the end of a quarter to catch a bounce 10 days before that direction, that expected direction. Matter of fact, let's go look at it right now as a team, okay? Let's look at it as a team right now. So we're fucking team today, god damn it. Okay, hold on here. I love our community. I gotta say that our community fucking rocks. It really does. We got the JPM collar here, boys and girls. Right? Whoop. Oh, dude, look at that. Oh, yeah, baby. Oh, yeah, baby. You guys have seen this before, right? You want to? Ooh, yeah. I actually have screenshots of this before this price action. But look at that. Near perfect, right? Look at that. Near fucking perfect. Now, the seasonality calendar is saying what? That we're going to do this, right? Consolidate and blast down. Our low may be here into end of March. Might just be down here. Might be a slow run down here. And then you ricochet off, right? But it could be down here, couldn't it? Could be down here, couldn't it? Do you know what date this is planned for? You want the date for this? Get your calendars out at home. That's the 39th trading day. So the expectation would be, hold on a second. Let me get my calendar again. Hold on. That's the 27th of February. And that is the 22nd, right? Woo! This would be the actual calendar seasonality expectation. Worst case scenario. This would be worst case scenario in the collar. Now, this could be, so this right here could be more like this, okay? Where you'd have something like a low right here. Whoop. I'll just draw it in. Hold on. This would be the two outcomes, okay? Make sense? Now, we can pop the collar. I'm not anti-popping the collar again, going up here and going crazy. So far, though, it's working, isn't it? So far, that's pretty good right there, isn't it? And I want you to know something else. This is the truth. We more often than not do not pop the collar on the upside or the downside. They are anomalies, not the norm. They are the anomaly, not the norm. And they have free puts right now to the downside. At this point, they will. They'll have free put. They're monetizing right up here, right? We know they're monetizing up here to buy that protection for the downside. So, yeah. There we go. And I've got the dates right here for you. There are the actual dates right there. So we'll be watching this play out into the end of the quarter here. So this seasonality calendar is matching to calendar this year is matching to an on-election year, or that's added to this calendar right here. Have I ever filtered the seasonality to match only following years of 20% gains? I have the one from last year. I'll show it to you. We traded it almost exactly. Almost perfect. Last year's seasonality calendar, I will post that at some point. I've posted it a few times, but I don't have the time at the moment. But yes, we still track exactly. And we had a 23%, 23% year or something like that. There's no guarantees, and I gotta say, so let's talk about that again. This is a good one. Let's go with the Cap. Have you ever filtered the seasonality? No. What was the question here? Cap. Yeah. So first off, Larry Williams cycle predicts market sell-off from here to April. So we just looked at the expectation of being range bound with a roll down into March 22nd. That fits that thesis of Larry Williams. But someone else asked a question here. Someone just asked an important question here. Someone else already asked, or someone asked a question that was important here that I wanted to answer for you guys. Fuck, I don't know what it was. But at any rate, fuck, what was it? It's an important question. Yeah, you know, if you've got another seasonality calendar, I would say, are they showing you current price action? Do you guys want to see? Oh, maybe you guys want to see last year's seasonality calendar? You want to see it? Fuck it, we'll look at it. We'll fucking look at it right now, and I'll show you the proof. I want to see their last year's seasonality calendar. Hold on a second here. One quick second here. And I'll show you last year's seasonality calendar. Hold on here. I'll bring this up right now. I got my proof. Right here. Can I snip it maybe? No. Let's talk back testing. This is one here. I can't show you that because that's my back end of my website here. And can I bring it up here? There. Open the snipping tool. There we go. Hold on here. Where is... gotta do this again? Hold on one second here. Where is that gallery? There it is, right there. There we go. All right, let's put it right here. Can I make this bigger? There we go. Nope. Hold on. There we go. Should be able to see that there. This is last year's seasonality calendar. So, a little bit of outsized moves, but generally speaking, following, right? A little bit of an outsized move into the end of the year last year, right? We have a little bit of divergence here and a little bit of upside move there, but otherwise, I'd say that's pretty good. I mean, if you think about a lot of the calls that are made out there, you think about, let's think about this, right? You get a lot of people out there that are calling for this and that and this and that. Think about all the noise that you heard last year, and this is fairly close, right? We didn't get the big crash, did we? Right? So this market's going up and to the right. It's a fairly good seasonality calendar. So like when you're in the zone trading a 5-minute or a 15-minute chart and you're listening to somebody out there telling you this doom and gloom is coming or that doom and gloom is coming, on a year time frame, it's not looking like that, is it? You see, like, I'm not going to name names out there, but you see these fucks come out. And they're like, doom, we're going to zero, right? Doom, we're going to zero, right? Doom, we're going to zero, right? But that's not the case, is it? There was your seasonal low. This low was higher, right, than this low back here. We never, all you were looking for was dips to buy, weren't you? Dips to buy. So anyways, what else? Main screen here. There's the roll that comes down. Remember that we don't expect that roll until the 32nd or 31st trading day of the year. Though we've had a pretty decent kick-ass start to the year. So if it did go sideways and down, if the trading, I wouldn't be shocked at trading action like this, and then the roll. I wouldn't be shocked if we traded early down there. But you know the general idea of where we should head into the end of quarter this year. All right, here we go. Oh, how's that Spoos doing, by the way? Oh, look at that, huh? Trade the coil. I don't want to, Cap. It's going to crash. Trade the coil. I don't want to, Cap. All right. I'll be back with you guys again in a little bit. Who just subscribed? JT Riva. Thank you, brother. Appreciate it. Well, look at that. Look at that dip buying. Look at that dip buying down there in that on that gamma flip down there. Oh, right on. Thanks for the resub. I appreciate it. Yeah. Hold on a second here. Can we look at Apple really quick? Yeah, we can look at Apple really quick. I'm going to put it in the cycle. How about that, okay? So I'm going to do a cycle for you here. Hold on. I'm just going to put it on the screen for you. All right, so we're going to do Apple. I got you, Sam. Sam, I apologize for not calling you, man. Hey, Sam, I want you to know that I appreciate the text messages, brother. I have had no time, man. I mean, like, none. I've got no free time to be chatting. Apple, coiling right now. The 1 minute chart here. We're going to go to the 30-minute chart on Apple. Whoop, hold on here. We're switching already. Whoa, man. Whoa, Apple. Let me see here. I think Apple's range bound. Take the money and run. Right, just by looking at it. Range bound, take the money and run. It's tied right in. Give me a second here. Nice dip buy down here for you. This is a 30-minute chart on Apple. It's got a nice little V-shaped recovery down here. Could see a nice little run into the close today on Apple. This looks gorgeous, by the way. You do need to get above 186.33. Be aware of that. This is where the trap is for bulls into their earnings. So you guys are all going to be all fucking bulled up, I should say. when in reality you need to see price get above 186.33. You need to see a price get above it, and then you can take a long. Otherwise, you're just buying the dips down here. But you need to get above it. There's if I had to guess here, you're gonna get all bulled up today on Apple, and they're gonna trap the fuck out of you down here into the close. And then even if you get a good report, you might be able to break some of this stuff up down here. Like you might trade 187, maybe close the gap above here. My price target would be 189. Upside expectations. I'd prefer to zone trade this between the hourly and the daily trigger, or buy this previous low and trade it and get out at 186.33. One other thing about Apple today. I used to trade Apple a shit ton. And whenever you come into their earnings the last day, the options tend to collapse down on each other into the end of the day. They end up trapping you into a trade, and you end up getting stuck into holding through their earnings. So be really careful here on Apple. So this is Apple. Uh, 30-minute chart. Squeezing up right now. If you're long Apple here, you take the money coming into 186.33. You also have a level R1 at 186.21. You can re-enter above after consolidation. Look at that beauty right there. Whoa, baby. Got that beautiful range expansion in here going on SPY right now. Take the money and run. Re-enter the trade in a successful backtest of the hourly trigger. Successful backtest of the hourly trigger. Remember that. You want to see a successful backtest. Would not be shocked to see us come back down. Your next upside target, 491.16, though we do have some shit to clear up back here. I'm going to draw that in right there for you. Right up there. Beep. Right there. Right up in there, draw that in. It's a temporary target right there. Leave that right there for you. If you are bullish here, you want to see some kind of pullback, confirmation. Well, it wouldn't look like that. It would look like this. Up here, back down, and then you'd take that trade right there. Bam, bam. And you'd attack your next level to the upside. Remember what I said to you about that seasonality calendar? Could be range bound trading sideways for a bit.
For their vision headsets, not in the least. I think that they've already made their bet there. They can't be happy with their bet. They're not going to count on Apple with a $3,500 headset to lead. And in terms of Apple, if I could, Scott, nobody mentioned that China has cut back. China has said, you're a foreign player. We don't want you selling to government. Does that spread as new phones continue to pick up? So to me, Apple was the poster child for just a way too bullish 2023 when the fund.
Joshua Villegas. I'm gonna send you a text. Something. Hold on. Will Mead, what's up, brother? Will M, what up, brother?
But I don't know how much people will care because
All right.
it just seems to be this unending thirst to buy it.
Okay, we're going to leave Apple because I wanted to move to Meta, obviously. Sarat,
Yeah.
you own Meta. So tell me how you're thinking about the stock here after its best year ever, following its worst year ever. So now what?
Right. So, I mean, remember last year he came out, year of efficiency, we're going to cut costs. And now let's just see how Insta is doing. Are the algorithms working? How much are those really giving them operating efficiency? And what is the expectation going forward? And I think that's the future. Because if again, it's the cash flow, and Steve's talking about, whether they go Vision Pro, whatever, but it all depends on that return of investment on CapEx, right? You saw Google got sold off because they said we're increasing CapEx. The market today is not favorably over CapEx. They want cash flow, and if they're doing CapEx, it's cash flow. How is it going to work?
Okay, so Julia Borston out in LA. What's going to matter most here?
Well, Scott, we're going to hear from Meta this afternoon, and the key number to watch in this earnings is revenue. It's expected to grow 22%. That would be down a hair from the 23% revenue growth we saw in Q3. But the stock has surged about 160% in the past 12 months, and still, analysts are overwhelmingly bullish. 81% have a buy, and 16% have a hold, pointing to tailwinds, including artificial intelligence, boosting usage as
Noting
well
the
as
S&P
ad
500
spend.
on a leg
And
up,
you
currently
mentioned
up
last year's year of
0.76% on
we'll
the
see
session.
if CEO Mark Zuckerberg has any new proclamations about cost controls and if he follows up on his public apology before Congress yesterday. Scott?
That was a big moment. Julia, thanks. See a lot of you today as well. Can't wait for that. That's Julia Borston out in Los Angeles. Then there is Amazon, up 17.5% since November 1st. What matters here? AWS growth?
So in regards to this recent rally in the S&P 500, a rally in some of the world's largest technology companies sent stocks higher, with traders awaiting earnings from a trio of mega caps and Friday's jobs report.
What I said at the open is really the story. All this leaning out and efficiency, they pulled back the reins on trying to deliver things. Like they were at 1 day and then it was like 6 hours. Do you go to an hour, or can people like relax and we can have some margin expansion? Reintroducing ads into the television product, that'll be interesting. We'll get some color on that. But that quarterly operating income number projected to grow 280% to $10 billion. We don't really think of Amazon in terms of like this juggernaut throwing off, that kind of free cash flow, et cetera. We always have historically thought of it as a company that's really good at growing vertically and horizontally and just constantly delivering on growth. And they are doing that, by the way.
What up, Steve Millie, brother?
13% year-over-year number. It's not 20, but it's also not 2% like Apple. So you're going to get the growth in the AWS business to about $24 billion. That'll be important. But again, thinking about Amazon in terms of its streamlining and in terms of it becoming more profitable, I think makes it a more interesting story for this year. And I agree with what Bryn had to say. Like if you ask me, like which of these names has a better chance of outperforming, I think Amazon versus Apple. I own both. That's what I think is going to happen now.
Sarat, how do you?
I'm on your camp. Yeah, I'm in your camp. I think Amazon's future for the next few quarters is a lot better than when you compare it to Apple, because they've got the levers to pull. I really like the Prime example where you start now, put advertising in there. That's margin that drops to the bottom line.
Yeah.
Right? And you start putting, their efficiency in terms of logistics, that's all going to start to get optimized as well. So you will see that, and that's what investors want, the cash flow and efficiency.
Two things really quickly on the ads. Number one, in 3 years, Amazon became the third largest advertising platform in the world. Like, we're not giving this company any credit for that, but that's a true statement. That's an actual fact. Number two, if you listen to what Netflix had to say the other day, actually, the subscribers that are on the ad tier are more profitable than the subscribers paying full price on the premium tier. Also, not something that I think anyone expected from Netflix or from Prime, for that matter, as they push into this. And then the third thing, and of course, we don't know yet, but very important to point out, any news that they have to share on their AI efforts is going to get a lot of attention just because of the built-in user base that Amazon has to power with AI applications. They have not been the most vocal, but Anthropic is a big deal, and they could talk a lot about that tonight, which I think would be additional upside.
So you guys kind of alluded to this, but let's go deeper. On Bryn, whether you think this is the week that these mega cap stocks separate themselves from each other, that they don't trade anymore as a virtual group, that we do get the, divergence between some of these names. Now, maybe the seeds of that have been sown with Microsoft and Alphabet, but you tell me what you think.
I think directionally, they can move in the same direction. I think the magnitude, though, will be very different. And so if you think about Amazon also, one thing that Surat and Josh didn't mention is if you've ever toured an Amazon warehouse, they are incredibly sophisticated robotics, but they also have a lot of people doing very tedious tasks. And I think that Amazon, more than any of the mega caps, internally is going to continue to benefit from the productivity increase that their robotics are able to replace humans, and that will go straight to the bottom line. And so I think between that, between their partnership with Anthropic, I think that Amazon is actually flat over the last 2 years. And so we all like to talk about one-year returns, but really over the last 2 years, it's been dead money. I think Andy Jassy has a sea legs. So I think there's all of these little metrics where Amazon, along with Microsoft, can really start pulling away and have, once again, a much more magnitude of a return than I think an Apple, which will be a laggard.
Okay, so let's make a turn then, Weiss, to the aftermath of the Powell pushed out pivot, as I'm calling it. I mean, basically says no cut in March. Now, the market still has about 42% or so looking for March. Yields are down. Market's having a nice snapback here. I'm going to reveal Josh's new trade in just a minute, but give me your read here post-Powell.
Yeah, look, I thought it was really overdone yesterday, and I was surprised at the reaction, to tell you the truth. Maybe it was compounded by New York Community Bank, I don't know. But in order for the market to have sold off yesterday, you have to believe that the timing of the cut being pushed to the second half of the year, which is where I've lived for a long, long time, is going to really cost the economy big time. And I just don't see that being the case. So I think it was overdone. I think the market would be a lot higher today, but for the mega caps reporting this afternoon. So to me, Powell said the economy's strong, and he said it's continuing to go. Labor is still bid for, that there's still an imbalance there, that the economy just looks very good, so they can be patient. So it'd be a great buying opportunity, but for tonight. And I did buy some. We'll get to it later. But what was the biggest surprise was that you continue to see, as you pointed out, 42% calling for a March cut. What are they thinking? It's not going to happen. He told you it's not going to happen. Well, so move on.
What he says yesterday, I get it, and the market reacted, and the algos reacted, and all that. But it's only January.
Yep.
I mean, it's February.
Got two jobs numbers, but you got two CPIs.
But think of what has to happen. Right. But think of what has to happen. The market, the economy really has to have precipitous decline before the next Fed meeting. The data's got to come in like really, really bad. And while we've seen mixed data, the trend is not that bad in order for them to cut. Or inflation's got to take a major.
Right, but we're getting two reads on inflation. We got a couple of jobs reports. We got a lot on the table. And by the way, UBS, they're sticking with March. What's interesting is that Goldman had doubled down on March, not anymore. They moved to May, as did Barclays, and June is B of A, Deutsche City, Morgan Stanley, JPM. So they think it's even going to take until the summer to do that. Now, let's get to your new move. You bought a disastrous stock yesterday, New York Community Bank. New York Community Bank. Why'd you buy this?
Yeah, so I don't know. It's
Seriously.
a trade. All right, so let me say two things. I'm not calling a bottom in the stock. Please don't follow me into it. It's a trade. We're not getting I'm not getting married. We're hooking up. Okay. Look, if you know anything about this business, you know the Bible. The number one rule of picking stocks: you never, ever, ever invest in a company that's based on Long Island. You could just assume it's either an outright scam or it's people that have no idea what they're doing. Ineptitude. And this is
your home. For those who don't know,
I'm from. I could say that. You can't say that. Right. You definitely can't say that, Jersey.
That's why I prefaced it with that.
So Long Island-based company, biggest red flag. It's like meeting somebody who says they So all right, but like put that aside because it's a trade. This is what I would say on New York Community Bank. I listened to the call. I don't know any more than anyone else does. All I can tell you is it sounds like they did the signature deal. They got in way over their head. They bit off more than they could chew. They also did Flagstar. So they got involved with 2 acquisitions. They're not accustomed to being a $100 billion bank. They're not, like, mentally. They don't know what they're doing yet. And this is the quarter where basically they came out and admitted it. So it seems like this is not some systemic issue. It could change. JP Morgan reiterated they still think the stock should trade to $11, and they're sticking with it. So I just looked at it. I said, I know nothing more than the market about this situation other than I like to buy panics. Here's what's different for me versus a fund manager looking at this. I could get out today. If I end up being wrong, I can get out tomorrow. If you are doing this with other people's money in a fund, you have to explain yourself why you were taking a shot on this to shareholders. So I don't think institutions want to do that, hence the panic. The stock is down huge yesterday, another big down day today. So early this morning when the market opened, I said, you know what? I'm willing to bet there's a little bit more panic than there needs to be here, and I'm willing to bet it's still down because there are people that can't admit they own it and they want to get out of it. And I like that setup. So we'll see what happens. This is not an endorsement for New York Community Bank. This is just me taking a shot where I see a lot of other people panicking.
Okay, so let's get then a little bit more on the kinds of opportunities that might make sense in the here and now. Josh sees a disaster, says, hey, I'm going to take a shot for a trade.
KRE, wait, hold on. The whole KRE down 6% yesterday, 5% today. That's the worst 2-day stretch since the mini banking panic, March 9th, 10th, and 13th earlier last year. So this is like a pretty momentous 2-day period for all of these names.
We're having a pretty good bounce back here from that sell-off yesterday. By the way, it was the S&P's, it was down 1.5%. It was the S&P's worst day since the end of September. That gives you an idea of the kind of market we've been in, largely since the late fall, because we've rallied a lot. Gundlach told me yesterday, Jeffrey Gundlach, of course, of Double Line, said risk assets are extended, including parts of credit. Said he likes cash, he likes treasuries, but there's the number one idea he had right now. I want you to listen to what he told me because it's relevant to a move we have from our committee today. Here's Gundlach.
One thing I want to say, I've for a long time recommended India as an equity asset. The Indian economy is the strongest economy in the world. Their services PMI is over 60. Their manufacturing PMI is basically the most robust in the world. I think that investors should be using weakness if recession materializes and start to doubling up on the INDA, the Indian Equity ETF. I don't have a stake in it because I don't like to recommend things that would be in my funds. But I think INDA is a good investment for people looking to get equity exposure on weakness. It's my number one recommendation for 2024.
So that was interesting to hear, Weiss. He says he doesn't have a stake in it, but you do now. You bought the INDA.
Yeah. Yeah, the INDA I own, but I also own 2 smaller ones. I bought them before Jeff came on with that. And, you know, I've been thinking about it for a while. As Apple transitions their supply chain to India, they're not going to be alone. China is it's antagonistic to foreign companies. So why would you want to be there with an unstable government that is communist? So where do you go? And by the way, labor's not as cheap as it was. So where do you go? You go to India because they've got the population there. They've got cheap labor. They know how to do things. It's a well-educated populace, and they're welcoming. They're luring you there. So that's why I bought India. Now, unfortunately, it's at its highs, so I bought it at its highs. But the other reason I like it, which Jeff didn't mention, is that as rates come down, emerging markets do better because your fixed rate, your yielding instruments there, the yields come down. So it pays for you to go more into risk assets, equities. So to me, it's perfectly aligned for a continued move higher. So that's why I do. So I also own the SMIN, I own the INDY, but primarily the INDA that Jeffrey mentions, because that's the only one that really has institutional volume, even though the others will outperform it, I believe.
Okay, I appreciate you explaining all that for us and certainly our viewers. You've been talking a lot about international markets.
Yeah, Weiss is going to make some money here. The trend here is phenomenal. And Japan looks great, too. Like, there are countries that are doing their own thing, and India is really interesting. I'm curious why he didn't buy EPI, which would be my pick. I'm not in it currently, but the Wisdom Tree earnings version of an index ETF in India But I think they'll probably all directionally be pretty much the same.
All right, so let's do this. Let's take a quick break. We do have the S&P 500 trying to take back 4,900, not that far away from doing just that. And up next, we'll do our calls of the day. Jefferies today has laid out its top picks for the whole year. We can give you the lists. We're going to debate the names. And then later, we've got some hidden AI opportunities, according to one key analyst. He's recommending 3 under-the-radar AI plays. Could have some serious upside, he thinks. We're back on the half in just 2 minutes.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
TV.
All right, we're back. Our calls of the day. We're going to start with Jefferies today because they lay out some top U.S. picks they claim are, quote, hidden in plain sight. Amgen, Boeing, Caterpillar, Ulta, Martin Marietta, McDonald's, and Mondelez. You happen to own Martin Marietta.
I do.
So touch on that one first.
Yeah, I own that and Vulcan as well. I like the whole basic materials commodity place. They have pricing. The demand for construction keeps on going up. We're going to do more infrastructure. Stock has done well, and it continues to do well.
You like any names on this list? There's some blue chip names on this list. You know, they still say are hidden in plain sight. Now, they've had some issues. All of these stocks haven't done quite well this year, except for Amgen's out of the gates pretty well this year.
Yeah, I don't know. They don't seem hidden to me. I've never liked the idea of buying a stock where you basically have to bet on the global economy, especially after as much central bank tightening and quantitative tightening and all that's gone on. So a lot of those names, you know, qualify for that kind of idea. So it's not a great list for me. McDonald's is interesting. It'll be interesting to see if they can get traction in that new day part, the snack day part with Cosmics. But that's not going to move the needle probably for 10 years. So I don't know what there is to really get excited about in the way of a catalyst for MCD.
I mean, we don't know McDonald's, but I think McDonald's could be interesting, especially if the economy kind of starts slowing down. It's a good defensive play that has good operating margins.
Do you think it could still be defensive, though, given the price hikes on the menu?
Well, I think the movement from going out to eat will then move more to what's cheaper compared relatively to restaurants.
It does, I think, also, and I think we were talking about
trade down.
I think we were talking about this with Stephanie Link yesterday. It does trade at an above-market multiple, a premium to the market. Well, that's the argument as to whether it does or it doesn't.
It's a tough argument to make that it doesn't. Over the last 10 years, it's best in class, pretty much everything they do all over the world. There are not many QSRs that even can be spoken of in the same sentence as McDonald's.
And you're looking for consistency of earnings, right? That's that whole Apple argument. Companies that can provide that get a premium multiple in a market like this.
Hey, Bryn, if you had to buy one of these names, forget the fact that you don't own any of them, but if you had to buy one, which one would it be? Have you thought about that?
Yeah. Well, actually, on their list also was Dexcom. It's DXCM. And that was actually on like Goldman's growth list. And I keep looking at it. I don't know. So Dexcom does the glucose monitors, right? So if you have diabetes or you just want to track your glucose levels. So what I'm tossing around is, does all of the Eli Lillys and all of us like getting healthy with the GLP-1s reduce that, or is that just like an overshadow? But I think it's a really interesting name. It's got a really good story. So that's actually one I'm still looking at right now.
Okay, that stock's at the highs of the day as well. Weiss, I'll give you the same question. You I think have owned some of these maybe in the past, but which one jumps out to you that looks like you'd take another shot at, perhaps?
ASML, it's a quality company. They took a little hit with some of their product in China, but overall, it's just steady. They've got somewhat of a unique product line as well. So that's one that I would buy, even though it's done well. Dexcom, I've looked at it, but there are so many glucose monitoring devices out there and so many more coming out. I mean, every day I get from a private company looking for funding for one of these. So I wouldn't do that. And Alibaba, I just don't think China's any better or going to get any better. So I have no interest in that. And the others I just haven't really looked at.
Okay, let's get the headlines now with Silvana Hanau. Hi, Silvana.
Hey, Scott. Good afternoon. Secretary of State Antony Blinken will head back to the Middle East this weekend. It is his 5th trip since the Israel-Hamas war began. The White House says Blinken will discuss post-war governance of Gaza, a ramp-up of humanitarian aid, and release of the hostages. European Union leaders today unanimously approved 50 billion euros in aid to Ukraine after weeks of resistance from Hungarian Prime Minister Viktor Orban. With this aid package in place, the leaders are now discussing continued military aid, which diplomats say is less certain of passing. And Universal Music Group has started to remove the song catalogs of artists it represents from TikTok, including Taylor Swift and Olivia Rodrigo, after talks to renew a licensing agreement broke down this week. The company has accused TikTok of trying to bully it into a bad deal, while TikTok says the label is putting its own interests above its artists. Now, all Universal-owned music featured in TikTok videos will be muted, and users will have to replace the removed tracks with alternative options, Scott.
All right, Silvana, thank you. Silvana Hanau. Up next, we are tracking more earnings movers today. We're going to give you the trades on Qualcomm and Honeywell and Merck and more. We'll do it next.
NBC.
All right, let's talk some of these earnings movers. Sarat, what's the problem with Qualcomm? The lower than expected guide, it did get downgraded today too, over at Citi to neutral. You own the stock. We could take a look at the chart.
Yeah, lower than expected guide. I think people were expecting more. The stock bottomed at 105 in November, ran up all the way to 150. So I think this was some of the profit taking and saying, hey, we wanted higher expected earnings. And, you know, the thing with Qualcomm is they seem to always surprise on the upside, but I think they didn't just give enough guidance for it.
Okay, what about Honeywell? Because the revenues came in lower than expected.
Revenue came in lower. The stock trades at about 24 times earnings.
Yeah.
Last 4 quarters, every time they announce their earnings, the stock goes down a couple of percent. So it's kind of par for them. But I think it's a solid company. This is the GE of the past. New CEO in place. They're phenomenally in terms of execution. I like this company. You buy this one on a dip.
What about Merck? Earnings beat, revenue and earnings surpassed consensus. There was strong demand for Keytruda. What do we think here? The stock is up 3.5%. You own this one too, so you're all over these names today.
I know, and this one's a good one because if you look at the whole pharma sector and you get the Bristols, companies that can execute and have the earnings are going to do well because you've got so many of them whose pipelines are dry. So I think Merck's one of those one that's filling up its pipeline and will do well for the next couple of years.
Okay, on deck we have AbbVie is reporting, and Bryn, you own this, and that's tomorrow.
According to Al Jazeera, Qatar says Israel agrees to the ceasefire
these companies still in
proposal.
their pipeline. In November, they bought AbbVie bought Immunogen, and then in December they bought Cerevel. So they spent $20 billion and almost $20 billion in the last 2 months of the year. This is going to be a really important call to see how they're digesting those, what synergies and what new verticals they can add to their immunotherapy and their neuroscience.
Okay, Chevron and Bristol are also on deck for tomorrow. You own both of these.
I do, and Chevron, you know, has been an underperformer for a year along with all the energy stocks. So it's going to be, again, capital discipline and what do they think where oil is going to be and how they're going to produce cash flow. It's all about return of shareholders. So I see maybe a dividend hike and more buyback shares.
All right, coming up, we're going to tell you AI opportunities beyond the biggest names. One top analyst is going to be here at Post 9 to lay out the 3 under-the-radar AI plays he thinks you should bet on. We're coming right back after this.
According to a survey, OPEC crude output fell by 490,000 barrels per day in January to 26.57 million barrels per day.
CaptainJimJames.
Welcome back. Mizuho today initiating coverage on the IT services sector, calling it the picks and shovels of AI. Analyst Dan Dolev recommending 3 stocks to buy in that space joins us now at Post 9. It's good to have you here.
Hey, Scott.
These are names beyond the bright lights, so to speak. Names like Accenture, EPAM Systems, and Globant. Is that how you?
Globant, yeah, Globant.
Yeah, buys on all. Why are you looking here?
So, yeah, I want to give credit to my partner, Sean Kennedy, on this one, too. So we put a 100-page report on it. And I think that what people don't appreciate is everyone's like talking about the AI hype, but someone needs to do the work. And
Bank of Canada's Senior Deputy Governor Rogers says central bank balance sheet is to show a total loss of about $6 billion Canadian dollars.
Go to someone who's going to implement Microsoft, implement SAP. Those guys are the picks and shovels. They're in the engine room of the boat.
You wrote about this in your latest newsletter, right?
Yeah, I wanted to ask you, I think one of the most positive features of these types of companies is how CapEx light they are. So they have thousands of employees and they're technical employees, but they're not building data centers to meet this opportunity. So when there's a big wave of spending on AI, a lot of the money drops right to the bottom line. They become very profitable. Could you speak more on how that works and what we could expect here with these 3 names in particular?
Yeah, it's a good point. And those are people-heavy businesses, and I think that's why, there has been so much controversy. AI is going to take them, it's going to take them out of business, et cetera. But we see this differently. Those, people-heavy businesses, when demand picks up, they can very quickly increase or decrease, the amount of workers they have. And this is what gives them sort of that, sort of the edge there in terms of the ability to work on AI. So that's how we see this happening. They're much better at protecting margins than someone who's CapEx heavy and has to, build all this stuff.
Are these stories, do you make the case that these stories are largely unknown related to AI? Because over the last few months, these stocks have rallied a lot. So somebody must know something about the role that these companies are going to play in the building out of AI.
Yeah, I think it's sort of because if you go back to last year to the AI hype in NVIDIA and stuff, the big bear debate on these names was that, they're going to get disrupted by AI. And then people are starting to wake up to this and are looking. Let me give you an example. 10 years ago, people worried about the cloud. Accenture's cloud business went from $1 billion in 2012 to $32 billion, last year. So these guys, this is the best example. The correlation between software and AI is the R squared is or software and IT services is 68%. So I think that's what people are waking up to, and that's why these stocks have started doing better in the latter part of last year and early this year.
Is the demand coming from large corporations, government? Where is it coming first, and then where do you see it going to?
So it's both. It's the beauty of it. It's across the board, right? You've got anywhere from Pepsi, like Disney is Globant's largest customer. So we did some analysis. Ex-Disney, they would have done even better because Disney had some issues. So it's literally across the board. It's like an ETF on AI. That's the way to think about it.
So, you
ETF on AI.
you actually own Accenture, which is a buy from Dan with a price target of $426.
Yeah, look, I agree with you. We've owned Accenture for a long time, and the idea was you get the huge operating leverage because when they get the demand come in, it's variable costs.
Exactly.
And then they can pass that cost on, and then once they're in there for a long time. And globally, Accenture's everywhere. So we like that when you said it was cloud, and then they do the BPO as well. So you have that offset of a company that is really asset light.
I wanted to ask you about one other aspect of this. People trading AI, they've been forced into mega cap stocks. NVIDIA's $1 trillion. Alphabet, Meta, these are gigantic stocks. Managers, people that have a style box they have to conform to, they want to be
Bank
in
of
AI,
Canada's
but they're a
Malcolm
mid-cap
says, I still
manager or a
expect
small-cap
fourth quarter
manager.
growth to be
These
fairly
names work
weak
for them,
despite
and
positive
there aren't a
November
lot of them.
figures.
So there's not a lot of competition for capital amongst, let's say, mid-cap managers. Look at a Globant, what is it, 11 billion in market cap?
Roughly speaking, yeah.
So this is in the wheelhouse of managers that have been watching this AI trade go crazy, and they've been on the sidelines. Do you think that'll be a big catalyst for why these stocks will work this year?
Yeah, I would agree with that. I think it's sort of waking up to that next wave. I think what you're describing, Josh, is sort of the next wave of AI. Okay, I can't, I'm too late on these names, but here I missed.
What could I do?
Exactly. And by the way, you don't have to take, company-specific
Oil futures
risk
reverse
or,
gains.
you know,
Brent and
when you're buying
WTI
these
fall
companies,
$1 a barrel.
It's like the ETF thing. You don't have to take company-specific risk. They'll implement NVIDIA, they'll implement Microsoft, they'll implement, you know, anything that's AI, and that's kind of the lower risk to getting exposure to AI, and that's kind of the crux of our work.
Weiss, you have an under-the-radar name that you have your eye on too, right?
Well, I've actually owned it for a while. It's Vertiv, VRT. So the new data centers, and you need new data centers for AI, that the racks, which Vertiv makes the racks, and they make, more importantly, the cooling system. So the racks run a lot hotter because they'll use 60 kilowatts of power, you know, per rack versus 5 to 10 for traditional data centers. They're also 3 stories tall, the data centers. So I was looking for a picks and shovel way to play data centers. Data centers cap rates of 3%. That's great for sovereigns, some institutions, but not for me. So Vertiv is a $20 billion market cap. The chart looks phenomenal, Josh. Look at it, and I think it's actually a pretty good takeout candidate, but the future for them is extremely bright. It's not compellingly cheap, but I think the scarcity value is very meaningful there. So I've owned that for about a month and a half or so, and look, they'll report mid-month. Maybe, you know, they're over the skis a little bit. I doubt it, but if the stock comes in, I'd definitely buy more.
Okay, good stuff, everybody. Dan, thanks. Thanks so much for being with us. That's
Thanks,
Dan
guys.
Dolo
Appreciate it.
here at Post 9. Coming up, Peloton hitting a new all-time low. We're going to break down the move there, plus show you more of today's winners and losers. First, though, Mike Santoli. He joins us next with his midday word.
ExxonMobil also turns negative. US stocks extend gains, Nasdaq up 1%.
We are back, and senior markets commentator Mike Santoli is here at the desk for his midday word. Got a nice little move in the market, a snapback from yesterday's Powell-induced sell-off, I suppose?
Yes, for sure.
What do you think here?
We talked about it last, near the close. Often a little bit of a rethink, but I have to say it's not the cleanest storyline all around. So you have the bond market saying, okay, maybe we have to wait longer for the Fed to ease. We'll ease on our own through the long end. We're buying the heck out of the 10-year Treasury yield. That brings it below 4%. The rest of the market can kind of live with that. On the same day, first cut at, first quarter GDP from Atlanta is 4.2 or something nutty like that. ISM's better than expected, but labor's a little bit soft. So very dissonant macro backdrop. I said coming into the week, I think quality is kind of expensive. The cheap cyclicals seem hard to trust. You net it all together, and it feels like, that the market probably needs a little bit of a reset or a rest, but it's coming in this benign way so far, which is kind of chopping around, churning, rotating sideways. It is February. You might have to expect a little bit of more turbulence. I am glad and encouraged to see that the regional banks may be trying to find their footing. 2 days after NYCB, we can't really figure out why exactly that should be applicable to so many other banks. So all that, boiled together leaves us, where we are.
We've taken another little move higher here in the market, and we were just showing you WTI, which is taking a noticeable move lower, as you see. There are some reports of progress towards some type of ceasefire out in the Middle East. So we're going to keep watching those headlines, but it appears that the market is at least moving on those initial reports. Dow's better than 300 points to the upside now. S&P, we said, is trying to get back above 4,900 after yesterday's 1.5% dip, and that's a sizable cliff that crude oil has.
Yeah, right around noon, that all came together.
Yeah, so we'll continue to watch all that. Thanks, Mike. I'll see you on Closing Bell as well. Up next, 2 winners, 2 losers. We'll trade them. We're back. Just want to alert you to 2 big winners, 2 big losers. We mentioned Peloton's down 23%. It's the lowest level ever for that stock. C.H. Robinson, they missed on their earnings. That stock getting hammered. Corteva's higher as they beat. And then Etsy. Bryn, what do you think of Etsy here with this news of Elliott in that name?
Yeah, well, they obviously have a playbook here. You remember they took a big stake in Pinterest. I think they're helped Pinterest monetize and advertise more. And I think Etsy has a lot of room to run. And so I think if they can do that same type of playbook, the market definitely loves it, up 9%. So it looks like a winner today.
You heard about the bell's interrupting you here, right behind us at the post here, because Amerisports is officially open now for trading that IPO. Of course, they're the owner of Wilson, the tennis gear, Solomon ski boots, Louisville Slugger bats. They've got stuff all over around the floor here. And we take a look again. This was expected to be maybe priced 16 to 18, dropped below that, priced at 13. And you see the stock is a little bit north of that. It's a modest gain. Maybe not the kind of pop that they were looking for, but we'll continue to track that as we get another IPO here on the floor.
Yeah, they should have called it Amerisports AI. That's what I would have done.
Yeah.
Just saying.
So we're going to take a break. All right, we're going to stay with this. We'll keep watching that. Again, so you got another IPO. It's been really slow, Steve. You know, in terms of the IPOs that are coming to market, a slow drip. Do we think that this is going to improve? It's one of the reasons why some have been buying stocks like Goldman Sachs, for example, thinking that capital markets are going to improve. What do you think?
It's a timing issue, and I think it's still a second-half event for the markets to open up. You need more stability, and Amerisource, you got to see how it trades, but it's not going to do. We had two others, ARM, which has done okay, but basically it's second-half event, pure and simple. I wouldn't get excited about it, but it's still a good reason to buy Goldman in advance of it. You can't wait.
Okay. What about you, Surat?
Look, I think indications like this, if you get more IPOs, you get more capital markets activity, rates are coming down. I think that's a good reason also to buy the Goldmans and Morgan Stanleys of the world, because now you can actually say, what's my capital cost going to be, as opposed to, our rates just going to keep on going up. And spreads are tight. So if you're going to go out and raise debt, this is the time to do it.
I mean, look, it's priced lower than it was expected, right, from what the earlier range was, and it's a 3% mover. Does this give you any degree of confidence? I mean, is this the kind of pop you want to see to give you a real sign that, hey, the markets are purely open for business now again?
I think this is okay if you kind of have to go out in public, but you want to see a higher pop. You want to see activity. You want to see investors coming in and saying, I want to own some of these new stocks coming in.
Let's do some final trades. What do you got for us?
I was just going to say, we're not done with tech earnings. Far from it, even though the big guys are this week. I have PayPal next week. I have Snap, and I have Uber. And they're not all that important to me. Uber certainly is. But these are some names that I'm watching for. And let's not forget, like, there's way more to come.
Yeah.
So.
Bryn, what's your final?
Diamondback. Energy had a tough year last year, but Diamondback was a bright spot, up around 13%. Best E&P. I think they're going to continue to have increased dividends, CapEx, and buybacks.
Yeah, we've been watching, obviously, the move in crude oil. We just showed you dropping pretty hard on those reports that perhaps we're closer to some level or some degree of ceasefire in the Middle East. So we're going to continue to watch that. Weiss, what's your final?
Taiwan Semi. Talk about picks and shovels for AI. It's at a third the valuation of AMD. And guess who makes the chips? So you got to own this one.
Gotcha. Surat?
Meta, I mean, we talked about it before. I want to see how they're going to execute and what they're saying for the next quarter.
You picked it as your final trade on the day it's reporting earnings.
Yes.
Are you new here? We don't do this.
It's a gutty move. Speaking of, closing bell, we're going to run you right up to this big night. Malcolm Etheridge, Stephanie Link, Joe Terranova, Mark Mahaney, Lauren Goodwin. We'll be all over it. We'll certainly track what's happening in the markets, too, as we continue to recover from those post-Powell losses. I'll see you on Closing Bell.
Hi, everybody. I am Brian Sullivan in for Kelly Evans today, and here's what's ahead. Timeline turmoil following Fed Chair Jay Powell's pushback on a March cut. The forecast revisions are coming in, including from Goldman Sachs. Their chief U.S. economist is here with the why and the what of what the timeline looks like now. Plus, cut out 4 from the Mag 7. Your guest says the terrific 3 is the new play, and he'll name the 3 names he loves. And the earnings barrage rolls on, and why now is a good time to get in on 3 out of the 4 stocks who are ready to report. We'll name those names as well. All that ahead across the hour, but we begin with today's markets and Mr. Dominic Chu with the numbers. Dom, how we looking?
All right, so Mr. Brian Sullivan, it's generally a green day, and we are seeing a bounce back from the losses that we saw post-Fed yesterday. If you take a look at the Dow Industrials, up about 0.75%, 275 points, 38,424. The NASDAQ Composite up 1%, 15,310, 146 points. And the S&P 500, 4888 right now. It's up 42 points, north of 0.75%, and we're tilting towards the highs of the session. We were up roughly 51 points in the S&P at the highs, up about 8 points at the lows. So again, generally a positive day. We'll see if that bounce back momentum can continue. One other place we're keeping a close eye on that has downside momentum, and to a huge degree, is in the regional banking sector, specifically in smaller and medium-sized banks, due in part to that New York Commercial Bank, NYCB, massive drop yesterday tied to that surprise loss, a slash in their dividend by 70%. It lost 38% of its value yesterday. It's lost another 4% right now. That's well off session lows at this point, so there's a bit of dip buying, if you will. Whether it's fundamentally driven or maybe just short covering, who knows? But a mix of the two there. It's lost roughly 38 to 40% of its value in 2 days. Western Alliance, though, Valley National, Webster Financial, Zions Bancorp, amongst some of those bigger, well-known regional bank names that are moving down in sympathy. Some concerns about commercial real estate, net interest margins permeating through the industry. Keep an eye on regional banks. And then you mentioned that terrific 3, magnificent 7, terrific whatever it is right now at this point. Well, Apple, Amazon, and Meta platforms, of course, are going to be in focus. They're all up today after losing some steam yesterday. All through report earnings. And I'm just going to give you this tidbit, Brian, because I know you like the random but interesting stats and everything else. Apple right now, the options market is pricing in a plus or minus 3.5% move. For Amazon and Meta platforms, both, for these, you're talking plus or minus 6%. So the options market is showing you a little bit of what traders are expecting right now. Of course, we don't know if it's up or down. Still, keep an eye on those trades. I'll send things back over to you.
We like it. You called it a green day, so I guess you're taking the long view.
I see what you did there.
See what I did there? I did. All right, Dominic Chu, thank you very much. All right, so why don't we start then our coverage with the Federal Reserve? Goldman Sachs adjusting its rates forecast after Fed Chair Powell said a March move is unlikely. Basically said it's not happening. Goldman now pushing back the first cut estimate from March to May, although the bank says it still expects 5 interest rate cuts this year. So let's dig in on all these stories a bit. Joining us now is the economist behind that call, David Miracle. He is chief U.S. economist with Goldman Sachs. And, of course, CNBC senior economics reporter Steve Leisman as well. Steve, I honestly, you know me, never at a loss for words, but I think I am this time. I don't know where to start with you because everybody's focused on rates, and I get that. But with the job market showing some cracks, with commercial real estate maybe in the banks showing some cracks, could the Fed focus also shift a little more toward the other side of their twin obligations, and that is jobs?
Yeah, I think that's a good question, Brian, and I think it may be starting to, but I think it needs, just like it needs a little more data to be confident to cut rates, it's going to need a little more data of weak job growth in order to make that call. You still have relatively low jobless claims. You still have relatively low, but it's higher, continuing claims. The ADP signaled somewhat weaker employment growth, as did the ISM this morning. I think if there's a couple months of weaker job growth, the Fed may increasingly put its focus there. It could speed up the timetable a bit, but I think the data has to be pretty bad for that to happen.
Yeah, and David, do you expect we will get that kind of, to Steve's point, quote unquote, bad data and see that shift focus from inflation to maximizing employment?
Not in the near term. I think for now, Chair Powell indicated that there's a pretty high bar for the inflation data to give them the confidence that they want in order to cut by the March meeting. So we pushed back our base case forecast from March to May. More broadly, though, I think you're right that any sign of something going wrong or something looking concerning could get them to cut a little bit more quickly. That's why we kept 5 cuts in the forecast for this year. I think there are a lot of scenarios that when you're starting off with a funds rate at 5 3/8 and inflation has been trending reasonably close to 2, the labor market looks rebalanced, a lot of scenarios could get you to say, we don't need to be this high. We can cut a little bit more quickly. Could be a growth scare. could be labor market data looking a little bit more mixed. I think on average, the labor market data are strong, basically comparable to where we were pre-pandemic. That's the perfect place to be. But there have been some conflicting signals. Could be inflation slowing too much for their liking as well.
Inflation slowing too much. I guess you get my point, Steve, because we've been so laser and hyper focused on inflation for the last 3 years with, by the way, good reason. It looks like the inflation fight may have been won, looking that way, certainly for the data. Whether we get a big turn back up, we'll wait and see. And I just wonder, seeing what we're seeing at a UPS, 12,000 layoffs, a lot of tech stuff coming, the cracks in commercial real estate and banks. You know the Fed very well. You know them personally. Do you think they're going to have to start to talk about the other things that we really just, because jobs have been strong for 3 years?
Well, you know what they say, Brian, it's all good things in all good time. We've had a really good and strong run of jobs. It's not entirely clear that we are at balance. I would be watching the wage data most specifically. I'm not really sure that you can be too strong when it comes to the number of jobs. It's the inflationary pressure from the job market that would concern Powell and company over there. And on the downside, I think that you could have a period of time where you had either 100,000 or even below that, and that wouldn't be seen as abnormal. Remember, Brian, the unemployment rate is just 3.7%. As David says, a couple quick higher numbers, if that happened, would get the Fed's attention. But again, they're saying the risks are more balanced, but they're not quite saying that the risks are balanced. So they're not where you are, Brian, right now in terms of their abiding concern about the job market yet.
David, do you have any concern that inflation could reflare? I mean, we've had this before in history, right? In the late 70s, early 80s, been times where you think inflation's killed, then it kind of in the 70s, rears its ugly head again. Is there any chance, anything in your models that suggests that inflation could come back?
I think in order for that to happen in a big way, you would need some large external shock that none of us are going to guess today. Inflation expectations are back to a level that's compatible with 2%. The labor market has been rebalanced from an initial state of overheating back to conditions comparable to where we were pre-pandemic, when we had, if anything, a low rather than a high inflation problem. So the starting point, I think, is a very healthy one. A moderate increase in oil prices, a little bit of a further dip in the unemployment rate, that's not going to get you into serious trouble. You need some big shock coming along. So I think the inflation fight is basically won at this point. We have re-anchored inflation expectations. We have rebalanced the labor market.
David, just quickly back to you. You said the shock. Could this, the Red Sea stuff, the shipping stuff, slightly higher oil off that, could that be, is that a shock, or would that not be big enough to create the kind of shock with no awe that you're talking about?
I think it's not large enough. The magnitude of the impact of these things, we've seen plenty of big fluctuations in oil prices in the 20 years before the pandemic. Sure, it matters a little bit for core inflation, for near-term inflation expectations, but it has never created anything like the seriousness of the problem that we had in 2021, 2022. So the Red Sea shipping, probably a bigger deal for Europe than in the U.S., but just not large in effect.
Steve?
Yeah, Brian, I want to just bring your attention to the idea that what has happened with the Fed funds rate is that they have dialed out, or increasingly dialed out, the March probability. What they haven't dialed out is what David is talking about, is the number of cuts that happen, or the amount of cutting that happens this year. They're still at, I'm going to give you a fresh quote here, 385 for the year-end funds contract. So what's happening, as you see on your screen now, Brian, is an increasing bet that there could be potential 50 basis point cuts coming as the market says, you know what? I think you're going to the same place. You're just going to have to get there faster. So I'm bringing this up for two reasons. One, to point out the idea that there are these 50 probabilities in there, but in part, there looks to be some bid on some of these issues here that you and David are talking about, that maybe there is a skip in the data, some kind of event that causes, or the Fed may need to move faster to catch up. If you look at the June contract, it's actually 50-50 between 25 and a 50 basis point cut.
Wow. Been 3 years of inflation. Now we're talking about rate cuts. Nothing is certain but change. Steve Leisman, David Miracle, thank you very much. All right, and since the Federal Reserve seems to be the driver of the stock market these days, let's focus in on it and your money. Because even though Bank of America's equity sentiment index ticked down a bit recently, your next guest remains bullish on one trade in particular. She calls small caps tomorrow's winners. And she has 4 names she likes for the long term. Joining us now is Nancy Priel. She is the co-CEO and senior fund manager for Essex Investment Management. Nancy, I love it. We've been talking about this broadening out of the stock market for 3 years. It hasn't happened. We saw a little bit of it at the end of last year. What makes you optimistic on small caps writ large?
Well, and you're right, it hasn't happened. And we thought we saw the beginning of it in the fourth quarter. January obviously was disappointing from the viewpoint of the small cap benchmarks. But what we are seeing underneath the surface is, in fact, some broadening of the market. And even last year, in a very challenging year for small caps overall, there were certain segments of the small cap market that did very well. We know that tech did well, but beyond tech, we also saw excellent performance in the small cap benchmarks from the industrials area. What gives us confidence is that the economic drivers today are the factors that are most favorable for small cap stocks, namely the reshoring of manufacturing and the spending on infrastructure and the electrification of the grid, our world, everything else, combined with very attractive valuations in the small cap space. And perhaps most excitingly for us is the relative positioning of small cap, both in investors' portfolios and also in the market at large. One of the statistics we particularly like is that today, the entire Russell 2000, the small cap stocks, are less than 4% of the entire equity market.
Yeah.
That is the lowest number that we've seen in decades, and it compares to an average weight of 6 to 7% and a weight in the 80s, since we've been talking about the 70s and some of the parallels there, a weight in the 80s and the 90s of between 10 and 13%. That's a lot of room for improvement as these names come back into favor.
All right, let's go through a few names. I'm not sure we'll get to all 4 because the long-winded anchor, but here we go, Nancy. I like nVent, and it's the letter NV, so ticker is NVT, electrified world, kind of the EV. You're not worried about this slowdown that we're seeing kind of in the EV space, that the electrification trend, obviously you believe, will still continue?
Well, the biggest driver for the electrification trend is not actually EVs, it is generative AI. When we look at the build out of data centers that we are seeing and that we think we will continue to see, that requires a tremendous amount of power to drive that. In addition, we know that we've recently seen the launch of Bitcoin ETFs. If you're a bull on Bitcoin, that also requires data centers. nVent is a player in those data centers, and they're really focused on both the bricks and mortar, if you will, of enclosures and metal boxes to hold the data, to hold the servers, but also on thermal management, which is increasingly important, particularly in these big data centers. So we think that they have great growth.
I would say the amount of energy that we're going to need, the electrification, we're going to need hamsters, in a billion hamsters and a billion wheels generating power. I'm going to skip 2 more. Patrick Industries, PATK. Building products for marine, power sports, RVs. That would seem to be a little bit risky if there is a consumer slowdown.
Well, it is in that sense. However, what we like about Patrick, there are a couple things we like about Patrick. One is it is an incredibly well-run
Shortly
company
expecting results from the Fed reverse repo facility.
The reason we like it now, and it's been a strong stock, it's not that it's completely undiscovered, but we are at the end of an inventory cycle on the RV side. We think we're near the end on the marine side, and they've just entered the power sports industry. These are inventories, not Patrick's industries, but inventories of the RVs and the boats, et cetera. We're seeing sequential improvement in sales and sell-through. And Patrick has distinguished themselves through other cycles by continuing to gain dollars of content within their core customer markets. As I mentioned, power sports is a relatively new area for them, 2 billion TAM additional. So we think they can execute well even in a somewhat challenging environment.
Nancy Prowl, we appreciate the views. The other two names, I'll just say them, Docebo and Digi International. Love the picks. Some new names. Nancy, thank you.
Thank you.
All right, we are just getting going. Got a lot more to do on deck. Nearly
74
$5 trillion
counterparties
worth
take
of market cap.
$503 spot
Central Report earnings
$548 billion
today.
at the Fed reverse
And that is
repo
just Apple
operation.
and Amazon. The numbers and the narratives to know ahead of that. Plus, with all the layoff announcement lately, will tomorrow's job numbers be another sign of some growing weakness or not? We'll talk about it, where the opportunities may be for workers. The Exchange, back after this.
This is The Exchange on CNBC.
For a year's worth of our service for the price of 1 month and save 92%.
So noting natural gas futures extending losses, prices falling below the lowest since May 2023.
Asset.com.
All right, welcome back to The Exchange. We've got more mega cap tech earnings on deck, and we, of course, have full team coverage covering every angle for you. Steve Kovac is in Cupertino, California, outside of Apple's HQ. Kate Rooney has a look at what to expect from Amazon. And Clockwise Capital Partner and portfolio manager James Chakmak is here with the trade and why he is throwing out more than half the Mag 7 and sticking with just 3 big names. It's going to be a big block, so let's start with, I guess, Steve, formerly the biggest market cap company in the world, and that is Apple.
Yeah, that's right. And it's a pretty dreary day here, but analysts expecting a not so dreary report in the sense of Apple returning to that top line sales growth for the first time after a full fiscal year. That's 4 quarters in a row of declining sales. Now, comps are a little bit wonky. There's a week shorter than before, the quarter ago last year and all that. But overall, analysts expecting about $118 billion in revenue. That would be about 0.5% sales growth for those keeping score at home. But, of course, there's so many headwinds and other questions throughout the rest of the year, Brian, one being China and this renewed competition Apple is facing now with Huawei, the Chinese smartphone brand that was out of the smartphone game for a couple years there. Now they're back, and we've been seeing some initial data coming out over the last few months saying, you know, Huawei is actually taking share away from Apple. And that is why, Brian, guidance is going to be super important. We also got some reports earlier this week from analyst Ming-Chin Kuo, a top supply chain analyst when it comes to Apple, saying Apple is planning to ship 15% fewer iPhones this year throughout 2024 than they did a year ago. So listen to the call, Brian. That is going to be super important when we get that March quarter guidance from CFO Luca Maestri. What does the rest of the year, what does the spring quarter look like, and what does the rest of the year look like? I'll also note we're on the eve of the Vision Pro launch. This is Apple's first major new product in 9 years. That was 2015 when we got the Apple Watch. Vision Pro going on sale tomorrow, so I'm expecting to hear Tim Cook, who, by the way, graced the cover of Vanity Fair today. First time we've seen him wearing a Vision Pro in person or photographed like that. There you go. You see him right there. So expecting some color about the Vision Pro launch as well, Brian.
Well, I'm excited because tonight on Last Call, 7 p.m. Eastern, 4 Pacific, tune in. We're going to actually have the Vision Pro on set. I'm going to throw one on and literally be on TV live. It's going to be like real reality, augmented reality, all at the same time. My mind is already blown. Is it still, though, Steve, with the Apple all about the iPhone? Does iCloud matter? Because I don't know about you, my man, but I know this. I'm paying Apple a boatload of money every month for storage, apps, services, subscriptions, etc.
You are Apple's favorite kind of customer, and that's the services business right there, which has, in the last couple quarters, showed some renewed growth, double-digit percentage growth again. There was a kind of lull coming out of the pandemic as people were spending less on apps and services, but that's kind of resurging again, Brian, to your point. All those subscriptions that you take, that you subscribe to through the App Store, Apple gets a slice of every one of those subscriptions. And so we often hear Apple say, you know, we have this many millions or hundreds of millions, rather, of subscriptions through the App Store. All of that is a sign that they're taking a cut from it. So, yes, services will be another big number. And iPhone, of course, the biggest part of the business, expected to grow a little bit, especially because a year ago there were so many production problems in China due to COVID shutdowns. So there will be a little bit of easier comps and some growth shown there, most likely, for the iPhone, Brian.
All right, Steve, long day ahead. We'll look forward to it. Probably see you tonight as well. Steve, thank you very much. All right, Amazon, meantime, is not all about e-commerce anymore. One big thing that investors are watching now is, of course, Amazon Web Services. Kate Rooney here now with more on what to expect from Amazon. Kate?
Hey, Brian. Yeah, investors are watching Amazon Web Services, AWS, because it's really become the company's profit engine. Expectations for AWS are now high after both Microsoft and you had Google reporting strong cloud growth on their cloud competitors. It's all about that revenue growth rate. So AWS has been lingering at around 12% the past 2 quarters. You can see that on the right side there. A little over a year ago, though, it was up in the 30% range, 33% back in 2022 there. 13%, that is the number to beat today, Brian. Piper Sandler calls it the bogey and says that will determine the outcome for the stock today. Also watch spending. So Google and Microsoft reported this week, both called out CapEx increases thanks to AI. They called it notable and material in both cases. Expect some commentary on where Amazon stands in that AI race and how they're going to monetize it. And then there's that core e-commerce business. Still key. Investors are expecting some margin improvement over there, especially in its North American retail business. They are looking for upside on the advertising business as well for Amazon. It's launching ads in Prime Video. Investors are looking for some cost savings after going through multiple rounds of layoffs. As Jeffries put it, they are now in harvest mode as they continue to optimize the cost structure. Amazon's investment in EV maker Rivian could be a drag on net income, so watch that. Rivian shares are down more than 30% this year. Brian.
All right, so yeah, Amazon Web Services, you've got the stake in Rivian, but I got to imagine that e-commerce still matters. I mean, how many boxes of LaCroix water or toilet paper, whatever they're shipping out, right? Because everybody you know probably has a cardboard box on their step.
100%. Prime is really key here. It's that flywheel effect. They've raised prices when it comes to Prime, and they talked about that this week even. Getting that timing from where a box is in a warehouse to your front door is key. They're making that faster, and part of that is regionalization. So moving the warehouses closer to where people are, using AI in some cases to kind of anticipate, you know, if you're in Arizona, you might need sunscreen. If you're here in the Bay Area, you know, maybe not. So they are using AI to kind of anticipate customer needs. E-commerce is still big, but not as high margin as AWS, and that's why investors really watch that side of the business. It's become the profit engine, but e-commerce on the revenue top line, still much bigger, but just not as profitable.
Kate Rooney also have a just bizarre premonition. We'll see you again later today. Kate, thank you very much.
We will. See you at 7.
All right. Yeah, exactly. Or 4, your time. All right. Your next guest says, forget the magnificent 7. It's more like the Mag 3 or Terrific 3, focusing more on Meta, Amazon, and Microsoft. And he says it's time to hedge on tech as the sector could be due for a pullback. Joining us now is Clockwise Capital Partner and Portfolio Manager, James Chuckmuck. James, good to see you again. I notice that in your Terrific 3, we got to come up with a new name, of course, you know, Super 6, Terrific 3, whatever it is. Apple was not on the list.
Yeah, essentially the way we think about the names that we want to lean into and truly overweight is based on how predictable is the revenue picture and the earnings outlook. And on top of that, how much optionality is priced in or not priced into these stocks. And we think among the 7, only Amazon, Meta, and Microsoft have that predictability as well as optionality. And the other ones, you know, we have question marks on, like as Steve was reporting, you know, what happens with Apple shipments, iPhone shipments this year, Tesla kind of throwing their hands up in the air on unit sales for the year. So there's more questions than answers on the 4. So we're leaning into those 3.
Yeah, and you heard Steve talking about Apple, and I'm not picking on him again. You know, everyone loves their iPhone. What I'm saying is that it feels like Apple is a phone company. They've got augmented reality. It's going to be cool, but that's got to be a niche product. Of course, the MacBook, they're great, but you buy one, it lasts hopefully 5 to 7 years. And the iCloud services business. In your view, what is the proper way to value Apple? Just pure phone sales?
I mean, we do look at it on some of the parts basis, but ultimately, I think that investors will just predominantly value this on a PE basis. You know, the sum of the parts doesn't always add up to how investors analyze and value these companies. So on an earnings basis, you know, we think around 30 times is the right number. I think the real question is what happens to revenue. Now, we do think that MacBook sales will accelerate this quarter and potentially come in ahead of expectations. I think the big question mark is on the iPhone, whereas, you know, we already know that services is going to be up double digits. So I think as long as iPhone does well, I think it'll continue to grind higher. But it's not one that we're going to make a top weight in the portfolio.
Very confused by Meta, you know, the former Facebook, because it got destroyed 2 years ago, year and a half ago. The stock tanked. It has now made up all of what it lost and more. How can a company like that, has products, Facebook, Instagram, WhatsApp, they've been around forever, fall that much and then recover that much? What happened?
Well, it was really just Apple changing its privacy standards.
That was it. That was it. That little button we get when we log on to a new app, it says ask app not to track. That was it?
Essentially, yeah. But it was on by default for Apple services. But you had to toggle it on by manually for non-Apple services. So what's interesting about it is, yes, that was a really tough year for Meta, but they actually came out of that stronger and more defensible. And the changes that they made and the improvements that they made on the targeting side actually made their products stronger and ultimately yielding higher ROI conversions for advertisers. So we think Meta's in great shape. I think the big question mark we have now, it is a top weight also, but the question mark we have is, you know, is the religion on the expense side sustainable or not? Obviously, we're going to get color on that tonight, but that may change the calculus. If it's sustainable, we think that at 25 times earnings, with $20 in earnings forecasted, you know, this could be a $500 stock.
Wow, 500, it's at $395 right now if you're listening on the radio, so maybe another 100 in upside. James Chuckmuck, James, good to see you. Thank you very much.
Thank you.
All right, coming up, the Renaissance IPO ETF coming off its worst month since August. Is there an IPO pipeline problem, and is it helping the best companies stay private, maybe forever? We'll talk about what it means for venture capital and investors like you, coming up.
Welcome back to The Exchange, everybody. I'm Tyler Matheson with your news update. President Biden issued an executive order today targeting 4 Israeli settlers in the West Bank after recent violence, including the fatal shooting of a 17-year-old American there last month. According to a senior administration official, the order targets settlers who have committed violence, destroyed property, and repeatedly intimidated Palestinian communities. In a statement from Secretary of State Blinken, he wrote that Israel must do more to stop violence against civilians in the West Bank. The Oregon Supreme Court ruled today that 10 Republican state senators can't run for re-election. The lawmakers staged a 6-week walkout last year to stall bills on abortion, transgender health care, and gun rights. The ruling upholds the Secretary of State's decision to disqualify them under a voter-approved measure that aims to end such walkouts. And the iconic Fountain of Lions in Rome vandalized today by activists protesting the treatment of circus animals. They threw red, yellow, and orange paint over the 4 lion sculptures surrounding the fountain. The protest came months after a lion escaped from a circus near Rome, sparking panic in a seaside town before it was caught. And there you see the fallout. Back to you.
Yep. Mona Lisa the other day, the lion in Rome today. Tyler Matheson, thank you.
Thank you.
All right, on deck. Are all the layoffs lately just because it is the start of a new year? Or maybe the first sign of a real slowdown? That is next. All right, welcome back to The Exchange. There are some growing signs of a slowdown in jobs. Jobless claims last week, up. Private payroll growth dropped last month. UPS just said it's laying off 12,000 people. And of course, there have been tens of thousands of job cuts in technology lately. All of this coming ahead of tomorrow's jobs number. So let's talk about trends in jobs and hiring and bring in Recruiter.com Chairman Evan Sohn. Evan, good to have you back on the program. I referenced in the tease going to break, is it merely because the calendar? What I mean by that is we often tend to see a lot of layoffs at the beginning of a year. Companies can then sort of adjust their books on the earlier side. Do you view this more as a January specific trend that'll slow down, or could we expect a growth in more layoffs the remainder of the year?
First of all, Brian, good to see you, and thanks for having me on. It's a very complex job market. I think the layoffs in tech, like a company like Salesforce that announces that they're laying off 700 people, are still hiring 1,000 other people. So there's clearly a changing of their overall staffing in the IT space. But healthcare still is strong. You know, healthcare is still in our top 3 areas that the recruiters are recruiting for, followed by IT and sales. Nice to see that sales is up there. I think there's still this notion of if I need to come up with really good earnings, the fastest way to do that was really to lay off staff and to reduce my overall operating expenses. I think we're going to see that growth in sales. Really nice to see that because once I'm done making cost-cutting measures, the next is really to grow my revenues. And how do I do that but through sales?
Yeah, and I think you nailed it on the job market, because not only is it just matching talent with companies, which is what you guys do and do very well, but also, are you willing to work from home? Are you willing to go into an office? Will you go into an office, or will you refuse to go into an office? It used to just be about pay, and I know that's a huge deal still, and it always will be, Evan, but you get my point. There are other things that employers, I'm sure, are asking people right now.
Absolutely. You know, a really interesting January effect, and I think you nailed it on the head. We saw a really serious increase, 100% increase in people looking for new experiences. Now, that number went from 8% to 16%, so it's still a relatively low number. But all of a sudden now, hey, it's the new year, I want a new experience, and it's okay to leave your job. I think what the pandemic really proved is that it's okay to leave a job earlier than 2 years, 3 years, 4 years, 10 years. And so we believe that that's never going to change. We're
Qatar officials telling the news wires that there is no ceasefire deal yet for Gaza.
I don't want to go back to the office, or I want a new experience. Let me go find a job. A really interesting statistic. There you go. You put it right up here now. 41% of the recruiters of the survey, of the Recruiter Index survey, said that 75 to 100% of their candidates are currently employed. That's a pretty sizable number. So that means that we're pulling people out of other companies in order to fill those roles.
Yeah, how do we read that? 41% of recruiters, I mean, I'm reading it. I mean, can I read it? 41%, I hope I can. 41% of recruiters say 75 to 100% of candidates are currently employed. First time that's ever happened.
Official tells the wires that Hamas has received the proposal positively, but it has not responded yet.
On the
so
job
again,
market right now?
the Qatari official here telling the news wires that Hamas has received the proposal positively, but has not responded
yet. With their current company and start dating somebody new.
That's right. So if the quit rates are down, think about the quit rates are down, and you looked at the JOLT number, they're down 20% year over year. So meaning the December quit rate of 23 was 20% lower than the December quit rate of 22. So the only way to really get people out of their job is to actively and proactively bring them new opportunities. And that's really when you start to use a recruiter to do that overall activity. So we saw the number of people applying for roles increase. We saw a slight increase in the number of open roles, yet the sentiment remains the same. So people still are concerned, the recruiters still are concerned about the overall market.
Yeah, Evan, we got to leave it there. Cut you a bit short because you do have some breaking news with Eamon Javers. Evan, you're welcome back anytime. Love having you on. Great stats, great stuff. Thank you, Evan. All right, so here's the news. Shares for-profit higher education Adtalem have been halted due to news pending. Eamon Javers joining us now. Eamon, do we know what that pending news may be?
Yeah, Brian, we do know what the news is, and I've got it in my hands here. It's a 5-page press release from the company. This is the reason why the shares have been halted here in the afternoon, and this is a response by Adtalem, the for-profit education company, to the short seller report that you remember came out earlier this week from short seller Fahmi Kadir and her firm Safket Capital. They blasted Adtalem earlier this week with the report suggesting that Adtalem was facing future funding crunches, future difficulties in recruiting students to their for-profit universities and educational programs and the like. That on Tuesday took about a 20% haircut off of Adtalem shares before they stabilized in the after-hours trading that evening. Today, Adtalem is now responding with their version of events here. They are going through the Safket Capital report point by point and refuting each point in this 5-page press release that they just put out. This is the reason why shares were halted, and this news is now out. Just to give you a sense of the argument here, Adtalem says in this release, while presenting itself as an advocacy effort in service of student borrowers and taxpayers, in fact, the Safket Capital report amounts to nothing more than a thinly veiled and deceptively constructed short and distort scheme designed to extract a quick return at the expense of Adtalem students, faculty, employees, and shareholders. So that is the tone of this press release, and they go through point by point in responding to each of Fahmy Kadir's criticisms of the company. But this is not news pending in terms of, there's an acquisition out there or something has happened to the CEO who's resigning or anything like that. This is news pending for a press release, which is an argument, effectively, as to why that short seller report was inaccurate and why investors shouldn't trust it. I can tell you also, Brian, that I talked to Fahmy Kadir yesterday about her reaction to all of this after the market digested her short report. She told me she put on additional short sales yesterday. She was unconvinced by the company's earnings report, which the company earlied up to Tuesday. It was supposed to come out today. They earlied it up to Tuesday in response to all of this. So some real drama here in this name, Brian, as Adtalem is now fighting back against the short seller.
Yeah, probably a household name. They own the American School of Medicine in the Caribbean, Ross University, a veterinary university as well that are kind of for-profit around the country and in the Caribbean. Fascinating story. We'll see if and when Adtalem starts trading again. Eamon Javers, thank you. All right, coming up, is the IPO market finally about to wake up or fall back to sleep after kind of a sad sack debut for a new name today?
to learn more.
All right, welcome back. Well, the IPO market seems to be picking up the pace this year a bit. Apparel maker Amer Sports debuting on the NYSE today, with Reddit and Shein, two other names expected to list in the coming months. But the billion-dollar question is, are these really the IPOs that Wall Street wants? Deirdre Bosa digging into that for today's Tech Check. Dee.
So, Sally, if you're like me and you love IPOs, all new listings, then sure, we're going to get some exciting names this year, but these are not like the life-changing, disruptive companies that Wall Street is so anxious for. Look at this graphic. On one side, we have the IPOs that Wall Street wants. These are those big disruptive names, $40, $50 billion plus valuations like ByteDance, SpaceX, Stripe, Databricks. They're household names or they're Silicon Valley darlings that investors you would think might be clamoring over themselves to get a piece of. On the right side of your screen, you see the IPOs that Wall Street is getting. These are the candidates for this year, the likely candidates, I should say. You've got Discord, Reddit, Skims, Plaid, Chime. I'm going to put Shein in a different category in a moment, but these are likely, around $10 billion valuations, solid business model, perhaps. We'll have to judge once you get those S1s, but, they're not the big and exciting names. And part of that is there's this disconnect because the bigger, flashier, buzzier private companies, they can continue to tap private markets for funding. So that pushes out an IPO. They can wait. And there's also a little bit of stigma, especially here in Silicon Valley, about going public and being a slave to the quarterly report. Whereas the other companies that aren't quite so buzzy, that might not generate as much interest, and by the way, may not perform quite as well, they can't tap private markets as easily, so they need to turn to IPOs. Brian, I said that Shein is in a bit of a different category because this one, at least to me, is very, very exciting. It is sort of a disruptor. It's been making huge waves over here in the U.S., even though it's a Chinese company or Singaporean as it wants to be seen. That's up for debate. But that one right now even looks to be in a little bit of peril. You had a report that existing investors were looking to sell shares in the private market because already there's being some cold water being thrown on that one.
Yeah, and by the way, Shein eats my timeline on X with other ads, probably in other platforms as well, Dee. But here's the thing. You're out there in Silicon Valley, home of venture capital, right, and private equity and all this stuff. You just feel like more and more money is just being made. We talked about it on my show last night. More and more money is being made in the private markets. In other words, the real money, the big money. They get in on the companies before they go public, and that's where you get the 30,000 square foot house in Atherton.
I mean, that's always been the case, right? Venture capital works on this idea that you're going to invest in 100 companies, and one of them may turn out to be your lottery ticket, right? You might have invested in the Uber or the Airbnb. They need exits, right? And that's venture capital. Private markets typically lag the public markets. They do need exits. They need more of their companies to go public. Doesn't even have to do that well because they got into them at such early stages. But there's another dynamic at play, which is new over the last 18 months or so, and that is mega cap tech money. Billions and billions of dollars, more than the venture capital world has really ever seen, save maybe SoftBank or Tiger Global, investing billions and billions of dollars into these new generative AI darlings like OpenAI and Anthropic, but also some of the smaller ones, right? They're fetching billion-dollar valuations easily. They're unlikely to go public as well because money's flush for them.
That's it. Deirdre Bosa, a shoe-in for Shein. Deirdre, thank you. I try. Coming up, big oil, bleach, and boots. We've got the action, the story, and the trade on some of the names not in technology set to release their numbers. Stick around.
Asset.com.
All right, we talked about it at the top. Got a lot of tech names, Apple, Amazon, and more reporting after the bell today. But there's also numbers coming out of non-tech. ExxonMobil, Chevron, Clorox, and Skechers Shoes all on deck. Joining us with his trade for today's earning exchange is Chris Grisanti, MAI Capital Management's Chief Equity Strategist. Chris, good to have you on. Let's start off with I almost called it Chexon, which I just combined the two names. Maybe they should. Someday they'll merge,
That's right.
and it'll be known as Chexon, and it sounds like a video game or something. There, yeah,
right,
it's perfect.
Brian.
ExxonMobil and Chevron. Oil prices in focus. Geopolitical tensions continuing to rise as well. What are you looking for from ExxonMobil?
You know, Brian, I'm positive on the oils. It's good to be with you again. You know, for these guys, CapEx is down. They have a lot of levers to pull to return capital to shareholders. And of course, the problems in the Middle East have put a floor under oil pricing really for the foreseeable future. So I'm not sure what the number's going to be, but I feel comfortable owning these things in front of the number.
Okay, yeah. Chevron underperformed and maybe turning it around. By the way, you got Chevron on CNBC, I believe it is, tomorrow. Let's talk about Clorox. I mean, Clorox was all the rage during COVID, bleach and everything, right? What's your view now on Clorox? Who are they just going back to kind of being a slow growth dividend company?
Yeah, it's a classic value name. They've been absolutely killed with the devaluation of the peso in Argentina. So all eyes are really going to be on that Argentine problem, Brian. So I think expectations are quite low there. I think the companies are poised for a long-term recovery, not just in Argentina, but really in many locations.
Mm-hmm.
So I would be an investor there. I like the setup. If I'm wrong and Argentina is still a problem, I'd probably, I think it'd be attractive on weakness.
Very quickly, 30 seconds, Skechers.
Skechers, great company. Stock's done quite well since late October, though, up about 35%. I wouldn't get in front of the earnings because I think there's probably a little more risk than reward in the short term. But again, if there's weakness here, I'd like to be an owner long term.
Chris Grisanti, MAI Capital Management. We did a lot there in a short amount of time, and I love it. Chris, thank you.
Brian.
Yeah, thank you very much. Really appreciate that. All right, folks, that does it for us here and me on The Exchange. But, of course, tune in tonight, 7 p.m. Eastern, 4 p.m. Pacific, for Last Call. That is tonight. But Power Lunch starts on the other side of this quick break. We'll see you there.
for the planet.
Welcome to Power Lunch, everybody. Alongside Courtney Reagan, I'm Tyler Matheson. Despite a record-breaking rally, there is always something for the markets to worry about. A regional bank stock losing half its value in the past 2 days. Could we be in for a replay of that crisis from a year or so ago? And mega cap tech earnings, Meta, Amazon, Apple, all reporting today. It's a big day. Can they meet lofty expectations?
Plus, the world's #1 female golfer will join us. She's got a new corporate sponsor. And there's also a deal to beef up the prize money for the Women's U.S. Open. We'll discuss that and more. But first, let's get you a quick check on the markets here. She tried to say on this Thursday, we are higher across the board. Dow Jones Industrial Average higher by 0.7%. S&P 500 higher by 0.9%. And the NASDAQ leading the way, making up some of yesterday's losses, up by about 1% or so. Check out shares of New York Community Bank down again today after losing more than a third of its value yesterday after the company lost money and slashed its dividend.
Week to date, down 43%.
Yikes.
Other regional banks falling for the second straight day in sympathy, if one bank can literally have sympathy for another. But the question is whether these issues are NYCB's alone or whether they could spread, as we saw with Silicon Valley Bank last year. Let's bring in Leslie Picker now for some analysis. Leslie.
Yeah, Tyler, that is the key question today. The fallout from New York Community Bancorp continues. Those shares, as you mentioned, adding to yesterday's 38% declines, currently down more than 8.5%. NYCB's fourth quarter earnings yesterday revealing a biting slump in credit quality thanks to troubled loans for a co-op within its multifamily portfolio and an office CRE loan. For many bank investors, it was a deja vu, eliciting fears of contagion akin to what they experienced last spring. Even more ironic since NYCB acquired part of Signature's balance sheet from FDIC receivership after that bank failed last March. The question now is whether NYCB's issues are isolated to that one bank or whether there's broader systemic risk at play. Bank of America analysts say that the regional bank sell-off is likely overdone, quote, given idiosyncratic factors tied to NYCB. The firm notes that NYCB crossing the $100 billion in assets threshold after acquiring Signature subjects them to a whole host of additional costly regulations. However, B of A notes that, quote, higher losses tied to commercial real estate, CRE office exposure, increase in criticized loans tied to multifamily CRE are a reminder of ongoing credit normalization that we are likely to witness across the industry. And of course, yesterday's FOMC meeting, pushing back against the notion that rate cuts were imminent, served as just salt in the wounds for this already battered sector, guys.
Leslie, what does all this mean for Basel III regulation and then, of course, these looming higher capital requirements?
That's another great question, Courtney, because on one hand, some of these losses are tied to just compliance with some of the stricter regulatory compliance, getting ready for Basel III. But then there's been this kind of notion in the market. People are expecting some sort of watering down of the Basel III proposal as it was written. And regulators could turn to what's happened this week and say, look, these are why we need higher capital requirements. This is case in point as to why we're doing this. So now there's kind of this question as to, will they hold up New York Community Bank as the canary in the coal mine as to why these stricter regulations need to take place? Or will that argument that, these are really costly regulations and it's creating a lot of turmoil, themselves be the kind of the winning argument? So additional uncertainty as well as pertains to regulation.
No one likes uncertainty, especially the regional banks right now. Leslie, thank you very much.
All right, switching gears now to Apple, on deck to report first quarter earnings in just a couple of hours. Among investors' top concerns is iPhone sales in China, where the company is facing regulatory headwinds, increased competition from domestic brands, Huawei among them. Also, its future ambitions in generative AI, which could become a deciding factor in retaking its crown as the most valuable company in the world. That title now belongs to Microsoft, in part because of its partnership with OpenAI. And while Apple shares did jump almost 50% last year, it was the smallest gainer in the so-called Magnificent Seven. So what lies ahead for that company? Joining us now, our own Steve Kovac, who is live in Cupertino, and here on set is Ben Reitzes, head of technology research at Melius Research. Steve, let's start with you. Fill us in on what we expect to hear from Apple today.
Yeah, Tyler, muted expectations. At least that's what Wall Street's looking at here. They're expecting for Apple to return to top-line sales growth for the first time after 4 quarters in a row of declining sales, but not by much. Revenue expectations for overall $118 billion. That would represent, more or less 0.5% of revenue growth, but still growth again. But yes, like you said, there are a lot of troubling expectations here. I'll note those estimates used to be about $123 billion last fall, and they've been since pared back quite a bit just because of all this troubling data we've been seeing out of China and just overall smartphone demand. You mentioned new competition. Huawei is a big one that seems to be putting a dent in Apple's market share over there in China. And also top analyst Ming-Chi Kuo, very tied into the supply chains that Apple uses, said Apple is going to ship 15% fewer phones this year potentially. So really important to look at beyond all that is what guidance Apple gives on its earnings call after that initial report comes out. 5 p.m. is when that call starts, and we should expect to hear something, some color and commentary forward-looking on the March quarter. A lot of sour commentary around that. And of course, Tyler, we are on the eve of the Vision Pro launch. This launches tomorrow. That $3,500 augmented reality face computer, whatever you want to call it. Tim Cook had a big Vanity Fair cover story today where he appeared for the first time. We saw a photo of him actually wearing the Vision Pro. So big launch event for Apple starting tomorrow, their first major product in 9 years. Expect to hear a little bit about that during the earnings report today as well, Tyler.
Very interesting, Steve. Stay with us as we bring in Ben Reitzes. Ben, I guess the immediate concerns for Apple have to do with iPhone sales and demand, perhaps most especially in China. But maybe the longer-term issue here is how does Apple don the mantle of an AI company? And how do they make that their narrative? So address both of those questions, if you would. First, the iPhone sales issue, and second, the AI question.
Yeah, well, iPhone is the majority of revenue and profit, so it's the engine there, and it attaches, obviously, a huge amount of the services. So that's going to be the laser focus. The data I've seen is that the fourth quarter is actually not so bad. The big concern is what's happened in the last month in China. Is it deteriorating every week? Why'd they do the discounts? What are they seeing? And what does that implicate for the March
What does
guidance?
not so bad look like, sound like, mean?
Well, some of the data I've seen in the fourth quarter in China is down just in the single digits, but there's potentially been a deterioration in recent weeks. So we got to ask them that on the call and what they're seeing. But there is a chance that things accelerate out of this quarter. They have new Macs, they're going to have new iPads, their services business is doing well. They've had some price increases there that cushion the blow from the App Store changes. So if the iPhone can hang in there, they can get back to revenue growth. But let's talk about your AI question. Revenue growth is going to be the key. If they can grow in the March quarter, stock may catch a bid. But and what they say about China. But I think AI is going to be like the third most important thing. What they say, what they're teasing. They have an event in June, their developers conference, and I think they're going to announce some new AI features. We want to see an updated Siri, and we want to see services that people are going to want to use on your iPhone. And that could drive an upgrade cycle. I'm not so sure that this year is going to be the huge upgrade cycle, but I think next year will be. And it reminds me of past cycles like super cycles.
And that could be driven by AI.
Yes, I think, yes.
Ben, you have a buy rating, but your price target's 222 or about 185. So what's going to drive us to 222 from here? How do you get that 20% upside?
Well, what I think is if we start to reaccelerate on the revenue side, it's warranting of a very high multiple. Their services business and gross margins are excellent. They are in rarefied air. And those are actually what keep a floor in the stock. And if revenue starts to reaccelerate, I think that we could see earnings power touch $8 within 2 years, well within 2 years, at least earnings power. And that could power us even much higher than my target. But I think we got to see this cycle. We got to see the iPhones accelerate, and then that's what takes us there.
All eyes on Apple, as usual. Thank you, Ben Reitzes.
Yes,
and Steve Kovac. Stay warm out there, Steve. We'll see you soon.
All right, thank you, Ben. Shares of Norfolk Southern higher today on reports of a proxy battle. Now the company is responding, and Morgan Brennan is in the newsroom with the details. Morgan.
Hi, Tyler. That's right. So an investor group led by Ancora Holdings has built a large stake in Norfolk Southern with plans to run a proxy fight and to attempt to overhaul the board and replace the railroad's CEO, Alan Shaw. Norfolk Southern just issuing a statement a short while ago saying, quote, The Norfolk Southern board and management team regularly engage with shareholders and take their perspectives seriously. We are committed to acting in the best interests of the company and our shareholders as we continue to execute our strategy to balance safe, reliable service, continuous productivity driven by our precision scheduled operating model, and the pursuit of smart, accretive growth. First reported by Wall Street Journal, I can confirm the details of that report that Ancora has built a roughly $1 billion stake. It's nominated a majority slate of directors to Norfolk Southern's board. This is a bid to oust CEO Alan Shaw, according to people familiar with the matter. We're seeing this because Norfolk Southern has underperformed on certain financial and performance metrics, and as such has underperformed in terms of railroad stocks over the past year or so. As you can see right there, though, shares of Norfolk Southern are up 7.5% on this news of activist pressure today. Guys?
Morgan, thank you very much. Please keep us updated as the story moves along. Well, coming up, Elon Musk seeking a Tesla shareholder vote to move the incorporation from Delaware to Texas. What legal ramifications could they face? Plus, teeing off a new team up, Ally Financial and the USGA announcing a new multi-year, multi-million-dollar corporate partnership. More on that further ahead on the show. Stay with us.
All right, give me just a couple seconds here. Oh, yeah. Just give me one quick second here. All right, we're gonna get ready here in the background. So let's take a look at Google here, just down below really quick. Still hasn't been able to get above that daily trigger. There is a cross down here. Well, first let's do this. Let me see if I can get over there. Give me a quick second here. Oh, what do we got going on here? Did I share that screen down there? Give me one quick second here, boys and girls. Hold on. All right. Hold on. We're almost there. I just cracked a beer. I need a beer. It's been a long... I haven't really been to sleep in like 24 hours. And maybe longer. Maybe 36 hours or something. Okay. What do we got going on here? Book map. What screen is that? Do I have that screen right? Oh, there I am. I'm in the picture. Woohoo! I gotta take a quick look here at some of the charts that are on the bottom of the main screen that we watch all day long. Excuse me here. I haven't slept in a couple days. I've been trying to get this wrapping up
today.
A pretty large project. So bear with me if you can. Okay, so let's go back to Google. There's a 1-minute chart right now in Google. We're going to switch over briefly to, we had a request, I think it was Kamel or someone asked about it earlier. Now you're seeing a quick peek right here, right? Yep. I got to stop this thing from flipping around right now. Hopefully that works. There we go. So just a big thing to see here on Google would be, a big thing on Google here, right, is you've got the, I'm assuming here, I'm gonna make an ass out of myself here, but you have the immediate drop, right? Take the money and run on Google, right, on their earnings. And there's of course, there's going to be a contingent of people. We got a little bit of a reversal here to the downside. You can see that daily trigger moving to the downside here. And we are below the hourly trigger. So as of right now, it's bearish. The other thing that I would say about Google here is, yeah, you're looking for the retracement, at least close the gap up to the upside. But just remember that they're likely not going to do that until either Friday or possibly the close today, Friday, or possibly next week as well. You might get that retracement. Oftentimes you'll see the murder of options, people trying to thinking they're going to make some money back or whatever. That's not going to happen. Or if they do come back up here, at least those options will be dead on the arrival, right? Anything that is like a 150C or something like that, likely, even if it does come to money, it'll be at zero, right? So just Google. The one thing I want to show you here, though, that's important is that you're down on your weekly trigger. That's good. It's a nice pullback for Google. Do I think it'll go back up? Sure, but I would like to see it above that 143 and some change there, and some kind of reversal. Could turn into a bull cluster here to go to the upside. But until that happens, you got no trade as a bull, okay? You got no trade until that happens. So you want to be seeing that, right? You want to see that squeeze up here. You can trade inside of here if you want, but you want to see that squeeze up there. Get above the previous high once you're above the hourly trigger, and then start to close that. You can enter that trade there, though. Don't be fucking around in here unless you're holding it for like 5 minutes or something like that, okay? On Google. Man, I look really tired right now. Whew. I do not look good. Okay. But anyways, that's Google. That's a 1 minute chart on Google right now. We'll take a peek one more time on the 30-minute on this chart as well. And there is a problem here. There is actually a problem here, and that is this. We're at zero velo on the daily right now. Let's take a look and see where it catches a bounce. Yeah, it actually likes that zero line pretty well right now. So, been doing really well on that zero line on Google on a 30-minute chart. So it might reverse here. I'm actually going to give it to Google to get that reverse. And I want to talk to you about this right here. So it's a good way to look at Google, right? You're trying to, excuse me. You're trying to buy. We're talking about averages here, right? It's always averages, probabilities, statistics, always. And like when do you put the risk on? That kind of stuff. So let's say you're like doing 0 to 8s down here, some shit, or a weekly. You get smoked again, right? Get smoked again, believe it or not. Like 1, 2, 3, 4, 5, loser. Basically what it is, right? I don't know, put a spread on over here and you panic sell down here. You know, it's all that stuff, right? Just garbage. A lot of your best trades, though, are up here. Right? Yeah, you're making money, woohoo. Or you at least wait for you could, like, this is a good day trade right here, but it's not sustainable. You already know it's not sustainable because it's come back down and check that trend is higher. This is actually the best trade right here. The moment it crosses back up again, this is like the best part of that trade. But there's a process to get there for that trade to be successful. And a lot of times it'll blood down on you. And you're trying to always take like the best, most choice trades, right? So something similar to that, if this was going to reverse, you can ride the lightning here above 143. You know, if the lightning comes in and it blasts up, and you're like, fuck yeah, I want to take that, woohoo. If you're above the daily trigger, sure, you could take that for a quick rip or something like that. But you're always looking for that quick bounce down, that consolidation, and the beating the previous high that you were just on. Okay, I don't care if that high was right here, here, wherever that is. That like 1, 2, 3, 4, 5 steps, and then that part of the trade. If you take only that part of the trade, it's outstanding. Okay. So Google, not quite there yet right now. And, you could I'd be looking for a little bit of a more low, you could possibly get down here. we are selling off the hourly trigger right now. Here's your first sell off the hourly trigger right here. So these bears are going to come in, and they're going to sell that hourly trigger. They're going to sell it every time until they get stopped out. All right? So if they can keep doing this, right, sell this. Some stops up here. And even if they get stopped out, there's that squeeze we're talking about, right? It's still going to come back down. And usually let them get out of that trade anyways. Not always, but that's their plan at least. Okay? So that's Goog. Bring that over there. That over there for you. We're going to talk about Apple here. Got an earnings coming out. We talked about this one earlier today, right? And I had said to you, yeah, you can do the ping pong, whatever you want in here. But you're not long down here. You can't. You got to have price above the hourly trigger. You need the cross on the half hour down here, that gray line. Right? You need that cross down here to help you out. You need the back check on price. Now they've got an ER coming up, right? Some of you probably want to take that trade into the close. We're gonna discuss this ticker here in relation to SPOOs or SPY in just a moment, okay? And so there's a setup here for a nice squeeze higher into their earnings, but there's also a setup to sell that news. So are you trading that with Apple? Are you trading it with Qs? Are you synthetically trading it? Lotto trade that you can close at 415 before that shit pulls back on Friday, if it does. It could keep going up on Friday, but, you know, bank and profit is fucking nice. And winning 7, 9, 10 trades feels really good for when you really fuck up or you do something against your own rules, right? And you get torched. So I would, if you're going to take a lot of trade today, I'd be looking for something that you can exit. Even if you missed out on another, if you make 300% and you miss out on another, and plus those options are likely going to be dirt cheap, right? So your risk is low, your potential is high. Now I don't know when Apple reports their numbers. It could be later than 4, so I don't know if this would actually work on Apple. I'll have to check before 4 p.m. today and see when all these reports actually take place. Not the guidance, just reports. But I see that, right? Now another way to do it too would be to just buy Apple. Right, so then you can exit by 8 o'clock at night or something like that. If you're going to take that lotto trade, and it's not bad to own Apple, anyways, right? Is it? Is it ever bad to own Apple? Not really. Well, I guess it can be. At any rate, you got Apple here. I'm going to show you the SPY setup for like a rip into the close, and then the sell before you wake up tomorrow morning, if possible. Anyways, we'll do that in just a minute. So this is Apple 30-minute chart. Am I bullish on Apple in the close? Of course, fucking Apple. But if they sell, Apple doesn't keep going up if nothing special gets announced. I don't want to hear about their headset and all that other bullshit. You know, Apple, I've traded Apple. I fucking traded Apple for years. You need shit like stock split. You do. And the reason being is that IV crush that comes in no matter what. So I traded I traded an ER with a split announcement on Apple, right? With that split, I made decent money. I got trapped, and then I made decent money on the overnight. I got trapped and had to hold. I was up. I took the trade like 6 weeks before or something. I think I needed the event to trigger money or to make money. I think it was up 40%. Then I was down like 30.
Prices extend their losses.
Jesus Christ, that's loud.
WTI dropping $2 a barrel now.
You guys can't hear that financial juice, can you? I gotta find out why that is. Okay, so the idea here would be, even into that ER, I came out of it, I think, up to maybe 100 or 300% or something. And when the market opened, I closed immediately. Half my shit. Made, I think, 30 or 60K or something. Left another half on. I watched all that money on the other half go right back to fucking zero. I didn't lose any money, but I hadn't made any. But I bought the calls for it. It took kicking in a whole other round of buyers to then make bank over like 2 or 3 weeks or something. It was insane. Made a bunch of money. So just be aware of that on Apple as well. There's some other better ways to trade it, better ways to get out, better ways before the IV crush and all that kind of stuff, like a synthetic trade. Okay, so there's Apple. This is the 30-minute chart on Apple. Got the nice little reversal candle. Everything's set up, looking pretty good here in Apple. 30-minute chart right on Apple down there, parked on their weekly trigger. I'll tell you this too. Apple's parked in its weekly trigger. It's got a big giant 30-minute reversal candle here. That's demand. And we'll talk about looking for to selling calls into dealers want to get rid of calls into Friday and after the close today. They want you to hold these fucking calls even if the price goes up. They need a bag holder. It's you. You understand? So I would synthetically trade this and get out. All right? Even if it goes up, even if I'm wrong tomorrow, it doesn't matter. You keep those tools. And the reason you say this is because, and you say I keep these tools because when you backtest this shit and you look at your trader log, you're like, I was fucking wrong more times than I was right on those trades. I was more right than I was wrong in these other trades. Okay? So there's Apple 30-minute chart. Tesla. We already went over this one. I'm not going to do it again. I spent like an hour on Tesla earlier today. I'm not doing it. You guys know my jam on Tesla. You're going to say, oh, this is all consolidate and all that kind of stuff. There is a looming fuck show above on Tesla. This happened just 2 weeks ago again. They had a drop. I said, if we go up there and test that 232, I'd really like to see that. Close the gap. Then we rolled down in a major way. Bad news would come. Sure enough, Tesla, they tricked you, right? Boom. They tricked you the last time, right? They told you, yeah, we're going to close the gap, right? They didn't do any of that shit. They just rolled you back down again. So Tesla, you know my deal here. I want to see us get above this bullshit here. This is gnarly. Back test it successfully, then get above it and start trading that again. Normally, I would, under normal circumstances, I would have bought that fucking dip because it's on its perfect daily bottom velo, but I already showed you guys, and I already showed you this stuff up here. This is looming on Tesla. And I explained how to buy it and go through, if it does roll down on you, what's going to happen. Q's, looking like it wants to go crazy, right? Very similar, right? Close all this gap stuff upstairs up here. I'm sure you guys are drawing megaphones on SPY and stuff. We'll talk about this in SPY. It's the same setup as SPY, so no difference here. 1 minute trigger here. We got Tesla. Did I not write Tesla on this? Oh, there you go. There's Tesla right there. Tesla 30-minute chart right there. There's your Lumen Doomin right there. And then you've got SPX over here. We know that if you're a bull, this is where you buy the dip until it fails or some other stuff is showing, and none of that stuff is showing right now. CTAs are long. They're holding this market up until at least big tech reports, right? Once that IV crush happens, I would be thinking about where does that money go? Excuse me. So you got the Mag 7 and all that stuff. You got still some Mag 7, but a lot of that money is going to rotate elsewhere. So we'll take a look at that at some point as well. So for currently right now, SPX, I'm sure you guys are out there going, it's going to go into Tesla, bro. But I'm sure it's going to go into some more earnings and stuff. So just keep an eye on this stuff over here. I know you guys want to see this gap get closed up here in the close. The setup is there. There's also some kind of like triangle here, right? Well, I can't stand traditional chart and shit, like stupid shit like that. But it's there, and there's a gap to close. And I'm sure all of you right now are going, oh, I'm going to fucking trade the fuck out of this in the close. You got a little bit of resistance here, though, don't you? You got a trap here on Gamma where you're gonna get all giddy, and then they blast you down in the close, possibly on a bad report, or take the money and run, or whatever. Or the reports are later in the day, and you get rolled down here in the close on SPY or ES. So if you're going to trade this tease here for you, right? The idea would be buy Apple or something, or buy some calls in Apple, some stupid shit like that. So what I would say to you would be, you can see where this sell was back here, right? This was at 12:30 in the afternoon. This was somewhere around 488 or whatever on SPY. You want to be like above there. You want to be above there to, like, you can set the trade up, grab a bunch of zero dates, don't buy them. Get something like in the money or deep in the money that there's still some sauce on, and have the trigger finger ready, slam the buy button on some kind of a squeeze up, back check, and then slam up here to close this stuff up. You might also have some kind of noise like that going on. But once you close that gap, pulls back one time, and it's kind of violent. That might actually be your dip buy right there. Close that gap back down there. Probably a bear in here saying, "Oh no, we won't do that. We're going to roll it down anyways." Cap. I would just be aware of this right here. This 92 million. It's sitting currently at 4,900 on SPX. You can do a comparison chart and find out where that is on your own. Okay, so I think I got all of these done right now. Start that bad boy back up. Go back to the main screen right here. And let's take a quick peek. Let's see if we can take a quick peek at the trigger chart. Oh, I got to put my stuff back up here. Let's check that what's that color book? Get rid of that thing. Oh, no, where's my camera? Camera. Color block. Get rid of that stuff right there. Put that thing right over there. And that right there. Hopefully, by the way, I asked a friend to come on to YouTube. I think I asked Miro to come here today. I don't know if he's in YouTube stream or not. If Miro's here, what up, brother? If you can't, he's here. Fuck yeah, heads up out there. Miro is in the house right now. He made a comment. So Miro is here. He's in the YouTube chat. He is a longtime friend of the show. I really love him. He's got a great handle on FinTwit. If you're on Twitch, I always recommend that you try to get on YouTube sometimes, even if you're on Twitch. Chat with Miro or find him on Twitter. He is a market professional. He does something similar to what we do. And he comes into the stream whenever he has time and tries to answer questions and talk to retail traders. He's taken a shine to dumbasses, to dumb retail. So please listen to him. He likes to shit post a lot, so you got to cut through all the shit posts and stuff. But that guy's got real tools. That guy's got shit that professionals use in their real life to trade this market. Day in, day out. They go to college. They got college. They think they're a badass. They go through the meat grinder, and this is how they make their living. These guys live and die by their swords here doing that stuff. So if you have any questions for him, he will have me pull up charts. If you have some time, maybe we'll do that today if he wants to. If he doesn't want to, just hang out. Mero, I appreciate you being here, brother. I always love you, man. And so he's in the chat right now in YouTube. If you have any questions, don't ask him stupid shit like where's Google going. Ask him something important like, do you have any tips or ideas on how to day trade? Or if you're interested in day trading, Globex trading, futures trading, any of that stuff. Do you recommend going to a combine? Do you recommend going to a prop trading firm? Anything associated with that kind of stuff? He's one of the guys you ask. He's a badass. So he's here right now. Mayor, I appreciate you being here right now, brother. I appreciate you, man. So he's in the chat right now. So if you want to reach out to him, say hello, please do it. So we got Tesla. Here's Spoos right here, right? So we know that this is where they're selling at, right? We know this is where the gap is above. We're going to look at that gap really quick into this close. We're going to snap a line here on the close really quick. Let's take a peek on the 30-minute on Spoos really quick and see if it can even go up there. Where the fuck is my camera? There you go. Camera frame, camera. And then where's that? There we go. I'll move that shit out of the way, too. Put these people up here so they can see all their sauce going on over there. And first thing we're going to check here. I always love daily or the daily chart, or excuse me, the half-hour chart velocity is where I want to know, like there's some support here going up or not. And we're at zero line right now. We're just curling around from we talked about this earlier today, right? I said, yeah, we're about to bottom out here on an intraday basis on the hourly velo and the half-hour velo and the 15 velo. We're looking for this now. We're looking for this part. See it? You get these nice little dips down here, nice little dips, and you're looking for that moment right there. That's that rip. That's that rip right there. We just came back up, and you're looking for that one more time, right? Do it again, do it again, do it again. We all see the setup. I know I can tell all you guys can see that setup, and you're all looking for that face ripper into the close. So now, if it doesn't come, it might come tomorrow. We get some bad reports, though, you're fucked, right? We're going downtown. Big time, right? We're going to go down and trade 78 down there. Right down here, we'll end up trading that down below. And maybe even a little bit more dippage down below here. Set you up for a bloodbath into Friday. You get underneath here. Bad reports, get underneath, bam, and we'll start making our way down to the weekly, which is another 100 points lower. So that is way down here at currently at 452. So target to the downside 455 by next week, maybe 460, 455 next week on SPOOs or SPY. This is the setup that. Oh, wait a minute, what did I do wrong here? God dang it. Move that shit back up there. Oh, no, I messed it all up. Hold on a second here. Let's try that again. Visible order, bring to front, visible intervals, current interval, move to existing pane above. Let's try that again one more time. So it was a 30-minute chart. Everything looks good for the bulls here on a 30-minute basis at least. Now we do have reports, so you know how reports go, right? Velocity is just a rug pull waiting to happen on big events, whether it's the Fed, whether it's earnings, all that kind of stuff. Also note that a lot of these big tech companies are ending here this week, right? So we're going to start getting some crush around. I want you to be aware of that too. If you're in any kind of like non-spreads, that kind of stuff, you're going to get all kinds of crush heading over the weekend on any of your positions, right? People are going to exit en masse and take their money and run. You've seen that already happen on good reports. And let's look one more time over here, right? We're trying to close this kind of garbage over here. We already did that one, basically. We got one more little one right here, one more little one right here. Then we come straight up here. I guess you could put another yellow one right there if you wanted to. If you wanted to get really, like, cranky or whatever, you could do something like that. Okay? And you already know for sure. You know for sure a few things, right? You got the, what do we call them around here? Young gym bros are down here, right? Young sellers down here, right? They haven't hit leg day. They're not like Miro. Miro's up here. Miro's like a gangster up here. He's an old weightlifter. He works out his legs, his back, his arms. He's standing up here to sell. He might have come down a little bit, right? We can go up here and fuck around with these guys, poke the bears, poke the young bears. But, you know, this is probably going to get some kind of sell action coming into it, even if we squeeze up there. So upside price target today, if there's good reports, 490. Possibly tomorrow, 490. Maybe an extension up to 491, excuse me, up here. If that does happen. Bulls have one good thing coming for them. They have a reversal here on the hourly trend. Hourly trend's turning up. Half-hour trend's turning up. That's a 2.5 cluster, bull cluster to the upside. So everything looks good for bulls here. But again, we still have reports, that kind of stuff. Maybe zero dates, maybe a Friday call to be a little more safe. And if you need to cut it loose at 4:15, shit gets wild, you pull out. Make sense? Or you take zero dates, set up two trades, set up zero dates for the run up, take the money and run. And if you want to buy some one dates for tomorrow at 4:15 or something, so you're able to maximize, you're minimizing your risk on zero dates, right? If they burn. You get to capture huge upside gain, right? No intrinsic value, looking for a big crank, 300%, 400%, 500%. Take the money and run. And then you jump back in later to get one dates for tomorrow if you think there'll be continuation into tomorrow. Another last point here would be this. As we come into that 4 o'clock hour, they play the funny business, right? You need to think all this stuff out when you're taking these trades in advance. Where do I want to put my risk? Where do I want to take the profit? If I'm going to get zero dates, I'm going to try to take the money and run. Am I getting them now at 3 p.m. If we have power hour? If they burn, what happens, right? So do I get like super in the money stuff right now? Probably not. Probably right, if I was going to take some right now, probably like 10 cents something like that. I don't want to lose $1 right now, right? If they burn, no big deal. I can go back in again at 3 p.m. I can go back in again at 4:01 if they bloodbath us down, right? So they pin us in here, some shit like that. 10-cent calls burn. They start whittling down everything that's in the money, right? Get into that 4 p.m. hour. And right before that, right, they blood you, right? Everybody exits Apple and whatever else is reporting today. I believe Amazon or whatever, but they blood all this shit down. And then the real true dip buy was at like 3:59 or 4:01 p.m. And you ride that shit all the way up. And you make 300%, 400%, 500%. You're able to take 2 10-cent trades, run it up for 400% or 500%. You exit, take the money, especially. And think about this as you're doing these trades. You're trying to also time when you get out. You don't need all of it. I bought some for 10 cents. I'm willing to take 30 cents. Oh, shit, it went to 70 cents and then capture it all. What the fuck do you care? You take the money and you run. Pocket that money and move on to the next trade. Make sense? Get set up for continuation, let's say, at 4:15, where you can jump into a one date if you really want to put some money down on a gap up in the overnight into tomorrow. Some of you guys are probably not following all that, are you? Stick around long enough and you'll understand it over time, and you'll be like, yeah, I got that. I know that. I got this. I do that all the time kind of stuff, okay? So that's SPOOs right now for this close. Now, let's look at something here. We're going to draw a vertical line here. $1,600, okay? This is the close right now, right? You've got, what am I going to show you? So you got all this kind of garbage up here, right? They sell you down maybe before we get at 4 p.m., right? All the Apple people are exiting, and then bam, you get that one last slam up to the top here. So start thinking about that too, right? Sell you down, you get the bloodbath. Best dip buy right there. If that can happen, right? 10 cents, 10 cents. If you're bullish. If you're bullish into this close. No, I want to talk to you guys about that. I want to warn you guys of something, okay? Never, ever run that gamma. Good question, by the way. Never, ever run gamma data all throughout the day. You can separate the zero date stuff. You can separate the zero date stuff from what comes out at 9:30 in the morning. There's a problem, though. The data gets fucked up throughout the day. It gets even worse as we get into like 4, 5, 6 p.m. Your like true market gamma is cleanest in the morning. Cleanest. Now, if you wanted to separate, or if you wanted to do like a ratio of some kind to find out the difference, to find out what kind of gamma is coming in the market, and I've got some stuff coming to you guys. And this week, as we launch, I think I've got a way for you guys to see calls and puts being bought and sold throughout the day. We can have a more extended conversation on this. There's a service out there. Last year, three flow services are being sued right now by institutions. It was a very low-key story that came out last year, and because they know that a couple flow services actually know what's coming in and out of the market. One of them, I believe, I can't prove it, but I think it's Flow Algo. You can always contact them. Now, I don't have any association with those guys, but I used to pay for them. And I think they gave me a way to test it for a month or something. They had a whole like educational thing where they were able to assign numbers to the money coming in and out of the market and all the lit and unlit markets and across the world, and assign who it was and who's buying and selling. And sure enough, they didn't name the companies that are doing it, but I believe they're one of them. So check those guys out. Flow Algo. Tell them Captain Jim James sent you, but I've got no affiliate with them status. I like those guys. However they're doing their stuff, they're probably the best company I've ever seen. And I think they're being sued for it right now. I can't, that's allegedly, and no one's ever said that they're being sued or brought to court or whatever, but I believe that they are one of the badass flow services out there for that. Okay, what else? Okay, so what else here? Hold on one second. You got a nice little squeeze going on in Apple into the close. They're getting bullish into the close here on Apple. See if I can head on over here. Hold on one second. Main screen right here. I think this is a trap. I think they're going to trap you. I'll be honest with you. So this is the close. We're going to make this red, I guess. Bam. Maybe we'll make it a little bit thicker. Yeah, nice and thick. We'll do the power hour here at 3 p.m. And we'll make that yellow. Okay. Nice little squeeze going on. I personally would like to see something like, just like that, or not that like that. I'd have to slide it over. I'd personally like to see the squeeze up into 3 o'clock, right? You get pinned in here. They dump you down into 4, and then that's where your real move is up there. So as we come up here and test all this stuff, break off all these yellow bars, as we strike those things, we will watch how this plays out into the close here today. Oh, dude, I tweet all kinds of, I shit post all day long. I love shit posting. I'm a fucking dude. You guys got to be able to. Some of you guys are literal out there. Like, some of you guys are like, is he shit posting or is he telling the truth? Like, you guys need to learn. If you're a young man out there, I'm going to tell you something. It is a very important life skill to be able to identify what's real, what's not, what's shit posting, what's not, so that you can navigate life successfully. Absolutely. You got to shit post. You got to be able to let off the steam out there. You got to. You might be frustrated. You might just be shit posting. You might just be in a wrong side of a trade. I forget who said this. It's a famous trader. He was like, this guy's a badass trader too, one of the best, right? And he was saying, this is not the place. If you're going to try to make your living and your career in this job, right? When you're a young trader, let me rephrase it or go back a little bit. If you're a young trader, right? And I was guilty of this too. And it's a common thing with young people, or even older people that are new to the market, that they say things that aren't accurate at all. Sometimes they'll be like, that guy's always wrong, or this guy's wrong, or whatever. It's like baseball. If you can grand slam it 3 times with size, you're a great fucking trader. But the point that I'm trying to make to you is this: you're going to be wrong. People that you're pointing fingers at are going to be wrong. This is not the business that you're ever going to be 100% right. And if you see it, I see that on Twitter. Well, I don't see it much. They come and go. You'll see people on Twitter. There's this like it's like a blue box with like a percentage check mark or something, and people will show it on Twitter and say, I was a winner. And you'll like go into their history, and it's always a winner, always a winner. They're paper trading. They're paper trading both sides. They're only showing you their wins, their W's, not their L's. They're not saying I fucking just got torched or I'm getting banged up or whatever. The reality is you're going to get torched. You're going to make wrong calls. You're going to lose. Things are going to go against you. And that only takes time for you to get better at that, too. That's time and market, right? But I want you to understand that, if this old trader talked about it, he was like, it's okay to be wrong. It's okay for you to be wrong out there. And it's okay for you to get stressed. It's okay for you to get angry. It's normal. People will tell you, like, I'm a fucking badass motherfucker, never let emotions get into it. They're fucking lying. They're lying, or they're a fucking sociopath. I'll tell you. They're fucking lying, or they're not trading. They're not investing, or I'll be honest with you. That's the fucking truth. You have emotions. When you win, you have emotions. When you lose, you have emotions. And it's okay. It's okay for you to be wrong. It's okay for you to be wrong on my show. If you're in my chat, I want you to know, if you're in my chat and you're like, market's going to crash right now, and it doesn't, I'll never fucking be like, fuck that guy. You'll never hear me say that about people. Sometimes some people I've gone after on Twitter, but that was years ago. I stopped all that shit. So if you can ever get past that shit, please do. You'll have a better experience doing this. And knowing that your turn's coming eventually. Get what I'm saying? Like, you're going to fucking get smoked. You're out there, and you can fist pump. It's fine for you to be like, I fucking won. I'm on a streak. Enjoy all that. But also remember that your turn's going to come, and you're going to get bent the fuck over. And, it's okay to be like, fuck. You know what I'm saying? So, all right, we'll move on from that conversation. Squeezing up right now into the 3 o'clock hour, trying to knock out these bars back here. We just tagged one right here. We'll get rid of that one. Bam, it's gone. Whoop, got rid of that one. Right, you know the rules. Come back, check the 1 minute, check the 5 minute. Try to take out this last one above here. That's sitting up here at 489.27. Did I put the other one in there, or did I say fuck that? There's one more back here. There's one more right. Oh, God damn it. He's fucking like, there's like some smart guy out there is like, well, what about that one right there, Cap? Probably going to sell that one. This one right here. We'll snap that one in there too. By the time we're fucking done, we'll have like fucking 80 bars up here. All right, hold on. Get rid of that. I'm saucy. I haven't slept in 36 hours. I'm very saucy right now. What's going on? Dude, that red is turning that yellow orange. What are you so orangey for? See what's going on over here. We're going to make this a little bit smaller here now that we're getting close. We got 9 minutes left for the bulls. Remember, the stock market also works on a on the year, on the quarter, on the month, on the week, on the day, on the hour, on the half hour, on the 15-minute, right? Stock market's not on the 0 hour, are they? It's 9:30, 10:30, 11:30, right? So right now we're coming into a half hour period where bulls need to get a new high. They did. Let's look back on this time right here. Right in here. What time was that right there? 1 p.m. See it? 1 p.m. Right? Failed right here to get a new high at 1:30. But got a new high over here at 2 o'clock. Bulls turn it up one more time right now, coming into the 3 o'clock hour. It's pretty bullish here. So we'll see if they can do it. They get that new high. That's all they have to do. They can go back here and back check that 5-minute trigger and that R1, something like that. We got a cross coming up here, too. We've got the half hour crossing the hour. Would not be shocked to see something where you see that squeeze. Boom, you squeeze it up. Then you come back down when this cross happens. Just check that cross, and then bam, we're up into the close right there, okay? So just keep your eye on that cross right there. These tend to elicit reactions. Sometimes you'll call these things, you'll be like, oh, it's liquidation break. Trying to cut out all your stops before they head up higher. Stuff like that. What up, everybody? Chicken tendies, baby. Mountain Dews. Living in mom's basement, baby. Living my best life. Mom's boyfriend's leaving me alone right now. Do you guys remember that time that dude, what did he do? He pissed. I actually was there. I was there when it happened. Do you guys remember when that guy, like pissed in a cup and drank it? He deleted the video. But he posted that shit like right away. I think it was the middle of the night too. You got any of you guys old school Wall Street bettors in here? There's all kinds of fucking crazy stories from the old school days in Wall Street bets. Oh yeah, he was in his mom's basement, dirty basement. He had a fucking cup, pissed into it, and drank it. He made a bet. This is before they had bets on Wall Street bets. Or not bets, but like the bets that you guys make where they ban you for a week or whatever. That's right, baby. Proof or ban. Matthew Meta just said fuck when by the way, Matthew Meta, thanks for supporting the stream, man. I appreciate it. He just said fuck when I sold at 488.10 paper hands. We were just talking about that. It's okay. Take the money and run. Get ready for the next trade. What up, Johnny Haggerty? What's going on, baby? Will M saying, I got my boots smoked today. I just knew we were having another bearish day. Kept buying puts, and by the time I saw your chart, where we were in regards to the hourly, it was too late. Count blown up. That sucks, man. I've had some really nasty trades. I've been taking trade. I got other people being like, take this trade with me, or I'm like, I'll take one with you. I've gotten torched. I'm not counter trading right now, Will. So I'm busy as fuck. So like, I'm putting on like put spreads and shit. I had some. Matter of fact, I recommended 2 put spreads, and one of those 2 I put puts on. I didn't follow my own fucking advice. Both of those trades printed, and I didn't have the time to counter that trade. So even if I take a put spread, I will counter that trade all the way up too. And I did not do that. So I got getting wrecked. I'm not the only one getting wrecked either. Joe Donut was following me and some of that shit together, and he was getting hammered too. Yeah, man. Will, brother, keep your heads up. Keep your head up, brother. Will, accumulate some money. Just wait till mid-March, man. Sit on hands, brother. Just sit on hands right now. We're going to set up that's another thing too. We're going to set up a trade for a potential seasonal low. And how do you follow that trade? How do you counter trade that trade if that seasonal low doesn't come? All that kind of stuff. We pop the collar, something like that. And we're going to set that trade up here before we get into the weekend, so you guys can make that trade. And if you're blowing up your account, if your account is low right now, I would say to you, sit on your hands into that March, April time period, and wait for a nice fat dip buy in the market, wherever that fat dip buy may be. I'm going to tell you guys something out there, okay? On this topic right here. You are going to be told by people there is no yearly seasonal low. They're going to tell you that it doesn't come. I don't give a fuck if it happens over the course of a week or over the course of 2 months. You are going to get that moment to buy that dip at least once or twice this year. In every crazy bull run, it doesn't matter. You're going to get that chance. So if you are at that moment, there will be a capitulation phase. You can put on a gorgeous bundle of money, 10, 20, 30K, whatever. Get a nice, safe, sexy call spread. Time that shit out 2-3 months and just sit on it. And that'll fund your whole year. You can go gallivant around day trading 0 dates. You can go out there and fuck around in futures, Globex, do whatever the fuck you want. Get all bared up, get all bulled up in the wrong times, and do your thing. God damn, Will. Will, send me a fucking DM. Send me a DM, man. Stop trading. Seriously. Fucking stop. Stop trading. Take a break. Take a break and send me a DM. Make sure you say I'm Will M. I'll give you a call, man. We'll talk. All right, it's coming into 3 o'clock hour right now. We do have the new high. Keep an eye on this right here. We could take these two out right here. Apple looking bullish as fuck right now. Let's look at Amazon really quick down here. I saw CNBC earlier today was like I own Amazon, I own Apple, but I'm more bullish on Apple than Amazon. That kind of stuff. This looks like I could get closed here, but then some profit taking. Your local neighborhood financial advisor, your Charles Schwab guy, he fucking loves Amazon. Fucking big part of their accounts. Buy it, sell it, buy it, sell it, buy it, sell it. Oh, it's Meta today. My bad, wrong one. I'm getting the wrong one here. Hold on a second here. I don't know what I was thinking Amazon because they were talking about it on CNBC earlier today. I hit the wrong one. My bad. There we go. Meta. Oh no, that's TA. What the fuck is that? Transalta? Typing all kinds of fucked up shit in here. Hold on. There's Meta. 30-minute chart. Cranking. I bet. Let me ask Trader Podcast because he made me some money here. Trader Podcast made me money right here. Where do you make money? Right there. Trader Podcast made me money on Meta. What's going on here? Oh, I got some wonky shit going on. Oh, I got some craziness going on here. Hold on here. I'm like losing my charts here. There we go. Coming into that resistance above on SPX Gamma on the 30-minute chart, or the 1-minute chart, actually. Where's this Trader Podcast here? He made me some, well, not bank. I only had 10 contracts. But he made me some money. Spot, dude, what is going on here? Getting some, oh, wait a minute. I'm getting all fucked up here. Hold on a second here. I'm getting all wonky here. Oh yeah, I'm getting like craziness with this stuff here. Where this stuff flips. We're coming into this resistance point right now on SPX, okay? Just a heads up here. That's SPX down below that you're looking at down there. Sorry, I'm getting turned around on myself here. This is supposed to be Meta. Okay. Meta is above its pivot right here. We need Trader Podcasts to tell us more about Meta, I guess. Is he here? Yeah, I agree with that too, Johnny. I'm in the wrong fucking charts here, man. This thing's moving too fast for me. Yeah, Meta looks like take the money and run too. Like Meta's set up to take the money and run as well. Upside target 408. I'm gonna flip over to SPX here. This is what I think happens right here. Down here. That's what I think happens. I'll give you a little bit more stretch. Actually, I'll draw it like I'll draw it on. I'm gonna clean it up a little bit. I'll give you this. And something stupid like that. Something stupid like that. Then like that. And then there you go. After the bell. Something like that. Let's see how that works. Let's see how fucked up. I always love drawing this stuff out first and then seeing if I'm right or wrong or how long it takes. Sometimes it takes longer than I expect or stuff like that. We'll see how this goes. And I'd probably do something like this right here. Shoot right back down. Whoop. Something like that. It rolled like 2 days later or something like that. Those are closed as fuck. I think I made 40, 50% or something like that. Maybe we can get him on. Maybe, let me see if I can find him. Hold on. Hold on 1 second here. I'll text him right now, see if he'll come on the show. And talk. Wants to come on the show and talk ERs for today. Let's see if that autocorrects for me. Ooh, look at that juice up there. I bet you guys are all just long as fuck, right? I mean, look at that up there. It looks like it wants to fucking fuck to the upside. Hold on here. Just look at that. Oh, it's like, look at it. It's just begging for you to go up there, isn't it? It's like, come to me up here, bro. Here's my stink bid. We need price up here so we can sell into it up here. Oh, sweet. He's coming on. Oh, yeah. I think I got something here. Hold on. I think I might have something here. How do I do this? This is going to be kind of funky to do because I haven't set up a screen for it. It's going to look kind of stupid. But we're going to do it anyways. Shit, I don't know if I can set it up right now. Hold on here. I'm going to set something up for you guys here. Hold on a second. I don't know if I can set this up or not. Shoot. Hold on one second here. Hope I can set this up. I'm not prepared. Yeah, there it is right there. Hold on a second here. Right there. And then this is gonna be kind of wonky. Come on here. How do I fade on this? I forget how to fade this. Shit. This will be fun anyways. All right, it's gonna be what it is. So bear with me here, okay? Well, this is gonna be crazy. One quick second here. All right, that's working in the background. Oh, come on, Captain, be right. Big balls. So long, Cap. My genitals are starting to look somewhat proportioned. Big balls, now small balls right now. Hold on. Big balls, you okay out there? Where are you going, big balls? What happened to big balls? Hi, Stacy. Willem, what's your Twitter handle? Willem, what's your Twitter? Type in letter for letter what your Twitter handle is onto chat. Yeah, we're gonna get some violence here, right? John Haggerty's like they're all reporting. Willem, where's the Willem, do me a solid. If you're listening right now, you don't want to put if you don't want to put your handle out there, that's fine. I don't know if you do or don't, but Willem, if you're out there listening, do me a solid. I want you to send me an email at CaptainJimJames@gmail.com and just be like, "It's me, Willem," and then we'll go from there. I got that, brother. I see it now, Willie. I got you, brother. Oh, yeah, there we go. Do it. I always love doing this because it makes everybody angry. Oh, yeah, there we go. Yeah, there we go. There we go. A little bit of blood right now, boys and girls. Oh. If Miro's out there, he's like, ooh. Miro's all saucy, right? Miro, are you in the house right now? I got you, Willem, I got you, brother. I'll reach out to you, man. Oh, do we need the music? All right, so I'm going to, in the background, I'm going to set up. Jade Passer coming in here. Take your belt off. Let it all hang out. Come on, Spoos. Come on, Spoos. Yeah, get Boiler Room Bob needs. Boiler Room Bob's down there, sweat dripping down his face. He's got his glasses all cocked sideways. Get that face going on in the basement, right? Miro's like, punch it. Sell it all, Bob. Hold on. Here we go. Hold on a second here. We got I gotta do one quick thing here. Is that thing downloaded? Oh yeah. Hold on a second here. Hold on. I gotta send a Google Meet here. Hold on. I gotta send a Google Meet. Oh, wait a minute. I think damn, I was going to play this intro for Trader Podcast. Damn. I got this cool ass. Oh, hold on here. I got this cool ass. Come on down there. Go to downloads. I got this really cool intro for Hold on a second here. You guys want to see the intro at least? No, I don't want to upload that. Hold on a second here. What is going on? I got all kinds of craziness going on. Turn that thing down. Well, should we play the intro at least? Should we play the intro at least somewhere? I mean, it's a cool ass intro. Does that work right there? Yeah, you want to see the walk up music? Tell me if you like this or not. No, I don't have a scene for this right yet, so we're going to deal with what we're going to deal with here until I make a scene. But I'm creating scenes for people to come on the show. I'm going to play right now. It's going to be loud. Turn your headphones down at home. I need a fade in here, but I didn't fade it, so let's pretend he's coming on. Let's see if we can get Trader Podcast here today. Oh, yeah, look at that sauce right there with Trader Podcast. But we're not getting him. His wife said no. Got yelled at. Oh, wait a minute. This stuff's on replay. I think it's baller. The swinging dong microphone, right? That's exactly what it is. What kind of music do you think would be better? What style of music? Let me know, because I got access to a bunch of music that's like that I can use on stream. What kind of music? It's a hot mic, baby. Oh, pump. Wait a minute. Who said better music? Oda Nabunga, what do you think for music? What kind of music do you think would be good for Trader Podcast? Or anybody, I guess. Dude, Oda Nabunga, you got to contact me, man. You want to start making videos with me? It's a hot mic, isn't it? I thought my music was pretty good, like down and down, down and down. That music's for the morning, though. If I have a guest host or something, I think I picked that music for like the music for the morning. Like, let's get this shit on, let's do it. Nice electric with piano, plenty of fuzz. Yeah, I like electro jazz maybe or something like that. Oh, what's going on in here? Oh yeah, baby. Oh yeah. Holding the 1 minute right now, so haven't rolled. So that music is so that stuff that I've got there is I pay for to like build that stuff. I pay for the music. Like my intro song, I don't get hit with the copyright because it's something that I pay for. So that's where that music comes from. If you're ever interested in Oda Nabunga, let me know, man. We're gonna try to class up the place. Let's look at this right here really quick. Oh my, what is that? What is that? Hold on, Venice by what? You know what I gotta do? You know what I'm learning right now? I need to switch up the music around here. You guys all have really good taste in music, and it's very eclectic and a wide range. Venice by Dinka. I thought I listened to this on, didn't I listen to Venice by Dinka on Twitter one night with you? Or I thought someone slapped those jams on me one night. That's right, BTS. Did you see how any of you guys see? So my daughters are all BTS Army, and they've got other pop stars that are slighting them right now. So there's a big TikTok war going on. So I keep not making fun of my daughters, but I'm like, my daughter sent me a picture from U of M, and I'm like, oh, watch out! There's some TikTok gang behind you. They want to start some trouble because you're a BTS Army. You know what, Jared? I might have by accident. That might have been me. If I did unmod you. No, you're a mod, dude. Jared, you're a mod. I see you're a mod. Are you talking about YouTube? You're a mod. I can see a mod crown, bro. You're a mod. You're a mod, dude. I am guilty. All right, here's the deal. I go through the moderators on YouTube and Twitch, and I don't know about Twitch specifically, but YouTube, by accident, if you like click unmod, the name is gone. Like, woof, they're gone. I can't I go, oh shit, I gotta remember their name, like their actual screen name to mod them again. So if we ever find out like I unmodded you, it was by mistake. If I didn't say like you're unmodded for a reason or something, you were unmodded by mistake. Oh, it's not the crown. It's the sword. Yeah, I'm Captain Fat Figures. Jared, I haven't unmodded you, man. Let me see how to do this. Hold on a second. Yeah, so Jared, hold on. Are you talking about, let's be clear here. Were you a moderator on YouTube and Twitch or just YouTube? I might have fat fingered it. You want to mod you on Twitch? I can mod you on Twitch, I think. Let me see if I can mod you here. Dude, I'm totally fucking up shit. Totally making mistakes here. I gotta mod the trade the trigger. Oh shit, I gotta do that, don't I? Okay, mod the trade the trigger bot. And then where is he? Watch me fat finger and watch me like time out Jared. Ban him by accident. I'm a ban mod. Boom, done, Jared. You got a sword, brother. Say something, Jared. Jared, type in your YouTube name in chat, and I'll put you on YouTube right now, brother. Is it the exact same Jared King? Let me look. Hold on, brother. Where are we at? How do I, shit. Hold on here. Settings. Community. Let me see if you're a moderator. Yeah, like I have to come in here and clean this shit up every once in a while. Where is Let me see if this is your actual name here on YouTube too. If it's the same name. Jared King. Jared, you're not coming up on YouTube, brother. If do you know how to find your name on YouTube? You go to your YouTube page. And at the top to the right-hand side in the search bar shows your actual name. All right. Why are you not on here? I see Jared King, but not the Rumbald. Two Jared Kings I see here. Okay, hold on. I got you. Hold on. Hold on. Rum. ULD 6934. Dude, I don't know why you're not coming up here, man. No matching users found. God damn it. Hey, Jared, in the morning tomorrow, right? Do me a solid. If you're here in the morning tomorrow, if we're slower, not heading into ER, I will open up the chat on YouTube, grab your name, and mod you that way. Or do you want to do it right now? Here, we'll do it right now. Give me a second here, man. Hold on a second, brother. We'll do it right now. Give me a second here. Get on YouTube really quick, brother. And I'm going to open up the chat on YouTube and say something so I can mod you that way. Unless maybe sometimes YouTube is janky as fuck, dude. Anyone. Save. Oh, I got you, brother. Hold on. No, I don't want to do that. Can you guys spam the post in YouTube really quick? So I've got this like heart thing where I can't. Bam, done. Does that work for you, Jared? I think I got you there, Jared. Save. Chris Plummer just said, finally I'm free. No more. You guys want me to open up the chat on YouTube? Here, let me open up the chat on YouTube. Hold on a second here. I can do it for subscribers. That's free. Hold on. We'll open up the chat. So we're going into ER. You guys want to chat today? Fuck yeah, we'll chat. Hold on a second here. How do I do that shit? Damn, I suck at this. Subscribers. Any duration. So subscribing is free. If you subscribe, you can chat on. If you subscribe, you can chat on YouTube right now. If you're a mod on YouTube, see anybody stepping out of line, insta-ban. That's you, Jared. That's you. Anybody steps out of line, except for Chase. Chase is a friend of the show. You let him do whatever he wants. Let me yell at him. What up, Kenny Tran? Good to see you, brother. Just ain't right in the house right now. Chris Plummer, what up? You're back, baby. You're out of the box. Come out of the box. Well, this is my ETS date, but they made me go to council, and they locked me up on a post, and they told me I had to go to council before they let me out of the public. Put me in the box. I am the line of defense. What up, Jay Sharps? What up, brother? Thomas Price saying full ported spy for the rip in the clothes. We're going to 490. Where's Chase Winter? Tim Berna saying freedom or free at last, baby. What up, GOAT? What's going on? Oh, dude, it's Mr. Patel's. Dude, Mr. Patel, where the fuck have you been, man? Dude, I was looking at you the other day, and I was like, I have not seen Mr. Patel in a dog's age. I was concerned about where he had been, man. Hey, Joe, what's going on? Hank the Panther, what's going on, man? Welcome to the chat, baby. Thomas Price, 0 DTE. Oh, yeah, baby. We're getting ready. All right, so what I'm going to do here is this, okay? What we're going to do here, where's my earnings calendar here? Which earnings do you guys want up on the screen here? We're going to switch over to showing you just the earnings calendars for... Let me see if I got this week's earnings. I thought I had this week's earnings calendar. Come on, where is it? I know I had this week's fucking earnings calendar somewhere. You want to do Meta, Amazon, and Apple, then Q's or Spy? Let's do Spy. Here, let's set it up right now. Let's set it up right now. Hold on. Hold on one second here. Dude, Mr. Patel had a family emergency. Was in India for 2 months, man. Oof. Is everything all right? Is the family okay? Or hey, what's going on, Joe? What up, Michael Wacker? What's going on? Coming into a big earnings day, right? Let's see if we can switch over. Let's go to the trigger screen. We like this screen or no? Nah, I don't like the screen. Well, let me, screen's okay. Here, let's do it this way. We're gonna go with a, right here. Bam. Give me just a second to line this up, okay? We're going to do what here? Oh, give me one quick second here. We're going to close that there. Close that there. Bring that bad boy down. So here's Spoos. We're going to move. I got to move a bunch of crap. Over here. We'll deal with this in a second. So here's Spoos, okay? Now, I think there's a little bit of a pullback here, personally. We are doing the consolidating on SPOOs. We might not. We just blast up there and start kicking ass. It's a 1 minute chart there on SPOOs, right? And then down here, we're going to do, we'll do Meta down below. Yeah, Meta will have the chance to crank, right? So we'll do Amazon. Amazon's usually the shit bag, right? Not a shit bag right now, is it? Cranking. Here's Amazon. Let me make my stuff. Let me move me over here. We'll move me over here. Hold on. Move that over there. We'll move me down below here. Does that work? Kind of works. This is Amazon. We'll watch Amazon as well. Can anybody out there, if I have the time, I'll check, but I want to make sure that everybody's reporting right at 4 p.m. So we got Amazon right here. We're going to do, what else we're going to do? We said we're going to do Apple, bad boy Apple. There's Apple. And then we're going to do, we said we're going to do, you guys said you wanted Amazon, Meta, Apple, and yeah, right here. Do you guys want levels on this stuff or no? If I have time, I can probably. Got Amazon squeezing right now. Meta just doing its thing. These are all in 1 minute charts, right? Yeah. Ooh, we're at 1 minute there, 1 minute there, 1 minute there. All this stuff's on 1 minute right now. Yeah, I didn't think Apple was either. I'm with you on that one. I thought they were after. Bring that down. Can I bring that down? Bring that down. Bring that down right there, over there. We'll put that put me in the corner. Putting CaptainJimJames in the corner. The chat, we're gonna put that right here. Looks good right there, right? Thought I had a color block on this. Why don't I have a color block? Thought I had a color block on this. Hold on here. Color block. Add source. Add source. Right over there. This back here. Move that back there. Put that down there. We'll put that behind the chat, right? Kind of works, right? That kind of works. Yeah, it's okay. Kind of works. Does that look like it'll work for you guys out there? We're getting there. MOC, yeah, the big sell worked again today. 8 for 8, I believe, this year. I took a double on 4880s, bought at the close. Damn me for no runners. Thomas, I got you. Hold on here, brother. What is Thomas looking for here? $0.24 right now. 24 in the bid, 25 in the ask. What's going on, Haggerty? I'll tell you this. If you're already in right now, who is that? Thomas, if you're already in right now that trade, and you get blasted on him, don't close him. Just hold him to fucking 415, man. Yeah, man. I'll be honest with you, Thomas. I'm going to be honest with you. Not financial advice. If you want to preserve your cash, man, I would be, even if it doesn't come to you, I'd be waiting for that right there. I'd be waiting for that pullback right here and that cross, whoop, and then I'd be jumping on that trade. You might make that trade. Might go to fucking 6 cents, then go to 30 cents. So I would either, if you're going to stay on that trade, I would stay long it, even if it gets torched. Not financial advice. But the prudent trader that doesn't have a big account, if it was me, I'd be down here waiting to grab that. Now, if I got left behind, I would just count it as I didn't lose any money. But I understand. Zero dates, baby. Big tech earnings. Let me put some jams on here for a minute. What do we got here? We got anything? Bulls. With a comeback story today. Oh, hold on. We got to do one more thing. We got to pause that. Hold on. I wasn't getting any sound off of Financial Juice today. Let me know if you got. Can you guys hear? Tell me if you guys hear this. You hear a tick. Yeah, I'm not hearing any tick strikes here. Oh, can you? Okay, I hear that. I hear that. All right, we're good. We're back to situation normal here. So we will have the new squawker talking about ERs. I'm going to try to pull up the report times if I have the time on who's reporting at the bell, who's reporting after the bell. This song right here, it's called Nobody Home by Diala, Dyala. ALLA. So Nobody Home. Nobody Home by
Looking again
Alla.
now to the early market on close imbalance, still sitting at 289 million to the buy side.
So Delta Yankee Alpha Lima Lima Alpha. $3:40 in the afternoon. We've got 20 minutes left. Everybody's coming out to play right now. Not much playing left for the week, right? So this is kind of like the wrap it up kind of portion of the week. Got big tech reporting. Everybody watching. Yesterday we had a big Fed day. Fed pretty much stating what I already believed to be true. You want higher. Well, so let's talk about that briefly as we wait for this to take place. Yeah, everybody's buying fucking calls. Dealers chasing right now. People are like, fuck it. What up, Bork, baby? So let's talk about the Fed briefly. The mechanics of this whole thing. Mechanics are complicated. You don't want velocity in inflation. Okay? If you're a bull, you don't want velocity of inflation coming down and bouncing. You don't want to see the Fed cutting rates without some public knowledge or acknowledgement by the masses sentiment that QT has ended. We already know there's QE out there, but the whole QT process with the Treasury Department is more what we're talking about here, okay? You also, and I know, we all know that they're fudging the unemployment numbers. They're fudging the inflation numbers. We know they want that. We know they want that slope, steady slope, or sideways and up slow, and back down again on unemployment. We know that they want inflation to chill, man. Just chill. Just think. No velocity in inflation. I want you to know they can hold rates higher for longer, okay? There's no reason to cut rates right now, is there? There's no burning fires anywhere. You can talk about burning fires in regional banks, that kind of stuff, but there's no real burning fires. We're going to talk about this briefly here, okay? So, a bull's friend right now without that QE or QT before we make rate cuts, that's a key point, right? Some QE or at least the end of QT before rate cuts. If you don't have that, bull's best friend is not cutting rates, believe it or not. It shows that the Fed is doing their job. We've already had our big major drawdown. As long as they're doing their job, there's no reason to sell the market yet either. And I want to give you a serious point here. The Fed's not cutting rates because nothing is broken. This is where all that comes from. If the Fed was to cut rates right now and everything is good out there, and we're going to talk about what good is, but if everything is good out there, right, and they're cutting rates, that means something is wrong that we haven't seen. That's where that comes from. Okay? Now, what does it mean when things are bad out there? We have less layoffs than we did last year. Right now, it's a fact. Is your street empty where you live? Are there for sale signs everywhere with empty houses? Everyone's declared bankruptcy. Everyone's foreclosures have gone through. Lawns aren't being mowed. Huge layoffs. Now, we have layoffs. We're going to talk about that too. But we have layoffs going on right now, right? Part of the mechanics of the end of a debt cycle. But we don't see, all your friends getting divorced? Family members getting divorced. And I'm serious about this. Are you seeing all of your older family and friends losing their houses yet? No. We also know that when rates were raised, We couldn't. Mortgage writers couldn't repackage bad debt. This is like bad credit card debt, stuff that doesn't appreciate, right, in value. So what did they do? They couldn't give them HELOCs and shit like that. So what did they do? They gave them. They remortgaged these people's bad debt.
At 289 million to the buy side still.
So you got 30% or 30% loans, bad debt loans, dog shit lones, right? Credit card debt. And they repackaged them to 8%, 9%, 7%. So there's a reprieve for older people right now.
For the price of 1 month.
Older people, you hear them bitching about everything, right? Am I going to outrun inflation? I didn't expect this much inflation. I didn't expect this. I didn't expect that. They're whining, right? Crying in pain. But they're not on the street yet. Especially people that are hiding that bad debt. My point here is that you need to see either that bad shit going on in your neighborhood for the Fed to cut rates, or when they eventually do begin to cut rates. And if everything is good, that means something is wrong that we don't see. That's where the panic comes in, right? And they start to chase rate cuts, and then they stop the QT afterwards, and they institute QE. They're always late to that party. I am in agreement with the QE statement that you just made, and QE normally does not match with markets going up. It's usually when markets are going down. And there are moments, though, where it is before they cut rates. Normally it's after as well, but if they're doing it before, and they don't have to do actual QE, but QT ending QT specifically. We also know that they're doing QE within banks. You got Fed banks loaning to prime banks loaning fucking money to hedge funds to buy the market. We know that. It's a fact. And then the last thing I want to talk to you about is the post that I have posted on my pinned to my handle. I'm not really a fan of investing.com news articles, but you should read it to the end. They explain very simply what you like. Do you want to see cuts right now? Historically, you do not want to see cuts right now if you are a bull. You do not. You want to see higher for longer. You want to see this market grind higher and higher and higher and higher. And there's another reason for that, too. When we were back at 34.50, right? The longer we grind higher, the more chance we never, ever go back to see that low again. Does that make sense? So even if the market does roll, remember back when we were at 34.50. I remember a lot of people saying, don't worry, we'll be back here and I'll get another chance to buy this market. And right now, they are pissed that they couldn't buy this market. So even if they do fail and we get the roll down, they want to secure us not rolling down lower than 34.50. Now, do I want to see a roll lower than 35,450 personally? My Main Street hat? I do. Do I want to see older people that are hiding their bad decision-making get run over? I do. Do I want to see more companies get fucking hammered and shut down? I do. I already know the mechanics of a debt cycle. I know that money needs to be, that bad debt and bad money needs to be wiped from the system so we can start a new debt cycle so that young people can get a chance in a new cycle to be given cheap loans, right? An opportunity to make bad decisions and good decisions. That stuff hasn't really come to fruition yet. So the longer that Jerome holds rates higher, the more he can begin to rout out these people that are hiding, these companies that are hiding in the background. Higher for longer is highly probable. And I mean, and when we get the election not disturbing the election process, do you know what I want to tell you guys something that you're not going to want to hear. I'm being serious here. What's his name? Art Cashin. Every once in a while, he lets it slip, especially during election seasons. You'll hear like guys like Art Cashin or guys on TV or Jamie Dimon. They'll give you their personal opinions, right? I'm a Republican. I'm a MAGA. I'm a Democrat. I think Jaime Dimon said the other day, I've never been woke, right? You're hearing that from the perspective of the Main Street hat. I'm going to tell you the insider secret, okay? That some of these guys write about in their books. They write about it all the time. They talk about it.
On close imbalance, 150 million to the buy side. So again, market on close imbalance for the NYSE, 150 million to the buy side.
The stock market hates change. They don't care who the president is.
So keep in mind now, we are now 10 minutes away to the cash equity close, on which we get the first of the big three earnings reports this evening. So again, this is 4 p.m. Eastern Time. We get Amazon printing their Q4 2023 earnings. Estimated EPS seen at 81 cents with an estimated revenue of $166.21 billion.
Wall Street hates change. Wall Street at its pinnacle wants gridlock. Wall Street at its pinnacle wants no change. Even when change comes from that point forward, they don't want more of it. And they love gridlock. They like two-term presidents. They don't care who it is. If they make a bunch of changes to the new presidency, they want that consistency for 7-8 years. So they know what to expect. Banks love to know more than you. They love to have the information first. The more consistency they have, the better off they are. Our cash will come out sometimes and talk about it. He'll put on the other hat, takes off the Main Street hat, puts on the trader hat, and says, the truth is, they want gridlock. They like the Senate to be gridlocked so that they can't pass any new laws, good or bad. Just leave us alone to do what we want to do. We are here making money. Don't fuck with us. You understand that point? So when I'm looking at this election coming up, right? Disturb the election process? Probably not. And they would love nothing more than to have gridlock in the Senate, in the House of Reps, everywhere. The more gridlock, the better off they are. He does. They wheel him out every election season. And we get all, every election season, we're all fired up. You guys have your Main Street hats on. You fucking got the Main Street hat cocked to the right. You got the fucking trader hat cocked to the left, and you're mixing it all up. And the truth is, and of course, it's good drama, good soap opera, good volatility, all this stuff. But then people go, wait a minute. I was told on fucking Bloomberg, and I was told on FinTwit that if this guy won, or this House won, or whatever, or this happened in the Senate,
so money
market was going to crash.
Reached $6 trillion for the first ever time. So again, that's money market fund assets reaching $6 trillion for the first time.
Oh yeah, look at that. Oh yeah, baby, do it up there. Yeah, do it up there, right there. You see that? Oh yeah, get up there and rub that thing. Get it right down there. Roll it down. It's that consolidation right there. A little bit of roll down to the downside right here. You see that? See that daddy up there? See that daddy up there? See that? See that bad boy? See that right there? The truth is, once that vol rolls off the market, they don't give a fuck. That market just rips, especially if it's in gridlock. That's the truth. They hate change. I'm bitching all the time. I'm old. What's going on up there? What's going on up here? What's happening up here? What's that right there? I'll put it into crayons for you up there. What's going on up there? What's going on up there? Oh, now we might not get down there. It's a 5-minute trigger. Let's check on that cross and see if that cross is happening. There's that cross right there. They might save that. This bounce might be good. Got a little tiny bit of a bear plane on SPOOs. We had gridlock. You guys forget, right? We had the election. Matter of fact, I can probably find that clip. We had the election, right? And Georgia or something. Remember those 2 or 3 seats that were left over? It was decided matter of fact, I think they brought Art Cashin out, and he said the Senate will be in gridlock. Literal gridlock. It's 50-50 in the Senate.
So in 5 minutes' time now, at the top of the hour, Amazon is due to report their Q4 2023 earnings.
Just a little bit more pullback.
Of 81 cents and estimated
Want to buy
revenue
some
of
fucking cheap calls, man?
$166.21 billion.
Give me what? Give me a, what do they call this thing? Oh wait, 355. I might have to. Hold on a second here. I'm gonna get rid of that. Oh, dude, I want one. Just give me a liquidation break. Give me cheap calls, baby. I'm gonna get left behind here. Just the tip. I'm gonna get left behind here. I just want that one big red bar for like 2 minutes. Give me that one big red bar. One big red bar straight down. The guy that was asking about his calls earlier. For a moment there, you were at 27 and 28 cents on 490s. You know, whoever was asking that question earlier, you know, you can put a sell order in at 30 cents and it auto-fills, right? If you hit 30 cents, it'll auto-fill. You don't have to like wait for it to hit 30 cents to put the order in. You can put it in at 30 cents. If it fills, it fills. You don't have to go up to like 31 cents, 32 cents or something. Hey, Loner, what's going on? I'm doing wonderful. How are you? What's my thesis on how SPY acts tomorrow? If we rip, we sell the open. If we blast down to the depths of hell, we're gonna keep selling. You're gonna see a pretty big IV crush in the markets, and then I would expect that people come back in on Monday and start over. Oh, thanks, Loner. Appreciate that. That's awesome. I appreciate that. It's nice to see you. Have you commented before? I didn't see anything saying this is your first time commenting. I don't recognize your handle. Do you have a question? Any questions I can answer for you, Loner? Oh, right on, Loner. Nice to, good. Thanks for being here. Thanks for saying something. So far, I'm missing this trade right now. 490s trading 27 and 28 cents on the bid ask. Oh, it was Thomas Price. He got out of the calls, made some money. Good question. Chris Plummer's asking, if you buy zero dates for the SPY, do they expire at 4:15 or 4? It depends upon your broker. You should be trading on a real broker to trade zero dates anyways. Prime brokers are the best. You'll get better fills, believe it or not. And you're not paying for order flow fuckery that goes on in the options chain. That is a real thing. People tell you it's not, it's real. They're spoofing your order flow for pennies, 1, 2, 3 pennies sometimes. They won't even fill them. It'll say bid ask. You'll even go a penny or two higher, and they won't fill them on the most liquid fucking ticker in the entire fucking stock market.
1 minute remaining before we see
Sorry
the
to
release
get
of
salty
Amazon's
about
Q4 earnings print.
So there's mechanical issues in there too. Point being, like I don't think Robinhood. I could be wrong on this, but I don't think you can trade to 415 on Robinhood. It's a good thing to do. Couple things here though. I recently left on some, I don't know if there are puts or calls, I don't remember, but it was recently, and I was fucking assigned. So always close your shit out before 4:15. It's only one time it's ever happened to me. Normally that shit happens in spreads when you're selling options, but they got me. The thing, well, no, like I love Robinhood. I got nothing against Robinhood. It gets people trading and all that stuff. They suck for 0 dates. That's real. They suck. If you're putting a spread on or a weekly or a monthly buying stock, I got no issues with them. I have issues with the GME shit. Yeah, I got issues with that. But if that's your entry into this stuff, I'm fine. You'll move on to like Webull or something. Then you'll move on to, I don't know, Think or Swim or TradingView or Lightspeed or there's all kinds of shit. Interactive Brokers, Tasty. There's all kinds of brokers out there you can get. You know, the one thing another thing that sucks about Robinhood is you can't call your broker. You've got a little bit of blood here in Meta, Amazon going up right now, Apple going up right now, a little bit of a squeeze right now in SPY. I've had trades, man. I've had trades not fill. I've had my fucking platform go down. Dude, I gotta tell you another secret. We said sometimes we tell people this. You want to know something cool? If you trade and are loyal to a
Amazon
brokerage,
earnings coming through now. EPS a beat of $1 on estimates of 78
woo,
cents.
Amazon blasting
net
off.
Sales they're a beat $169.96 billion on estimates of $166.21 billion. Operating income that's a beat at $13.21 billion. Estimates $10.49 billion. So their operating margins at 7.8%, a beat on estimates of 6.17%. Amazon Web Service net sales $24.2 billion, which is a slight miss.
Apple cranking.
$24.22 billion. Physical store sales $5.15 billion, a miss on estimates of $5.23 billion. North American net sales a beat at $105.51 billion on estimates of $102.88 billion. Forward guidance, they see their Q1 net sales at $138 to $143.5 billion. So that's on the lower end of the previous range, the median of which was $142.01 billion. Operating income sees Q1 operating income $8 to $12 billion, which is in line with the prior estimate of $9.12 billion. So overall, just seeing some strength here following these Amazon earnings reports. So again, EPS and net sales, as well as North American net sales, AWS sales, all coming in higher than expected. Forward guidance largely in line with expectations. Just a slight weakness in the net sales adjustment there. We're making a slightly lower range.
To finish that conversation about Robinhood, you can, if you're building a spread, if you get a relationship with your broker, they will help you. If you ever are crawling around in options chains and you're looking to build a spread and you see a deal and you're like, man, this thing is just too cheap, right? This spread's too cheap not to take. You can then sometimes call your broker right on the phone. Call your broker up and say, can you give me an extra penny or two on this side or that side of that trade? You would be surprised, and they would do it for you. Those things will come to you as you become a trader over time. You can actually form a relationship with your broker. So if you're on Robinhood, try to work your way into Webull would be a good one to go to next. I think they have level 3 now and stuff like that. And then you move yourself into like a Tasty, Bookmap. Go to there's all kinds of different. You can go to TradingView and trade there. Anything, and progress in your career and the brokers that you use. Get a prime bank. Go to Schwab. Go to somebody that's a prime bank. Open an account there. Don't hesitate to open multiple accounts, try out different platforms, try out different brokerages, leave money behind in those brokerages as you try new ones. If you make $20,000, $10,000, leave $5,000 and go try a different one and forget about that brokerage account that you have. You might circle back one day and go, oh, fuck, I got 5K sitting in there. Let's trade that shit. But open up some brokerage accounts. Open them up all over different banks everywhere. You should have. I have accounts fucking everywhere. Everywhere. To this day. New brokerage opens, new service opens. Let's try it out. Robinhood is terrible on their execution, especially when you're exiting. I don't know. Can you close legs on Robinhood or not? I don't know if you can or can't.
There's less than 10 minutes now.
Like, do you have to do like the close everything at once, or can you leave anything on and
with
just
an
close
estimated
legs?
EPS of $4.90 and an estimated revenue of $39 billion.
Meta just went to the fucking moon right now. Spoo's going to the moon right now.
As we're seeing Meta releasing
490 is trading
earnings here now as
37
well.
cents
Meta
right now
EPS
for a moment.
at,
They were probably trading 43 there for a second.
Revenue at $40.11 billion. So that's a beat on estimates of $39 billion. EPS also a beat at $5.33 on estimates
Meta
of $4.90.
cranking right now. Spoo's blasting off right here. $14 minutes left to close out here. 14 minutes left. Now, remember, if you're going to take the money and run here.
Meta sees their Q1 revenue at $34.5
Meta
$37
fucking
billion,
moving right
beating
now.
estimates of $33.64 billion.
Trading 424. Beast mode. Amazon with a high at 167.84, it looks like. Now remember, if you're going to take the money and run here on the close at any point before 4:15, and you think there'll be continuation, look for one dates for tomorrow on Q's or SPY. Don't double down. Not financial advice in any of this.
Beating estimates of $39.01 billion.
Go in and get some 10-cent. If you made 40 cents, 50 cents in a 10-cent trade,
revenue at
take the money and run. Buy something cheap on the bell at 4:14, 4:13 for tomorrow.
We're seeing some strength in Meta here following the earnings prints.
490 is printing 61 cents right now.
$1.07 billion, which is higher than the estimated $812.6 million. Family of apps revenue beats at $39.04 billion on estimates of $38.16 billion. Also, Meta reporting that they are boosting their buyback by $50 billion.
Apple ripping right now. Whole market's going berserk right now. Green bars everywhere. Probably on expectations of Apple going to the moon. I'd say shorts coming off Apple right now. Apple trading 187.60.
Noting that shares of Snap and Pinterest are following Meta platform shares higher following their earnings report. So Meta beats sales forecast.
Good job, Plumber, on your spreads.
Strong forward guidance, announces their first dividend as well, and boosts share buyback by $50 billion overall. So that's Meta, ticker META.
Good job trading spreads on Meta there, Chris Plummer. Jesus Christ, Meta. Meta's not stopping right now. Got shorts trapped right now. That's good to see. This could have some continuation into tomorrow's open at least. I'm looking at a trade for tomorrow right now. A little bit of a roll here in Apple. Six minutes left into the close. It's going to be some pissed off people tomorrow. Some bears, man. They'll be pissed off tomorrow. What up, Willie Loman? Good to see you, man. I'm in and out. I was in and out on those, Thomas. When Bear's not pissed off. That's coming from Beartown Sheriff. He's a bear himself, by the way.
1% on Q1 revenue outlook beats and buyback boosts reported in the print.
Fucking dude, look at Meta. Woo, the squeeze is on. Oh, yeah. Four minutes left. If you think we're going to gap up in the overnight or at least pin into the overnight, if you want your 1 dates for tomorrow, that'll become 0 dates. We need Apple not to fuck around. Look at Meta right now just ripping faces. Hey, take it easy, Thomas Price. I want to thank all of you for showing up today to the show. Be back here again tomorrow, 9:30 in the morning, baby. Close out Friday. If you're on 0 dates, make sure you're closing them. If you're going to look for some continuation tomorrow, we're just waiting on Apple. There's going to be some pain here tomorrow, at least to the opening bell. I'm going to try to sell that opening bell on the first thing tomorrow morning. Reach that Discord first time stream. Love the show. Hey, thanks, thanks, Ty Neacock. Hey, we're doing a roll, Ty Neacock, in the Discord. I'm going to be in there more frequently. I've been very busy right now, but coming up this upcoming week, we're going to get a kick-ass Discord going. Look forward to it, brother. It's going to be badass in there. Meta just keeps fucking cranking right now. Spoos. Come on up, Spoos. Spoos just going green into the close right now. Adrian, take it easy. Yeah, I got to get some sleep. I'll tell you what. I'm selling. I got some for tomorrow. So I got some 0 dates for tomorrow. So we'll close that fucking thing around the goddamn fucking opening bell. Will, I'm gonna reach out to you, brother, and I'll see all of you guys tomorrow 9:30 in the morning. I'll be here. I was a little bit late this morning. Coming on stream. I didn't mean to be late this morning coming on stream. I was running behind. But I'll try to be here I'll actually try to be here before 9:30 so that we can see what the market's doing at 9:15 or something. If any of you guys are picking up any 0 dates, I'm going to be here trading it anyways. So I will be here before 9. I'll try to get I'll not try. I will either how about this? I will either have the stream up before 9:30 or I will let you know what I'm doing on Twitter. If I'm selling the open, I will let you know. Congratulations, Loner. Congratulations. When we make this jump here over the weekend, I want to get you involved in the jump so you can walk you through it. Will, take it easy, brother. All right, I'll see you guys tomorrow. Appreciate y'all showing up today. Thank you for your patience as we make this jump. Yeah, if you're long overnight, you ain't sleeping. Sorry. If you're long the underlying of these big tech reports, you are not sleeping tonight. I guarantee it. You will fucking be up all night long. You're gonna get on fucking Wall Street bets. You're gonna shit post and be creepy and crawling all over FinTwit. You want to know who's really long? They'll be on FinTwit tonight or on Wall Street bets tonight. They ain't sleeping. They'll be going to fucking bed at 10 a.m. I promise. Congratulations if you are long in any way, shape, or form into tomorrow.